Morning, everyone. We'll be starting in just a minute. Well, again, good morning. Welcome, everyone, to TradeLog's inaugural Day Traders Technology Virtual Showcase. That's a mouthful. I wanted to name it Trading Done Right, but marketing people, right? Our intention is to have this show annually. My name is Timothy Terzian. I'm the president and CEO of TradeLog and Trader Tax Solutions, and I'll be your host for today's program. Before we get started, let's do a little bit of housekeeping. If you have questions, chat has been disabled, raising hands has been disabled, but you will be able to ask questions if you click on and see the Q&A section of your screen. If you're having technical issues, you'll be handled first come, first serve. We've had about 1,500 participants sign up. We're not there yet, but it's growing quickly. And so please be patient. We do have technical people there to help you. If you are having trouble viewing the program, you can also go to the YouTube channel. It's being live streamed there at youtube.com/TradeLog software. That's youtube.com/TradeLog software. Now, we encourage questions by all means, but we don't know how much time we're on a strict schedule here today, and we don't know how much time we're going to have left over. So if you write your questions in the Q&A section, we'll try to answer them right then and there. If the speaker has time to answer your questions after they're done with what they're here to talk about, they'll try answering some. And then any questions that haven't been answered, we're going to capture them and send them to the proper personnel. And believe me, we will get your questions answered so that you know what you're doing. Everyone's mic will be on mute. And so the show will be recorded. We know it's an all-day event, and sometimes the stock market, fortunately, it's a calm market so far today, but things change quickly, and we know that you may have to step away and you're going to want to hear the whole program. The objective of the program, basically with COVID and the quarantine, trading activity has exploded. We have thousands of new traders coming onto the scene every day. Casual traders have become active traders at an incredible rate. And even some once active traders have that were dormant have been revitalized. And traders are the lifeblood of our business. So we thought it would be helpful to provide a platform where our customers, our traders, at every level of experience could learn about the latest technology innovations that are critical to trading success, including computer hardware, broker platform, charting, scanning applications, the role of artificial intelligence. I'm excited to hear what's going to be said about that today. We've got self-driving cars. It's about time we have a really good artificial intelligence trading for us, right? And we can just sip tequila on the beach. Even tools and insights around accounting and taxes. We wanted to touch on thought leadership and technology along the whole cycle of trading, because as a new trader and even experienced trader, we might not think of everything that we need for trading. Some people just think we throw money at the market, and when it goes up, we sell. Ooh, that's great. That helps when you're in the longest bull run in history, but things change. And we want to keep our customers in a good shape for as long as possible. So we've reached out to some of the leading companies that provide trading and investing technologies and invited some of their top spokespersons to take part in this showcase. It's our objective that by the end of today's program, you'll not have only learned a lot, but more importantly, you'll feel confident and better equipped to take your trading performance to another level. The show sponsors and speakers are, first of all, from Digital Computers, we have Geoff Amthor. From TradeStation, we have Jesus Nava. From Benzinga, Ryan Faloona. Trade Ideas will bring us David Aferiat and Michael Nauss. Pierce Crosby from TradingView, Bob Green from Green Trader Tax, and finally from tastytrade, we have Kristi Ross and Tom Sosnoff. So I thought it might be appropriate to tell you a little bit about myself and TradeLog, how it came about. Some of you have heard the story. I have been trading since I was 14 years old. My first trade was made. I was the youngest NESD dealer in the country at 18 days and a couple hours. But I did not like selling mutual funds to people. I like buying and selling stock. That was cool. And so I've, over the years, learned more and more about trading. And during the dot-com bubble, I quit my job, became a full-time day trader. And my brother-in-law, who saw me do this, he was a computer programmer. He was so excited. He'd ask me every day, well, how'd you do today? And my answer was always the same. I think I did okay. You don't know how much you made today? No, I traded too much. I have no idea. So how can you work like that? I said, well, the only way I know if I'm making money is if I sell everything, because it's not a profit or a loss until you sell stuff, right? It's all on paper. And I would do that every so often. I would close everything, all my positions, just to know if I was making money or losing money, because sometimes it gets scary, when you're a day trader. And he kept pestering me, and I said, David, why don't you make me a program that helps me? You're a computer programmer. It wasn't more than a day or two later, he gave me a spreadsheet. I could put in my trades, and it worked great. Except I traded so much, I had too many trades. I didn't want to work past the market close. So I would try doing it during the trading day. And then, I missed that trade because of this stupid program. So I went back to him and I said, David, how about the broker has all that information. Go and capture that information and put it in the spreadsheet for me. He said, let me think about that. A couple of weeks later, came out with something, and it worked great. And TradeLog was born. Over in the early 2000s, the IRS started changing tax laws, and the previous owner joined up with one of our speakers tonight, Mr. Bob Green of Green Trader Tax, and they worked out ways to capture wash sales and exactly how the IRS wants you to report your taxes as regards to your trading activities. Because your broker does not always give you exactly what you're supposed to have. And that's kind of a bad problem. We, here at TradeLog, we've never had anyone, as far as I know, audited that has used TradeLog ahead of time. We have many that have come to us after they're being audited, and the IRS wants them to go back 5+ years and make sure that they're doing things right. But in one of our newest write-ups, it says it perfectly. It says, we maximize refunds while remaining IRS compliant. But it does more than that too. For myself, I use TradeLog every day. I look at my trades. You can take trades from all different accounts and put them into one account. And so when a trade goes against me, I was like, oh no, I might need to get out of this. What did I pay for that? Well, I'm not going to 3 different brokers' accounts. I pop up TradeLog, it's always running. I go to the open tab, I find CLVS. What did I pay for that? Oh, I'm in pretty good shape. I'm just going to flatten my thing. I get out of it and boom, it saves me money. It's fantastic. It manages your trade history. It also helps you with the IRS reporting. It helps you with wash sale reporting. I mean, there are traders that come to us that are not aware of wash sales, that have lost. Oh, we've had this happen. They've lost more than $1 million in trades, but the IRS doesn't acknowledge any of those trades, so they owe taxes at the end of the year, and they don't have the money to pay the taxes. That is how TradeLog can help you, and we suggest any trader that doesn't have it, look into it. It's important. Look into ways to make sure that you're IRS compliant. And for those that are just too bored with taxes, or it's trader taxes, they don't want to do with it, or they make more money than the rest of us traders, we have Trader Tax Solutions. That's for those who want the added level of support and confidence when preparing and filing your taxes yourself. It's a new turnkey service that takes some of the pressure off of traders and those that are not maybe computer savvy, and allows them to keep focus on the markets instead of their tax issues. So that's my little blurb. Again, we're really happy that all of you, we've got a couple hundred so far participants. It keeps growing. We're glad to have you here today. And for all you that are questioning, I am wearing pants. I'm just not going to stand up to prove it. No, but I feel like a bad comedian. I tell you, I know how a bad comedian feels now. No one laughs when you're on Zoom. But we try to keep it light here, and hopefully you'll learn a lot and enjoy the speakers. First up, I'm very proud to say that we have an award-winning entrepreneur who believes in empowering the do-it-yourself investor to engage more with their finances. She interviews innovative entrepreneurs in her show, Bootstrapping in America. She also walks through the ins and outs of taxes for traders in Kristi's Tax Burst. She's the co-founder of Dough back in 2014, which ultimately merged with tastytrade. Her name is Miss Kristi Ross, and we want to welcome her and thank her for stopping by today. Kristi, you have our attention.
Excellent. Well, thank you so much. Really appreciate it. Really want to say thank you to the whole TradeLog team for having tastytrade participate in their virtual Day Traders Technology Showcase. As Tim said, I am Kristi Ross, co-CEO and president of tastytrade. My co-CEO, Tom Sosnoff, I believe is also on today at 11. Now, the difference between the two of us, other than he's better looking than I am, he gets to watch the markets all day. And that is actually a big part of his day. And for as much as I would love to do that, somebody's got to run the company. So I want to share how I fit trading into my day with my busy schedule. And I'm going to take you all the way from trade entry to taxes. I'm going to share my screen. Let's see. I have that. Maybe you guys at TradeLog can allow me to share my screen so that I can walk through my presentation for you. But in the meantime, I'll just keep going here. Oh, there we go. Let's see if I can throw this up on the screen here. All right. Okay, and hopefully everybody can see this. All right. So before I jump in, a big thank you to all of you as well in advance for hanging out with me for the next 45 minutes. I do have a lot to cover, so I'm going to go super fast. I really like talking about this topic of fitting trading into your day, because most people have day jobs and don't believe that they have time to trade, but they do if they follow sort of a logical, mechanical approach. A lot of us also have children and families and friends that occupy the rest of our time. So it's about finding, some sort of balance with all the things that we want to do. Now, these are two of my favorite cartoons, so I can't help myself. Just wanted to share those with you. I think they're funny. All right. Now, I've been in and around the trading industry for almost 3 decades, but not necessarily labeled as a trader. So I've been in CFO positions, CEO roles for a big part of my career. But my time is often like caught up in meetings or on phone calls or analyzing financial statements or deals or whatever it may be. So I wasn't and still am not able to watch the markets all day, but I found the best of both worlds. So I get to do both. In the end, I simply wanted like some control over my finances and investing. So I have 3 wonderful active girls, now all essentially in their teens or young adults. My point in sharing that is over the years, raising kids and attending to my family was my night job. So it wasn't even like my evenings were free to trade futures either. I also sit on a number of boards outside of Tasty Trade and very involved in the Chicago tech and entrepreneurial community and do my own angel investing. So that's my long-winded answer to why I don't have a lot of time to trade, but anything worth doing is worth making time for, right? So I still trade between 500 and 1,000 times per year, and that's fitting in about 2 to 4 trades per day. So I've been trading for over 20 years, and I've found a way to fit it into my packed schedule, and it works great for me. So I can have it all and do it all. But the key for me was trading options. And that's what helps make it more manageable. And so I don't know if you guys, are you still seeing my screen here? Hopefully. Okay. Let's see. Just want to make sure. All right. But options is what helped make it more manageable for me. And there we go. All right. And so I am going to talk about options today. So, all right. Let's see. I am now going to jump into talking about what strategies I trade. And I think that that's going to be helpful first here. Hold on a second. Let me make sure technical difficulties here. Is everybody still seeing my screen? My deck?
Yep, we see it.
You see it? Okay, thank you. Sorry. I don't know why it wasn't showing up. So, okay, so I am going to make the assumption about the audience on this call today, on the Zoom call. I'm going to assume that you guys have at least traded stock or at least have been introduced to options in some way. So I'm going to jump right into the strategies. And these are my 3 go-to strategies here: my strangle, vertical, and iron condor. Okay, and I want to walk through why I use them, how I trade them, and in the end, what the tax effects are. So I want to take you from trade entry to management of those positions to taxes, and it's sort of like an A to Z through on these 3 strategies for busy people, depending upon your risk. And I'll throw in one extra too if I have time. So, okay, so I'm going to cover my favorite strategy first, and I'm probably going to spend a lot of time on this one, and then I'll add in some of these other strategies, which will just probably be a little bit more commentary around those. So one of the things that I'll say that a strangle poses more risk than other strategies, which we'll talk about, and it's because it's undefined. But I define myself as a risk taker, and I raised my hand at age 25 to become a CFO, got the job. I embraced risk in business, in trading, in life, because with risk comes opportunity. So it makes sense that a strangle is sort of my go-to strategy and one of the higher risk reward trades. So as you may know, a strangle is simultaneously selling a put lower than the current stock price and selling a call higher than the current stock price. So I set this trade up actually yesterday. So Twitter, and at the time, Twitter was trading around $73. So while I'm a risk taker, I'm also a realist. I can't watch the markets all day. So I have parameters that I follow on trade entry almost religiously, like within a range. So I tend to do wider strangles at 1 standard deviation. So I don't know if you guys can see my my cursor, but in those dotted lines, the red dot in the middle is where the stock was trading at the time setting this up. And then to the right and to the left, that first dotted line going down vertically is the standard deviation. So, and while this one, I started out at the standard deviation and adjusted my trade, I'm skewed slightly to the upside. And you'll see this picture again, but right now, I just want to share my checklist with you on how I set the trade up and sort of why, like the reasons why behind it. So, okay, a few of these are based on tastytrade's research, and it's really giving you optimal, trade entry parameters. So, and of course, I have to mention that the Tastyworks platform really makes it super simple for me to do this like in a few minutes a day. But to be fair, we built the Tastyworks platform Tastyworks is ultimately the technological expression of everything we talk about on the tastytrade network. So the mechanics are easy to follow on Tastyworks. Well, I don't have the live platform up here today. I do have some screenshots like I just showed you on the previous slide to at least give you a sense of quick steps to go through. So, and there are 10 steps here, 5 main ones, and then the other are in gray, which I sort of automatically do, but I thought it was worth sort of spelling them out. So we'll be coming back to this slide, but the numbers are the target numbers I shoot for in the range, okay? So implied volatility rank, it's always better if it is above 50%, but in a low volatility environment, which could be, you could go for something that's around 30. I'm gonna show you how to find that though on the platform too. But that is based on tastytrade research so that you actually collect the most amount of premium you can. Liquidity. So number 2, liquidity. Liquidity should be high. Liquidity is a foundational pillar of what we teach at tastytrade. We are product agnostic at tastytrade, but one of our pillars is that we only trade liquid underlyings. Number 3, next, we need to make an assumption. Sometimes creating your own assumption can be the hardest part. Absolutely. Because no one really knows what a stock is going to do. No one knows. There are, way too many factors that go into a stock price, too many outside factors that no one controls. So I'm going to share this quick story with you. And I think it's I think it's worth sharing. So our prior company was a public company in 2008, and most of you probably know what happened in 2008 with the financial crisis. Well, we were literally printing cash at Thinkorswim. So however, the financial services industry imploded, and our public company CEO at the time did not really tell a compelling story. All of these played a role in our stock price dropped. So if you only looked at fundamentals, if you only looked at our revenue and earnings and EBITDA, they were amazing. And we had an incredible and compelling growth story as well. But the company stock price, the public company stock price did not reflect that. So even today, you look at some companies that are public and they're bleeding cash, and yet their stock price puts them at multi-billion-dollar valuations. So the stock price does not always make sense. Okay, I'm going to go back to my checklist. Picking the strikes and days until expiration is next. So generally looking around, we look to enter a trade with about 45 days to expiration remaining. And I'm going to put this range out there, the 30 to 60 days is sort of ideal, but I still do weeklies. I still may go outside of that, but most of the time I'm staying in that range. You also want to check to see if there are earnings, and because that should also affect sort of how many days you decide you want to go out. Also, picking the right strikes for me is creating a probability of profit. Again, we'll show you this on the platform with some of the screenshots. For me, it's between 80 and 85%. And that's important for me because, again, that gives me a wider range to be right. So my target premium I want to collect is $1, and my notional, which I'm going to talk about notional a little bit later, is maybe between $10,000 and $20,000. So again, I'll talk through some of this stuff more in a little bit. When I'm entering my trade, I make sure that I'm entering, right around the mid price because I really want to get filled. And at any given time, I have between 10 and 20 positions in my portfolio. Okay, so next up, I'm going to start to go through the steps and set up this trade and walk through sort of those 10 steps that I go through. So I'm going to cover step 1 and 2 here. So I look at implied volatility rank first. So one of the things I'll mention is, so we of course have a mobile platform with Tastyworks. We have a web-based platform for Tastyworks, and we also have a downloadable. And that downloadable is, there are a lot of similarities, but there's still little differences between web and the software. So the first place I go on the platforms is, if I'm on web-based, I go to the grid page. And if I'm on the software, the downloadable software, I go to the watch list. They're one and the same, basically. But I sort by implied volatility rank. And that is implied volatility measured against itself over the past year. So it is, the higher the IVR, the higher the premium, basically. And so I want to be above 50. If I can, right? Depending upon the volatility environment. So, and again, a little bit lower is acceptable, around 30 in a low volatility environment. All right, on the platform, it is super simple to find. Like I said, it is literally this column. I can sort right at the top here in terms of implied volatility rank. And so that is, as you can see here with Twitter, so the trade that I set up for you is at 41. And then the next thing I do is I look for liquidity. So liquidity is one of the things we talk about at TastyTrade all the time. And it is we only trade in liquid underlyings so that we can get in and out, very quickly at a fair price. So it's easy to see whether something is liquid or not on the platform. If you see here, there's 4 orange stars. And I shoot for between 3 and 4 stars to make sure that that underlying is liquid. Okay, so we covered the first 2, IVR and liquidity. Now I want to talk about assumption a little bit. Okay, so assumption. Okay, this is sometimes the hardest part. So like any trade that you enter, you need to have some sort of opinion on what you think that stock is going to do, go up, down, or simply move within a range. So what I normally do is put up a chart to better understand what range the stock tends to trade in. That's, one of the things why I love trading options, because I can be wrong on direction and still make money. And so for a strangle, as long as the stock stays in the range I choose for a period of time before I decide to exit the position, it can be a winner. So here I see that within the last few months or so, this stock has climbed from about 55. I know it's really hard for you to see the numbers here, but from about 55 up to about 75 here. So for me, that's a quick first thought on range. I don't necessarily pick my strikes from the chart, but I start with my first thought on where my comfort strikes might be, okay? So this type of chart for me may be something where I look at selling a call vertical instead of so if I see a chart like going straight up and I think, hey, this is going to come down, it's like gravity, it's going to come down at some point, I may do a call vertical. I may sell a call vertical, which I'll talk about in a little bit. But here, Twitter, I think, is going to stay sort of in a range. That's my assumption. So right now, if I go wide enough, I think, I personally think I will be okay. Now I'm going to move on to sort of my next steps in this. So I went through 1, 2, and 3. Now I want to cover, the next thing I want to go is I show you how I'm actually setting this up. So in the top left-hand corner, there's something that says strategies there, and I can do this really quickly. So I can click on strategies. There'll be a drop-down menu of the different strategies that I can immediately set up. I can actually set it up within my own parameters. So again, I like strangles that are one standard deviation and between 30 and 60 days. So I can set that up within the platform to do that. Which it saves me time. And then all I have to do is adjust the legs of the trade. Now, if I click on the call or put up here while I have a trade set up, I can also see all of the different prices and all of the different expirations. I don't actually have a screenshot of that for you, but okay, so then next is expiration. And I need to decide which expiration I want to choose. So I can go up and down in the different expirations here as well. And in this case, I chose 51 days. And I guess today would be 50 because I set this up yesterday. And so it is a monthly, but from time to time, I will choose a weekly. Sometimes I will advance maybe just to the next monthly. So the next monthly is like 22 days right now. That's still okay too. But again, my ideal, and I found an ideal trade for me in this scenarios, but I do weeklies. I do want to say that. Okay, so I check for earnings. Are there earnings coming? Now, one way you can see it when you're on the trade page is up here where the symbol is, where it says Twitter in the box in the top left-hand corner. There'll be a little flag. Actually, you know what? I threw a slide in here that shows this as well. So this is actually an old trade I set up. It was a Starbucks trade. But if you can see this little blue, oh my gosh, you guys probably can't even see this on your screen. The little blue flag, it shows that there is earnings. So it's another place to remind me that there is earnings on this trade. Okay, back to the Twitter trade. Strike selection. So one of the things that when I'm selecting my strikes of what I want to ultimately trade here, I look at the probability of profit right here. It's like 83% down at the bottom there. I usually try to stay within this 80 to 85% range. If you can see in the middle here, there's the red dot in the middle, which is where the stock is trading today. And there's this, what I'll call an orange bar, which is the expected move for that expiration. That is, that I'm well outside the range of the expected move. Doesn't mean it couldn't go past one of my strikes, but it's definitely within the range. Okay. My next is my target premium to collect is $1. In this case, I'm actually collecting $2. You can see that next to the probability of profit. So I'm collecting $2 on this particular trade, but I would even be okay collecting $1. For some people, that is not enough money, but for me, it is. And so again, it's because I'm going further out, and so I'm trading risk for lesser premium, right? So it's a little less risky going further out, which means I collect a little less premium. Okay. I think, so just walking through some of those pieces. So I'm going to go back to this Starbucks strangle I set up. So it kind of looks like the same slide as the prior one, but this is an old one. The reason I love this one is just because when I set this up at the time, when I had talked about this before, it covers all of every single one of my items on the checklist. It's at 80, it's exactly $1, it's at the standard deviation line. So, but that is generally what my strangles look like. So, okay, next up, let's see, next up is, what are we doing on the next one? Step 8, notional. Okay, anybody who is truly an active trader and can watch the markets all day may not care about notional, the notional value of a trade. But I still have to use it as a gut check. And part of the reason that I have to use it as a gut check is because, again, I can't watch the markets. It is possible I could get assigned on one of these legs. So again, when you look at Twitter trading at $73, I look to see if I'm going to get assigned on either side, what that amount will be. And so if I got assigned on the put side at the 55 strike, that would end up being $5,500. And if I got assigned on the call side, that is, that's the strike is 100. So that means it would be $10,000, right? Of my capital tied up in actual stock, either being long or short. And so, don't get me wrong, I don't necessarily want to be assigned, but when you trade options, when I trade options, I'm saying, okay, if I'm making this trade, I need to be comfortable that if I did get assigned, I'm okay with it, with the capital that I have today. So then next up is getting filled, because I can set this trade up, but if I don't get filled, it doesn't do anything for me. So if I'm going to take the time to enter the trade, I want to make sure I get filled. Putting it in at the midpoint, and as I move around this slide, it keeps coming up that I'm going to, at the bottom, that I'm going to change the slide. So if you look below the probability of profit and the credit, you'll see a little bar at the bottom of the screen. That's going to show me right in the middle of that bar is where I tend to set up to get filled. And if I don't get filled in a couple seconds, I generally, I may move it down a couple pennies to just, so I might collect a little bit less, but knowing that I get filled so I can jump over to another meeting or jump into another call or something like that, then I just know that I'm in that position. I can let it sit and get, let it work in the market, but usually I just like to know that I'm filled and move on. Okay. Let's see. So step 10, then this is one of those that, again, I'm just mentioning this more for being as busy as I am. Like if I had 100 positions on, that would be a little bit crazy for me to try to manage that. So, really, if I'm looking at 10 to 20 positions at any given time, that's a range that I'm comfortable with. And so let's see that, it's manageable because I can literally jump in and jump out, check the position, see if I want to adjust it, and then move on with my day. Because I actually check the market, like I'm going to say twice a day, really in the morning and then closer to the close. Because my positions are wide enough, it tends not to be a problem. There are movers, there are definitely movers, but okay, so now, this is one thing I wanted to share with you is this is a slide that we have gone through this is our research team has put this out. And this actually I thought was really worth sharing with you in context of what of what I do. Because I check in the morning, and if you can see in the morning between, here you go, like the 8-9 o'clock hour Central, and then the close here between 2 and 3 o'clock Central. These are the spikes in the day. These are the highest points in the day when there is the most volume happening in the markets. And this is just SPY, but SPY is obviously a good indicator of that. But these are the most active trading times. So the morning and closer to the close. So what our research finds too is these, I mean, these are the times, not only is everybody sort of in it, there tends to be the most volatility. A market with higher volume, of course, will always have tighter bid-ask spreads, as well as greater liquidity. So this helps us get in and out of trades with the smallest amount of slippage. Okay, let's see. Next up, trade management. So trade management. This is something where I think it's worth talking about. I'm not going to spend a ton of time on this slide. I definitely made notes for myself so that I could drive through this really fast because I have a lot of content, and I'm only on slide 18. So I know I only have like 20 more minutes left. Let's talk about management of my strangles. If I get to 50% of max profit, I will often consider completely like taking it off and putting a win on the board. If the trade is not going as well, my number one rule is duration, duration, duration. So giving myself enough time to be right. I actually make a conscious decision sometimes to just wait it out to see if it will bounce back within my parameters. And I may check my positions more often than just those 2 times per day to see if I want to adjust or roll. So if I do roll, I may roll to sort of recenter the trade, but rolling out to the next month, like under the premise of duration again, my goal here is to always roll for a credit. So I will not roll if I have to actually pay for that roll because I would be locking in a loss. But usually checking at 21 days, that's really sort of what the tastytrade research says is optimal. Okay, so next up, my other alternative is to just take the loss sooner rather than later and move on to the next trade. But I'll tell you right now, that takes discipline, and you have to set your own parameters on that. So if I am assigned on the long or short side, I will often keep the position and trade options around it to reduce my cost basis. So not everyone can do that. It will depend sort of on the amount of capital you have. But so that's sort of how I'm managing my strangles. If you look at the next strategy, so I want to talk about a vertical. I use this when I, in fact, do have a directional bias. When I do feel that a stock is going to go up, I will sell a put and buy a further out of the money put. This also helps with reducing buying power on the trade. And if I think a stock will go down, I will sell a call higher and then the current stock price and buy a call even further away. But let's check the mechanics as well on my checklist. Just because it sort of fits, it's pretty much the same thing. It's the same sort of checklist. The only difference here is I don't want to take as much risk. So it is defined risk and directional. Okay. So again, it's, my IVR is high and liquidity is high. And here, if you are on, and IVR is not as high, this is BABA. So again, I set this one up, Alibaba. I set this up yesterday too. And I wanted to find a trade that I felt a vertical was appropriate for me. So this is 24, so it's close to that 30 mark. Not ideal. I would prefer it be higher. But up here at the very top of the screen, you see the 4 the 4 stars. Again, it's very liquid, and that again hits on the number 2 point, making my assumption. So if I think it's going to go down, but I'm protected if it does go up by buying the outside call. And then my strike, my probability of profit is at 85. So that fits my 80 to 85%. And my strike in my days is 51. So that was yesterday. So it's at 50, which is around that 45-day mark between 30 and 60. And then checking the days on earnings. So there's no earnings coming up, that you'd see the little tag here. And then my target is $1. This just happens to be $1, which is close to the mid price. And then the notional. So this is something that is a little bit, higher. So this is, again, if I got assigned on, let's see, the 290, if I got assigned on the 290 calls, that's something where you're talking about $29,000, but I'm protected here where I have only the exposure on the loss, basically between 290 and 300 is my other strike. So I might actually use a stock or an underlying that is a little bit higher priced if I am going to do defined risk. I'm a little bit more comfortable with that. So management of my vertical. Again, my profit rationale is still to take, anytime it sort of hits that 50% max profit mark, I may take that off. I might even take it off for a loss, but most of the time, if I don't need to, if my assumption changes, I should say, I might take it off for a loss. But generally, I am going to potentially just let this one go to expiration because again, it is defined risk. Okay, next up, my third strategy I want to talk about is an iron condor. And so this, I don't do it as often, but I do feel more comfortable doing an iron condor, particularly when trading futures. So futures move and they move fast, and I feel better having defined risk trades on. An iron condor is basically like a strangle, but then I'm buying the wings to protect and define the trade. Because you're buying the wings, you're collecting less premium on the trade, but there is at least, again, that defined risk. It does produce a lower probability of profit on the trade as well. As you can see here, it's 72. So that's below my ideal 80 to 85%. But again, I'm defining my risk. So let's see. So and again, my iron condors for the most part on management of it is I'm generally going to manage it more like a vertical. In the same sense as, bottom line is if it's going to stay in this range, I don't necessarily need to jump through hoops to take it off. And again, I'm protected if it does go wild on one side or the other. Okay. This is the one I just want to throw in there, and I don't have a lot of time to talk about it because I still want to make sure I get to taxes. But this is a jade lizard. And I just wanted to show you this because this is another one of sort of, I'll call it probably one of my favorite strategies if I'm putting on a strangle. As you can see, the selling a put, selling a call. If I feel like I'm a little uncomfortable on one side or the other, that I think I could be wrong that it's going to stay in that range, and then what I'll basically do is buy the call side or buy the put side, to just add a little bit of protection that if the stock does run up in this scenario, I am again protected or limiting my loss. Okay, let's see. I think what I'm going to do is jump into taxes, just so that we make sure we have enough time here. So I'd like to say this is where it gets really exciting, but I know better. It's let's talk taxes on these strategies. Basically, the last leg of the stool is paying the taxes, right? So I've talked about really, I'm going to call it my top two go-to strategies are strangles and verticals in the management of them. I threw in the third to make a point about futures or higher price stocks for my inability, again, to watch the markets all day. Having a defined risk helps me. But the strategies you trade, now the strategy doesn't really matter to the IRS. They use a certain logic on how they define a trade. And it's easy to follow. Then the number of trades as traders, when we are simply talking about trades, we refer to single leg trades in the same manner that we refer to a multi-leg trade. And we talk about these multi-leg trades or strategies really like they're one and the same. But in the eyes of the IRS, for example, the strangle is two trades in the eyes of the IRS, and they look at legs. And that's basically how they're reporting this to you. A vertical, also two trades in the eyes of the IRS. And an iron condor is 4 trades. And a jade lizard, the last one I showed you, is 3 trades. So the visual aspect of the curve mode on Tastyworks really, it's super easy to follow that. So when I close that strangle, or even if it expires worthless, both of those situations, the result on my tax return or on my 1099 I get would be 2 line items, one for each leg. Now, I think one of the questions that I get a lot is about rolling. And if I roll that trade, the new strikes I'm entering will count as new trades. So new line items on my tax report, on my 1099. But the overall trade management, again, as traders, we look at them as sort of the same trade, the same strategy that you are, moving forward in duration. And when you ultimately roll that trade, you'd be looking at the trade or the order chain. And I know I don't have time to talk about this today, but it's worth mentioning from a technology standpoint. One of the beautiful things we just launched recently is order chains, which means if I have a strangle and I'm rolling it, I can follow it all the way through and see, did I actually, make money or lose money in the long run of all the different rolls that I did on that particular trade. Again, for tax purposes, every time you roll, you've essentially closed out your old one and you're opening new ones. I'm not going to get into wash sales right now. I could probably talk on that for like a whole other hour. But I'm walking through what some of those, what those look like, assuming you're not opening, substantially the same strikes. And there is a difference of opinion on wash sales in the industry. But all right, so let's jump over to products. Let's talk about products. And I think I got about 8 minutes left here. So now talking about products, this is actually pretty important. We have equity options, which is, think about it just like stocks, meaning if you are trading in and out of them on a monthly basis or however you're handling it, it's basically going to be short term, which it is ordinary rates. If it is index options, and I'm not sure how familiar you guys are with equity options versus index options, but index options are considered 1256 property under the IRS rules, which means 60% long-term, 40% short-term, just like futures. So, all right, what you trade matters from a tax perspective. And while I don't expect to have you all walking out of here being tax experts, but rather that you walk out of here just being cognizant of the type of tax treatment, like when you're making a choice at trade entry, how this can be beneficial for you. While we are product indifferent at tastytrade, this is, in general, I don't think it is important. I mean, I do think it is important to understand sort of these tax differences, because taxes are real dollars at the end of the day to you, and they can add up. So 1256, let's talk about futures. Again, this is the 60% long-term capital gain treatment as if you held it longer than a year, and 40% short-term, even though your trades were all short-term in nature. So that's really beneficial. But 1256, you pay tax on them at the end of the year, whether you close out of the position or not. And the nice thing with 1256 is there's no wash sales that apply. So it's sort of like an added bonus. You don't have to worry about that. And the other bonus for 1256 property is there's no detailed reporting required to the IRS either. It's all reported in sort of, let's call it one lump sum. All right. Now let's take a moment to explain sort of how and where the trades are reported. Because I think that this can start to get confusing, especially if somebody is new to trading and they're just not sure which tax forms they should be focusing on. So the first one, equity options, that comes through in a consolidated 1099. And this is, I'm going to show you a picture of it too, but I'll just give a caveat that every broker sort of has a different looking 1099. You might have different boxes in different places, but the same kind of information is there with the similar titles. And then index options, and these are the ones that remember are getting 1256 treatment, but they're coming through on your consolidated 1099 as one line item. So if you're trading index options like DJX or NDX, RUT, SPX, VIX, they get treated just like futures and are often referred to as 1256. 1256. So futures are a summary report. So that is something where you're going to get a separate 1099 for them. And again, I'm going to show you pictures of these. And then let me jump back up to here to ETPs, which are basically electronically traded partnerships and or exchange traded partnerships, I should say. And these, why are these different? I'll tell you, because they issue a K1 as if you are a partner in this for the time period that you held that. Either you have to be long or short the underlying. You're not going to get that if you only have an option in it. So you'll get a K1 at the end of the year, and you get your normal 1099 for trading activity, just like a stock. And then you'll also get that K1. Okay, and probably a good example, I like to use USO because I think there are a lot of people that trade USO. Okay, I see I have literally 3 minutes left, so I'm going to plow through these really fast. This is the example of what your consolidated 1099 will look like. So right here where there's this box that's saying the 8949, that's where you're going to sort of see a summary of your equity options or your stock. And then you'll see all the detail behind that on the pages following. Then on that same form, in another section, you're going to see where your index options are reported. Now, the thing I'm going to point out, remember, this is 1250. This is treated like 1256 property, like futures. And they even title it regulated futures contracts, when in reality, these are index, like your indexes or your index options, which are the broad-based index funds. So it can be confusing for somebody who doesn't know that. They're looking at that saying, well, I didn't trade futures contracts. Why do I have that under there? Well, that's where they're putting the index options. Okay, then on a completely separate 1099, this is something similar. It looks similar. Futures, you're going to get one report. It's essentially a one pager. Let's say you traded a ton of futures. You don't have to report those on a detailed line by line basis. You get to report it in aggregate. And then we have, this is where we get into like the ETPs. And so this is a good example. On the left here, you'll see it's the consolidated 1099, and then on the right is what the K1 looks like that you'll get, in which you'll get allocated the income or expense for that particular partnership. Don't throw these away. Whatever you do report from the K1, though, if you've closed out by the end of the year, you will be able to adjust your cost basis on your, basically on your Schedule D when it comes down to it, on your 8949 for that. Okay, so let's see. I think I am right on time. I went super fast. Like I said, I took notes for myself so I would go through all of this really fast and not go off on any tangents. But here, I took you all the way from trade entry to taxes, and taxes where everyone tends to tune out. So I'm going to end here. I know I took the whole hour, so I am happy to share with you, or the whole 45 minutes. So I'm happy to share with you a couple of resources, ways to follow up if you have questions. Certainly you can always follow me on Twitter. My email, Kristi, Kristi @tastytrade.com. We have a taxes at TastyTrade. We also, check out Tasty Works, our brokerage, and we also have an amazing help center there, especially at tax time. And certainly TradeLog is one of the platforms that we offer as well, that you can import your positions into. So, all right. Well, I think that wraps it up. I took every last second that I possibly could, Tim. I hope that's okay.
It's okay, Kristi. We actually, we don't really care much about Geoff, so we're just going to ask you no, I'm kidding. We're going to ask you a couple questions here that we got. Maybe you can answer them. It says, in lieu of checking, do you ever set up alerts for your position because you're not available all the time?
That's a good question. I actually don't, but I could. And so I don't necessarily do that, because when on trade entry, if something's going to move, I will, by the time I get in there are times where I miss opportunities throughout the days, for sure. There's no question about it. But again, if I'm sort of in this range, I need to be okay with potentially missing some of those opportunities.
Yeah. Okay. So that's great. One other question. Curious if you keep rolling and collecting credits, what does she consider the win? What does she do with the bottom and top sides of the strangle to get the net premium?
So what I will do is I'm going to go further out, right, to an expiration further out. I may adjust sort of that, let's call it the width between, right? I may, the side that's not tested, maybe I'll move it a little bit closer than I would on the call side, just depending upon what's happening. But it's usually duration. It's usually going out to a further out in duration, and then different strikes, just moving the strikes.
Okay. Very good. Thank you so much. I want to tell you, your cartoons, I had to wipe my screen off because I kind of lost some of my food onto them. They were good. I like those. And I will, I'm looking forward to seeing Mr. Tom. If he's better looking than you, that'll be a really good treat. So anyways, thank you so much for that. And have a great day. We appreciate your support, and we love I love using your system. So thank you.
That's awesome. Well, thanks so much for having me. Really appreciate it.
All right.
Take care.
Take care. All right. We're getting a few more questions. Some of them repeat answers. We understand, the market is pretty muted today, unless you're in GameStop. That's only been a 100 point swing. But if you need to go in and out because of lunch or checking a trade, we understand that. You can join right back in using the same link. If we go, I think it's over 1,000 people, you might have to go to YouTube and where we're streaming live, youtube.com/TradeLog software. youtube.com/software. And for those others that have come in late, we understand we're going to be recording this. So don't worry. If you put your email in, we will send you a link, because this is a lot of information. This is we just got one so far. We've got this going on all day, and we know that not everyone has that good of attention span. I know I don't. But anyways, now we have Geoff Amthor. So glad to have him from Digital Tigers. He's the founder and CEO of Digital Tigers, leading producer of professional multi-monitor workstations and displays since 2002. So we're going to let him have our full attention. Geoff?
Great, thank you. Appreciate that, Tim. I'm going to message out to everyone my speaker notes for today, which are, you should see in the chat link. You can pull up that. It's a PDF, and it's going to have all the detail that I'm hoping to get to today. And I think it's a good thing for people to hang on to as a reference when you're looking for a trading computer in the future, or even trading displays. Lots of good detail in there, hopefully. And so I'm not going to present those visually today, but they're a good thing for you to follow along if you want to pull up that PDF. What I will pull up now is a little PowerPoint, which is the very, very high level summary of what I'm doing. And let me share that. Okay, you should be seeing that now. Okay. So as Tim said, my name is Geoff Amthor, CEO of Digital Tigers, founder of Digital Tigers, and wanted to just first start and spend a couple minutes talking about who we are as a company, where we came from. Founded in 2002. Originally, we were focused on the video editing market, professional video editing market. We wanted to help video editors edit in the field with laptop computers, multiple monitors, and so on. And when we went to market with that, very interestingly, traders got a hold of us and they said, hey, we'd love to have that stuff too. Can you make laptops, or, our laptops for trading, support multiple monitors? And that may be a familiar concept now, but back in 2002, that was a very novel thing. So we were selling these little boxes that you could attach to a laptop that would support 4 monitors. And traders became very quickly our biggest market. So as we continued on, we got more feedback from traders, and they said, could we sell the multi-monitor arrays, the 4 screens and 8 screens and all that? And I thought, well, that's not really an engineering challenge, but sure, we can do that. And so we came to market with a bunch of displays, anything between 2 and 8 displays. And little do we know, we tapped into a very large market, because within 2 weeks of actually debuting those in 2004, we heard from the federal government, the National Reconnaissance Office, which is the spy satellite agency, very secret stuff in those days. And they wanted to buy our multi-monitor computers so they could monitor their surveillance all over the world. So that, really got us on the map in a big way as well. And we continued on, but that, even though we had government business and military business, the traders were our most reliable business. They really loved our displays, loved our multi-monitor boxes for laptops. And then they came to us and said, can we go further? Can you do the desktop PCs? And I thought, I'm not sure I want to get into that market. I mean, it's pretty well dominated by, Dell and HP in the US. And that didn't seem like a market that we would want to get into because we don't have that scale. And they convinced us that their requirements were really different, and that Dell and HP and all the people like them were not actually satisfying their requirements. So we sat down, listened to them, and we learned the kinds of things that were really important. Obviously, multi-monitor support to begin with, but high reliability. And that became a very big issue with us, because traders really convinced us that they couldn't have 5 minutes of downtime. So what was our strategy going to be to make sure that not only our systems didn't fail, but in the event that they did fail, how could they recover really quickly and be back up and running? And that became an engineering challenge for us. So we set off to do that. And we came up with the idea of a bootable backup drive. So we had, hard drives are fairly unreliable, but they could crash. And, so we came up with the idea that you could boot from a backup drive and come back up and running. And that was, kind of a nice hit for traders. And so we started selling those systems, and then soon enough we had knocking on our door. We had Bill Gates come to us, and he wanted to buy our systems for himself, for his fellow Microsoft executives and personal friends as Christmas gifts. So that kind of gave us an entree to the corporate world as well. So traders have led us sort of step by step through this and have been, since that time, our most reliable market. Very easily, the majority of our sales are still to traders then and now. And they seem to be ahead of the curve. You guys, guys and gals, are ahead of corporate America, believe it or not, in your technology demands and your reliability demands, your performance demands, and they have led us forward as we've gone ahead. But they also have different requirements than corporate buyers. They actually need higher reliability and more support from us than corporate buyers. We could sell 50 PCs to Microsoft and never hear from them again because they've got their own internal IT staff. They're really fully prepared to support their systems, and they don't need our help. Traders are working from home office, so they don't have an IT staff and they don't have spare parts around. They don't have the kind of help that corporate America just depends on a daily basis. So they look to us for much more support than our corporate customers or military customers. And then another thing that they showed us was obviously working from home offices. They were well ahead of really all of America in working from their home with a real office. And that was an interesting support challenge as well, how to get them the proper level of support in their home offices. Now today with COVID, it seems like everybody is working from a home office. That's where I am today. But traders were there first, and they were there, really in a leadership position. And I have to tell you, many years ago, back in 1986, I used to work for IBM. And at that time, I was a writer for them. I was writing about technology for IBM. And I asked the management there, and I said, I would like to do this from home because I can concentrate a lot better on what I'm doing from home than in this busy office. And they turned me down, and they said, that's only for IBM fellows and, really advanced people who've been here for 20 years. And I said, fine. So eventually I did leave IBM, but I certainly understand the appeal of working from home offices. And as I've gotten to know traders through supporting them as well as selling to them, the really unique demands that traders have from a support and reliability standpoint. And that's what I want to emphasize a lot today. So moving on here. Keys to trading performance. There's basically a foundation I want to talk about. And for that, there are 3 planks to that foundation. First is support, and I've already mentioned that. And by the way, the preamble to this is supposed to be, if you fail to plan, you are planning to fail. That's a Benjamin Franklin quote. And that quote basically means, as for computers and for trading computers, you need to think through the bad things that may happen down the road. And so that means, you've got a great trading computer today, but what happens if you have a problem with it, a hardware fault? What's going to happen there? Or how can you avoid those hardware faults? What's the highest probability of avoiding those faults through a highly reliable computer? But if you do have problems, who's going to support you, and how are they going to support you? In our experience, and that's about 18 years now, we have far more requests from customers for support than for service. Our systems are reliable, rarely fail, but we have calls every day from customers looking for support. And aside from the initial setup, which is a typical support call, the number one call we get is, hey, my computer was great and now it's slowing down. I can't figure out what's changed. And that is a difficult problem to solve. So when you're thinking about choosing a computer, a trading computer, you're not just choosing a computer, you're choosing the company that's behind that. And I'm not so prideful to say that we're the only company out there that can support these computers well, but you owe it to yourself when you're choosing a trading computer to find those companies that are really exceptional at support. And there's some specific things you should be looking for. Can they remote into your system and remotely control their system? That's a really important part of support, because how are we supposed to know why your computer is slow while it's operating remotely? The only way we're going to be able to tell is log into your system, see what you're seeing, remotely control, turn off certain things, and isolate the problem. That's a very, very important thing in support, and something you're just not going to get from these great large companies like Dell and HP and so on. These are fantastic large companies, but they are not prepared to figure out why your computer that was once fast is now slower than it was. And by the way, the answer to that question is usually one of two things. You know, sometimes there's a Windows update or something that's changed automatically to the computer, unbeknownst to you, that has changed things, that has screwed things up. Or more commonly, it's something that you've done as a trader, not consciously to slow it down, but you've managed to slow it down nonetheless. So these are things that you might have installed. These are indicators you might have added to your trading platform. Certain things can slow down the computer and need to be isolated and solved. So the second piece of this is reliability. When you're looking at a computer, obviously you don't want it to fail, and most computers today, I would say, are not likely to fail. But there are shades of gray within that, and they start for the most traumatic failures with a power supply. You should be looking at the exact model of power supply that's in your desktop computer if that's what you're buying. And that may seem ultra geeky, but it's the only way to know, is this company selling you this computer actually putting high quality into their components all the way down to the power supply? Because if power supply dies, your computer's dead. That is a very, very bad position to be in. And we, you know, Digital Tigers, we put in the very best power supplies we can find, made by Seasonic with 10-year parts warranties, because we're committed to that part never failing in customer hands. We know how traumatic that can be. And if they ever do fail, they're modular designs that can be swapped out in a matter of 2 or 3 minutes, you know, if you have the spare on hand, and that's the key. So power supply, network is another aspect of reliability. So you should have 2 network connections, and one's usually in your pocket. It's your iPhone, it's your cordless phone, and that is your backup to your landline. And you make your phone a hotspot and can connect to the internet that way. Now, with laptops, that's no big deal. But with desktops, you often buy a desktop, it does not have a wireless capability. And for traders, that's a really essential element. You need to have wireless capability in your desktop computer for the reliability of the network connection. Bootable backup drive, I mentioned that before. It's, you know, today's solid state drives are a lot more reliable than hard drives, but they still fail. And when they don't fail from a hardware reason, you can have file corruption that will prevent a system from booting. So Windows will install some sort of update that prevents Windows from booting, and now you're stuck looking at a BIOS screen and you don't know what to do. If you have a backup drive, you can boot from yesterday's system, boot right back up from where you were, and away you are trading. So that is a great recovery method. And another thing about reliability is the type of system you're choosing. You don't want a gaming computer or an overclock computer. And a lot of traders come to us and they're very confused about this because they've been reading online about how this CPU can be overclocked, it can be even faster than it is. And that's true. What they don't know is that when that happens and you try to do that on a daily basis as a trader, it will become unstable. The system will eventually, a matter of weeks, months, will start giving you blue screens. It is just inevitable. And we don't recommend overclocking. And further, we don't recommend gaming computers, which are optimized for, you know, huge graphics cards, overclocking, all that sort of stuff, is not a good choice for a trading computer. And the last things you need from a reliability standpoint are great ventilation and a good system warranty. You know, you should be suspect if your system's coming with a 1-year warranty. You know, we think that a great trading computer should have a 3-year warranty, certainly, and we offer lifetime support. So make sure it's backed well. Now, the third platform as a foundation is isolation. Now, this is something some traders know and some don't. If you're new to trading, this may be new news to you. But you should dedicate one computer to trading, absolutely. And so whatever computer you have coming into trading, you should set that aside and use that computer for everything else, your email, your web browsing, all your personal stuff. You know, whatever you're doing on your own time that is not trading should go in that system. And buy a new trading computer with a clean Windows install and only do trading on that computer. And that is super important for performance because your CPU isn't smart enough to know what's actually most important to you at any time. So when you have other stuff going on in the background, the computer's CPU is going to be constantly switching back and forth between your trading application, your trading platform, and everything else you've got running on your computer, and it thinks they're all about equally important. They're not. You know that the trading platform is what's most important to you, and so you need to make sure that the computer knows this, and the easiest way to do that is just make that computer do one thing for you, and that is run your trading platform. Now, if you have 2 trading platforms, that's a common problem, and sometimes they step on each other. And so this is one thing we can address and support. We can isolate each trading platform to only use certain cores inside the CPU, and so that way they don't step on each other, they don't interfere with each other's performance. So that's kind of an advanced thing that we can do to kind of keep the kids from playing nice with each other on the same system. So that's the platform overall as a foundation, a thought process. The next thing I want to talk about is the CPU question. So this is what most people think about when they buy a trading computer. So it's which CPU should I buy? You know, and it starts off inevitably with, you know, should I buy Intel or AMD? And to some old fogies around us, you know, it should always be Intel because AMD is this also ran company that makes really cheap CPUs for really low end PCs. That was true for a very long time. But what you should know is that in 2019, in July 2019, AMD actually zoomed ahead of Intel and very clearly grabbed the performance crown in the industry for the desktop and was really markedly faster by about a factor of 50% for the same money than Intel. And then on the high end, they were delivering performance that Intel just couldn't meet whatsoever. So that was a big problem for Intel. They had fallen behind through some manufacturing yield problems. They couldn't bring their process forward to smaller processes, what's it called, to, you know, getting down to 7 nanometer size on their chips. So they had a manufacturing problem. They owned all their chip fabrication labs, and they couldn't move them along to the next generation. So they fell behind AMD, which had better process using third-party manufacturers, and then they had better design as well. So big flip there in 2019. So from that point forward, we went from being all Intel to, for traders at least, selling about 75% AMD from that day forward. Now, they have different brands, and you probably have heard these, but I'll just run through them very quickly. On the desktop, which is what most traders are going to be concerned about, Intel's brands are Core i3, Core i5, Core i7, and Core i9. These are basically good, better, and best, and even better. On the AMD side, they're AMD Ryzen 3, Ryzen 5, Ryzen 7, and Ryzen 9. These are just names, they're brands, and they don't necessarily mean anything technically. They're just a way of separating product lines. So what you find out is on the desktop, they will reuse the same brands, but they mean very different things. So a Core i7 on an Intel desktop might mean one thing. It might mean 8 cores, let's say today, in a desktop. On a laptop, it might mean 6 cores. And you might get a Core i9 that's also 6 cores or a very slow 8 core. So you can't take the brands and assume that they're equivalent from desktop to laptop. They mean completely different things, and they also mean completely different things from one generation to the next. So if I bought a Core i7 3 years ago, it's going to be a lot slower than the Core i7 today. It should be intuitive, but not always to everybody. They say they've got a Core i7, well, which one? And there are some sites, by the way, that keep track of the relative performance. One is called Passmark, passmark.com, and they do benchmarks for every different CPU in the industry. You can look them up and find out what the relative performance is. And I'll get to more of that in a minute. I want to talk about CPU design because traders are sometimes confused by what we mean when we say CPU cores. So a CPU back in the day, which means before 2005, a CPU was a chip, and the chip was on the motherboard, and that was it. Well, there were sometimes 2 CPUs together on the motherboard, and occasionally 4. So you had dual socket and quad socket CPUs on the motherboard, and those were for very advanced server systems. Desktop systems always had 1 chip, 1 socket, and that was it. Then in 2005, we started the dual core and multi-core revolution. So instead of having, they took that concept of dual socket CPUs, and they put those 2 execution units on the same chip, 1 socket in the motherboard, dual core computer. And they went from that eventually to quad core and to 6 core and 8 cores. And now they've really taken it to quite an extreme. On Intel servers now go up to 28 cores. And on the desktop, Intel goes to 10 cores. And AMD goes to 64 cores on both the server and their workstation, which are very high advanced personal systems. And then their desktop CPUs from AMD, they go up to 16 cores, so quite a bit more than Intel's 10 cores. So that's a basic difference there. You should be seeing there that AMD at this point has gotten more advanced in terms of the number of cores that you can put onto a single processor. And that's a key to where AMD is particularly strong in performance, which is multi-core performance. So now their CPU performance scales in different dimensions. You've got the number of cores, which relates to the number of software threads. So software is composed of processes, and processes are composed of multiple threads. These are individual instructions to the processor. And those threads sometimes can be run in parallel on the same core. So you could have an 8-core computer that processes 16 threads simultaneously. So it's a little bit confusing. Sometimes you have 8 cores, 8 threads, sometimes 8 cores, 16 threads. Obviously, all things being equal, you'd like more cores, more threads for the CPU. There's another dimension, which is clock speed. You'll see usually a range of clock speed. So it might start at, let's say, 3.0 gigahertz and might run to 5 gigahertz. And usually not much higher than 5 gigahertz because there's a physical limit to how these chips operate, and you can't take it much beyond 5 gigahertz at the extreme. So the range means what are you guaranteed, which is the low number, and what's the turbo boost? What can the processor selectively deliver to you? So you can think of this as, you're on the highway and you kind of stomp on the accelerator and you go over the speed limit to pass someone on the highway. So now you're going 80 miles an hour or 85 miles an hour executing a pass, and hopefully, there are no police around. Well, chips will operate the same way. They can't operate all cores at their maximum speed all the time. They're not going to be pulled over by the police, but they will overheat, and that's a problem. So they will selectively accelerate 1 core, 2 cores, 3 cores to serve what the chip believes, what the processor believes is the most important, most demanding process at that time. And it can only do that if it has sufficient cooling, because every time it does that, it uses more power. And this is one reason that desktops are more powerful than laptops, is those CPUs in their turbo modes can demand an incredible amount of power. It is recorded that a CPU can be, rated at, say, 100 watts for power consumption, but in these turbo modes, they can run up to 200 or even more watts, per CPU. And that would be a real problem if you tried to do that on a laptop, which is why you don't see those very high performance chips on laptops. The other dimension, which people really don't know much about, is instructions per cycle, or known as IPC. And this happens to be where the kind of thin edge of the wedge is right now in terms of Intel versus AMD competition. Right now, at the very moment, the latest AMD Ryzen 5000 CPUs have the crown for the best multi-core performance and the best single-core performance. And the best single-core performance is determined by, in part, by the instructions per cycle. How much can the CPU accomplish per cycle? So when you have 5 gigahertz, that's 5 billion cycles per second. And so what can it do in that amount of time? And that is a very important measurement. But it's a horse race. So according to Intel, they're about to beat AMD on the single core, single thread performance, also known as IPC, in their next generation processors, which are going to be shipping supposedly in April. So that's going to be coming up, and we're going to see a very interesting race. Right now, you have to credit AMD with winning on really across the board, but that is a win that may be reevaluated in the next month or two. So there are also other factors that affect your system performance, and they are first, chiefly external throttling factors, which are, do you have enough memory? If you start running low in memory, your computer will start trying to save memory and doing things in the background to try to parcel out memory and saving stuff to your drive and so on. And that is a very inefficient way to run a computer. You won't even necessarily know that you're running out of memory, but you'll sense that your computer is slow. And you should ask yourself, am I running a lot of stuff right now? And how's my memory doing? And if you're using 60, 65, 70% of your memory, you are actually slowing down your computer at that point, because Windows is getting worried that you're going to run out of memory, and it's going to try to save stuff along the side and slow down your computer in the process. That's called thrashing, by the way. Speed of the network is another thing that I think people intuit. If you're going to be a trader, you need a fast network connection. That's not just the throughput, which is 100 megs a second or a gigabit a second, but the pings. You want the lowest pings, which is the latency between you and the server, lowest pings possible. So something under 10 for sure, and you want that 10 milliseconds, as low as you can get on the pings. And then finally, and this is the thing that is not intuitive to traders at all, speed of the data source. So we can deliver a fast computer to you. You can have a fast network pipe. You can have plenty of memory, all the things, check all the boxes. And at the open, you're freezing. Or when the market's moving, you're freezing. And that is a difficult problem to isolate. But one of the first places you should consider is your broker server keeping up with the market? Because if the broker's choking, their server is choking, feeding out all this stuff, that could be the reason that you're having trouble. I'm not saying it's definitely the case, but it's certainly one of the list on the list of possible reasons your system is slowing down at certain points during the market day. So how fast is one CPU versus another? There are benchmark tests I mentioned. Passmark CPU mark is one of them. Another one's called Cinebench R20. The typical score reported is the multi-threaded performance. That's the maximum performance the CPU can deliver in total, all cores, in a theoretically perfect world. But trading is not at all like that. So many trading applications, not many, but certainly some significant trading applications, do not max out your cores. And I'll mention two of them in particular. Thinkorswim runs on a Java Swing app, which allows it to run, basically program once and have it run on Windows, Mac, and Linux. But the Java Swing container for it is a single core, single threaded thing. So it's only going to be using one of your cores. So you've got, your potentially 64 core Threadripper CPU. Well, great for you. Thinkorswim's going to use one core. And then TradeStation, marginally better, but the core of TradeStation is a lot of times using one CPU core. Now it is multi-threaded for easy language charting, but the core of the program is single-threaded. So that's potentially quite a problem for your performance as a trader, obviously. So does that mean you just need one core? No, it does not mean you just need one core. The computer is going to be doing other things. It might be running your antivirus. You might pull up a web browser. There are other things you're going to do with your computer. But what it does mean is you're going to need to pay attention to single core performance if you're running platforms that run on one core that are single threaded. So just summing up for CPU performance, it's a combination of design, the CPU design, that's the cores and threads and clock speeds and so on. The application design, is it like Thinkorswim using a single core at a time, or is it using multi-cores? Is it multi-threaded, as I say? The number of apps, so you could have two single core applications like TradeStation and Thinkorswim. Again, TradeStation doesn't actually run on just one, but a lot of it does. And they could be stepping on each other, so the number of apps you have running at once on the same system could affect the performance of both of them. And then external throttling factors, I mentioned that, the memory, the network speed, and so on. But finally, user behavior, and I want to emphasize that. The number one, when we sell a computer, we really try to sell only great computers. We don't have like a product line that you can buy that kind of is okay or kind of sucks. We don't have that. All the computers we sell, at least, we think are somewhere between really good and absolutely fantastic. And so we're a little surprised when customers calls up, usually not initially, but a few months in and say, hey, my computer slowed down. What happened? And that is something likely that you've done. And sometimes they know that, sometimes they don't, but they do want the help sorting that out. And so you should, before you point the finger, just think about, what did I do before this thing got slow? Did I install something? Did I install an indicator package into my trading platform? Maybe that slowed it down. So maybe at that point, disable that indicator package, see how it runs without that. So there's some tips you can do on your own before coming to support. But when you do come to support, we're going to be kind of looking back and seeing if we can isolate what changes you might have made to the system that might have explained the change in performance. Okay, so moving on here, that is the end of CPU's question. So we're going to get into some specifics for desktops now. And it looks like I'm running behind, so I'm going to try to speed this up. So why a desktop PC versus a laptop? So obviously, in the best of all worlds, you would want a computer that was great in your main office and you could pick up and take somewhere on a nice weekend, go for vacation for a week. We get it. Believe me, I founded this company on that idea that that laptop should not be disadvantaged, that they should have some of the same capabilities as desktops. Unfortunately, there's no such perfect world. There is not a laptop out there that runs on battery for any length of time that can keep up with really our mid to upper range desktops, and they cannot even dream of keeping up with our high-end systems. So if you want the very fastest performance, you're going to need to get a desktop computer. It is that simple. And beyond the CPU performance, it's their support for multiple monitors. It's very, very easy for them to support 4 monitors, 8 monitors, even 12 monitors. We have systems that can support 24 monitors, but we don't like to sell them because we don't think that's the best approach to computing. So desktops make it very easy to support the multiple monitor arrays you may eventually need. If you're just starting out, you may think, hey, I got 2 monitors, I'm fine. Or hey, I've got my TV, my 4K TV. I am good. I do not need multiple monitors. Well, maybe that's true today, but we'll see. There are a lot of people who definitely think you do need and want multiple monitors for traders, even multiple huge 4K monitors as you go on. So think about that as a future growth turn you may make at some point. Now, mistakes traders make buying desktops. I mentioned gaming PCs before, I mentioned them again. Do not go out and buy a gaming PC. They're optimized for a completely different user than you. That user wants very, very fast 3D motion graphics to run their games. They don't really care about reliability, so they might be overclocked and they might, blue screen on you. And they don't really care about long-term reliability because they're often upgrading and changing their PCs after a year or so. So they want the very latest stuff. And whether this system is chugging along perfectly in 3 years is really not front of mind for them. And specifically, there's some mistakes in those systems. Liquid cooling, most liquid cooling in this world, whatever brand you have, is actually run under a patented design by a company called Asetek out of Europe. And that design is prone to failure after a certain amount of time. Somewhere between 2 and 4 years, they fail. And we have seen that. We experimented with liquid cooling about 12 years ago, and quickly got out of it because we started to see the reliability issues that they present. So you really do not want liquid cooling for your system at all. And it is absolutely possible to have a great air cooler that will stay reliable for as long as you want to run that computer. 5 years, 10 years, it will still be there, still reliable. And then the other aspect is that the other mistake traders can make in buying a desktop is they buy for today's needs. And specifically, they will buy, say, a trading computer that'll support up to 4 monitors, but has no possible capability of going beyond that. And you may think, well, 4 monitors is all I ever need. Maybe that's true. Maybe it's not, and you would like not to have to buy a whole new computer because in 6 months you decide you really need 6 monitors. So you don't necessarily have to have the computer equipped to support 6 or 8 monitors from the start. That's a nice idea, but you do need to have the capability to add that second graphics card and get to 6 or 8 monitors down the road. Otherwise, you're going to be in a much more traumatic position for upgrading. Now, which desktop CPU to buy? This is going to be a little bit tedious in the details. I'm going to gloss through it. Right now, the short answer is AMD. Buying today, buy AMD. They have the best multi-core performance for sure, especially on the upper end. And then they, on their new series, the Ryzen 5000 series, they also have the best single core performance. Now, there's a problem. AMD cannot keep up with demand right now on the AMD Ryzen 5000 series. We're pretty well positioned in this industry, and we're having a heck of time getting enough of those CPUs for demand such that we have to take them off our website because we can't get enough supply. So what you'd like to have is a Ryzen 7 5800X, let's say, or a Ryzen 9 5900X. Those are fantastic CPUs. Very, very difficult to buy. If you want them, you may need to wait a little bit to get them because they're not sitting on anybody's shelf. They're selling for astronomical sums on eBay, on the secondary seller market. Very difficult to buy. But that's the CPU you'd want if you wanted the best of all worlds, best single core performance, best multi-core performance, Ryzen 5000 series. Ryzen 3000 series is nearly as fast for multi-core and a little bit slower on the single core performance. Now, Intel in the mid-range is still kind of okay. Their Ryzen 7, I'm sorry, their Core i7 is pretty decent for the money and so on. But they've been incrementally catching up with AMD since that big change back in 2019. And in April or so, they will be shipping their new 11th generation desktop CPUs, which they are promising are going to beat AMD for single core performance. And you may think, okay, well, great, I can get AMD today. Why wait for Intel? Well, maybe you can't get AMD's 5000 series today, and Intel's going to have a manufacturing advantage in April because they own their own fabs and AMD does not. AMD is fighting for capacity at the third-party manufacturers it uses, and they can't get enough capacity to churn out the CPUs they want to do. So I can very easily see a situation where in April and May, the tables are turning. Suddenly, Intel has better or marginally better or maybe close to the same single core performance, pretty good multi-core performance up to maybe 8 cores. So in that sort of mid-range, and they're available and you can buy them. You not have to be on some sort of wait list for weeks or potentially months for the high-end AMD processor. So look at that possible change It's not that their CPUs are going to be totally better than AMD, but they're going to be about the same or marginally better on single core, and you can buy them. That's going to be a nice thing for Intel to swing some market share at its position. Okay, so budget. We get this question all the time, which is what should I budget for my trading computer? Believe it or not, we figured out that people's Zillow price for their home value, up to $600,000 home value price, tends to be about their maximum budget. 1% of that is, I'm sorry, not the whole value. 1% of their Zillow home value is their maximum budget for their system and their display. It is a very interesting ratio. But if someone's got a $300,000 house, according to Zillow, they've got pretty typically about a $3,000 max budget for their computer and display. So bear that in mind. You don't have to spend that much, especially as you get to the upper ranges. $6,000 computer is a lot to spend on a computer and display. And I know that. And certainly as you get above $600,000 house value, you definitely don't have to spend 1% of your $10 million house. But keep that in mind as a reasonable kind of max budget, and try to spend less, of course, but that's where we think power traders need to be to get the right system for what their budget really is, what their available funds really are. So the next item to consider in your desktop PC is supplier versus price. So you can find lots of cheap PCs, lots of places, and we don't dispute that. You can start with Dell, you can start with Best Buy, you can get very cheap PCs, but they're not comparable. And this is the thing that is probably the most tedious thing in sales for us to explain. What are the actual differences between these computers, because they're not just CPUs. So if you're finding you're comparing two systems and they're more than 10% different in price, there's probably something you're not seeing. You're not doing an apples to apples comparison. There's something presumably better about the system that's 10% more expensive, and you just haven't seen what it is that thing is, or you don't care what it is. So those elements that play into larger price differences are features. These are all the elements that go into the system. You know, does it have wireless networking built in? You know, what's its expansion capability, the quality of the motherboard, quality of the power supply, and that gets into component quality as well. How high quality are the components that they're using in the system? And finally, support. Support's a really expensive thing to do well. And we committed really early on, because we had such really high-end customers early on, to commit to support and the very, very best support. Again, I'm not going to say we're the only company capable of doing that, but I will say that most don't come close. So there are a handful of companies out there that I think do a decent job of it. And specifically at the why is my computer running slow question, how are they going to answer that question? So when you're looking at the computer, you should be looking at the company behind that computer and how are they going to help you? And I can guarantee you, if you go into Best Buy and buy a computer and take it home, you're going to get a great deal for the CPU. And they aren't going to help you at all for why it's running slow. Geek Squad is not even prepared to do it. Even if they come to your house, they will replace a bad power supply. But they're not going to figure out why your indicator packages is slowing down your trading platform. That is not going to happen. So this is true of all the mass merchants, and why I think you should stay away from them in particular. Another way of thinking about it is the difference in price. So maybe you get it down to that 10% difference in value. You're looking at a couple, 2 or 3 candidates, and you like one company a little bit more, and you like the price of the other company more. And one thing I think is useful as an exercise is, what is the price difference over the lifetime of the best lifetime of the system? So if we think that the best lifetime, meaning before it's really going to start to be outdated, is 3 years, then if there's a $200 difference in price between the computers, well, that's $5.55 a month. So is it worth $5.55 of your money to get better support or not? And I think the answer is yes, but it's your money, so you can decide that. But that should be the framework by which you're making that decision, not, okay, I've equalized the hardware features in these 2 comparisons, and this one's $200 less. Click, I'm going for the $200 less. That is a penny short, pound foolish approach to the problem. I've addressed support lots of different ways. One thing I didn't mention is that Windows Update itself can cause support problems. So it can cause your system to be unstable, unbootable, and so on. And we address that in 2 ways. First of all, in our computers, we recommend a feature we call Optimize for Business. It is a free feature. And with that, we delay Windows feature updates 6 months because we know that they're typically buggy and very often will cause computers to become unstable when they come out. So once you have a system from us, if you choose that option, again, free, you won't get new feature updates to Windows for 6 months. You will get new security updates very timely right away. And so that is a really important distinction, and it helps keep the system stable. The other half of it, of course, is sometimes Windows updates still causes instability, so we have to sort that out for customers, and that is definitely a support challenge for us. Reliability, I touched on that before, and I'm going to move on because we're running short of time. Okay. We'll move on now to laptop trading. So why a laptop computer? So the first question you should ask, how often a year do you really need to trade away from your primary office? Is it, your 2-week vacation? What is it really? And if it is a very small part of your time, I would encourage you to go back to that desktop discussion, find your best desktop, and for your laptop needs, just buy a laptop. Almost any laptop will do for your 2 weeks out of the year that you need a trading laptop. But some of you do think that you want everything on one system and a laptop. So we take that seriously. And we have some observations, I guess I will say, about the laptop market. First of all, here's an area where the big 3 corporate brands in the United States are good. I've kind of slammed them a little bit on the desktop side, but I have respect for what they do on their upper end mobile workstation lines. These are the HP ZBooks, the Lenovo ThinkPads, and the Dell Precision, and to a lesser extent, Dell XPS. These are very solid, high quality laptops in terms of their design, reliability, ergonomics, all that. And maybe even more important, they are backed by a terrific service network if you buy into it. On-site service does not come with these laptops, but if you buy that option, it's available. They can be in your home office the very next business day, solving any hardware problem you've got with their laptop. And that's really important. If you've concentrated your whole trading, your whole money-making life onto a laptop, and now it's not working properly, you really want that service. So that's very important. And it's kind of priceless if that ever happens to you, that you've got a major failure. But that's not the only way to cut the problem. So there are some other options. There are some major Asian companies, Asus and MSI make some very good consumer gaming laptops. Now I'm going against my advice on desktop and saying, if you want a cheap trading laptop, well, probably the best way to do that is get an Asus or a MSI gaming laptop. That's not a bad way to start, just as a category, because they're usually pretty good, pretty fast, and they usually are expandable to multiple monitors, and I'll get to that, in a way that typical business laptops are not. Now, their upper end mobile workstations are different from business laptops. I want to make that clear. Those big 3 corporate brands make business laptops like Latitude from Dell, and that's not what we're talking about. From the big brands, we want the mobile workstation lines, and then from the consumer brands like Asus and MSI, we're looking at their gaming laptops. Now, there's some other categories. There's some companies known as Sager, Cleaver, or Eurocom, and there's some knockoffs similar to that. What they do primarily, what they're known for, is putting a desktop CPU into a sort of a laptop body. I say sort of because it is much thicker, much heavier. And it's a kind of a mobile computer, weighs 10 pounds, much thicker. And then you can try to get close to that perfect world of desktop performance, yet mobile. So hooray. But there are some caveats. And we looked very closely at them because we could private label them if we wanted to. And the problem we ran into when we started evaluating that is that we couldn't get service or spare parts or support from them. And so these are companies that design some pretty hot laptops, but good luck trying to fix anything fundamental. If you need a motherboard for the laptop, if you needed a replacement screen for a laptop or anything like that, good luck. And for the best laptops, we're often back ordered several weeks just for the new laptops, and getting repair parts for those laptops were just months away from fruition. So it can be a very dicey situation to buy those laptops from a service and parts standpoint. I'm not going to say they're necessarily unreliable, but if they are unreliable, you are stuck. And the other aspect here is private labels. These are some companies, could be us, we may do this in the future, private labeling other companies' PCs. Is also known as white boxing or white books. And there are some trading computer companies out there that do this, and they may say, hey, we've got this laptop. It's this XYZ company's laptop, and their XYZ is the name of their company. We should know they're not making this laptop. They're not doing anything to it. All they're doing is going to a company like Clevo and private labeling their laptop. So you get the whole uncertainty about service and support through that, only you have a new front end to that. It might be that their support people on the phone are a little better than you might get out of Sager, but they're still going to be stuck with some of the same parts and service problems that I mentioned earlier. So in terms of attributes for a laptop, let me whiz through these quickly. 15-inch or 17-inch are the typical ones for traders. Screen resolution, you want to avoid 4K resolution. That's because it's just way too small for the laptop screens, the text size. Graphics controller, this is important, especially if you're going to be driving multiple monitors externally. You want to look for NVIDIA graphics with at least 4 gigabytes dedicated memory. That is one of the keys to enabling great multi-monitor support from a laptop. Memory, you should buy one with 32 gigs of memory and see if it's expandable to 64 gigs. So if you ever get very ambitious down the road, you want to be able to increase your memory, which is easy on a desktop. Laptops really vary in their capability of expanding. The I/O ports, input, output, these are absolutely critical for multi-monitor support. So that's what I'm going to discuss now. How many external monitors do you want to support? 0 or 1? Any laptop can do that. If it's more than 2, you really want to pay attention to, actually, if it's 2 or more, you want to pay attention to the external ports in the graphics controller. And if you want to run 4 external monitors, or think you might in the future, you really have to pay attention to this very carefully. And the reason is, most people think, oh, I can just attach a USB adapter to a laptop and then attach it's a USB graphics adapter and it's got an HDMI port on the other end. And I can do that for as many monitors as I want to attach. And if I run out of USB ports, I can put those on a hub and attach that hub to my laptop. And they're correct, that does actually work. You can attach as many monitors as you want. You can put 10 monitors attached to your laptop that way. And you will hate yourself for doing that because the performance will completely crush. Every USB monitor you add decreases the CPU performance by vastly more than attaching through other means. It is a very inefficient way to drive your external monitors. So do not do that as a trader. So there are some ways you do that properly. And the ways that we have found that kind of the 3 short check boxes you should be looking at is, does it have that discrete graphics controller, the NVIDIA controller with 4 gigs of memory? Does it have a USB-C port with display supports? That means the physical USB port, and then does the manufacturer say that it runs DisplayPort signals across that port? Some do, some don't, depending on the model. Or Thunderbolt 3. Thunderbolt 3 is somewhat equivalent to DisplayPort, too technical to discuss the distinction, but it is at least as good as DisplayPort, I'll put it that way. And then it's useful also to have a dedicated monitor port on the laptop, either HDMI 2.0, 2.0 being important for high resolution, or mini DisplayPort or DisplayPort 1.4. Again, 1.4 is important for very high resolution monitors and multi-monitor support. You put all that together, and we can get you the rest of the way to multiple monitors very easily through a magic ingredient. That is called an MST hub. I will skip over the details. You can look at the flyer for more details, but this MST hub will plug into one port of one of these qualified laptops and instantly be able to drive 3 4K monitors through one cable to the laptop. It is a fantastic position to be in. You can get that 4th monitor to 4K just by plugging it into that dedicated monitor port. So you can definitely today, if you're choosing carefully with your laptop, get to some great multi-monitor support. Now you can go even beyond that, which I'll call the Ferrari approach, and you can have what's called an eGPU. It's an external graphics card, and it's in a little box. It's alongside your laptop, and that plugs into that same USB port. Actually, Thunderbolt 3 is the only one it works on. And you can run a desktop graphics card from your laptop and have even more performance and gaming if you want it. So that's a real high end, and we usually see that when we need to support more than 4 external monitors. The eGPU is a big help when we want to go to 8 monitors, let's say, from a laptop. Now, so which laptop to buy? I've touched on desktop versus laptop performance. You're going to give up some CPU performance in buying a laptop, so just accept that. And I mentioned some particular CPUs here. Right now, AMD is ahead of Intel, once again, on the laptop side for performance. Now I'm going to hit the last topic here, which is displays and multi-monitor arrays. And I can see I'm running out of time here at 7 minutes, so I will get through this as quickly as I can. So first thing I want to talk about is monitors are not alike in terms of their technology. And everybody knows you should be buying an LED monitor, and that's just, all monitors are LED today. But the technology by which they display varies. And there are basically three classes of monitors. One's called IPS, one's called VA, stands for vertical alignment, and one's called TN, twisted pneumatic. And what you want, ideally, is an IPS monitor. It has the widest viewing angles and the best quality at wide viewing angles. So VA will often quote the same viewing angle, 178 degrees, but it actually will look better and colors will be more consistent at different angles from the side when you're using IPS. A lot of traders say, well, what's the response time of this monitor? You don't care as a trader what the response time is. That is a gamer spec. You don't need 1 millisecond or 2 millisecond or 4 millisecond or even 10 millisecond response on a monitor to run trading. You absolutely do not. And the very fastest very often is correlated with TN monitors, those ones with bad viewing angles. You want viewing angles because you're going to be potentially doing multiple monitors and you're inevitably going to be looking at different angles at different screens, and this will look like crap if you don't have an IPS monitor or a VA monitor. So just kind of accept that from the start. Size and resolution run together. It doesn't mean anything to say that, hey, I went from a 21-inch monitor to a 32-inch monitor. Okay, that could mean, you know, you're running the exact same content, just much bigger. So understand that monitor content that you see on screen is a combination of size and resolution. That should be intuitive, but a remarkably high number of people don't get that coming to talk to us, so we have to explain that. So I have put down on this speaker notes 4 industry standard resolutions that you should look at, and then best size resolution combos for most people. So they're, as you might expect, at different sizes, smaller resolutions, larger sizes, larger resolutions. And you should stay in those combo ranges that I'm mentioning and see my caveats. You know, some may have a little smaller text size, some may have larger text size. So if you really want large text size, look for the combos that offer larger text size. Some of the kind of zazzy monitors right now are the ultra wide monitors and the curved monitors, or the ultra wide curved monitors. And so what an ultra wide monitor is it might be as wide as a 4K monitor, really, you know, very high resolution and 34 inches wide or even wider. But vertically, it's about as high as a standard monitor. And these are, you know, certainly better than, you know, you'd much rather have a 34-inch ultra wide, let's say, than a 27-inch monitor of anything. I would just say that absolutely, sure, absolutely. But 2 27-inch QHD monitors is going to be better for you than most ultra wide monitors. So sometimes we'll get traders, you know, calling us and they've went off and spent $1,500 on a 49-inch Samsung ultra wide display that is marketed for gamers, and they bought this for trading, and they hate it because it's, you know, as wide as their desk is and it's only 1 foot tall, and then they realize that they bought the wrong thing, and this is not really making good usable space, making good use of their visual attention, which is both vertical and horizontal. So you should be aware of that. And then the other things, curved monitors are definitely cool, I get it, but they don't, you know, below about 34 inches, they really don't add anything to the ergonomics. They're just kind of cool, I admit that, but you want function ahead of cool. Larger than 34 inches, that starts to become an issue where you may want a curved monitor. Now, what about using a TV for trading? Traders definitely ask us all the time, you know, can we use our, you know, TV from Best Buy or TV from Sam's Club for a monitor? Absolutely, the answer to that is yes. You can, but I'd recommend you think through which one you're buying, because there are different quality levels for text and different attributes that what make a TV good for PC use. So look at viewing angle, make sure it has a wide viewing angle, and IPS would be ideal there. And go to rtings.com, that's rtings.com, for the ratings of TVs, and see which ones are rated best for PC use. Those are some good shorthand ways of finding a good TV. But I suspect you will eventually grow out of it. So that is a good way to start. But I think, you know, after you've been trading for a while, maybe 6 months to a year, you will find yourself, for text quality reasons, multiple monitor reasons, eventually graduating to multiple monitors, even multiple 4K monitors. A next tip, don't buy a large array of small monitors. We have customers of our company that have 24 21-inch monitors. And while that maybe made sense in, you know, 2010, it absolutely doesn't make sense now when there are much larger 4K monitors. You know, those 24 monitors could have been today 6 large 4K monitors. So you would much rather today have 6 43-inch 4K monitors than 24 tiny monitors. So bear that in mind. And in general, computer performance is better the fewer the monitors you have. I'm not arguing that you should use one monitor. I am arguing that give or take, given the choice, you'd rather have fewer large high resolution monitors than more smaller and lower resolution monitors. Finally, consider a multi-monitor array. We sell a bunch of them. We sell 62 of them. These are pre-designed monitor arrays, all the mounting, all the monitors you need in a range of resolutions and sizes. And we're not the only company that does that, but they're a good source of them, and they can sell those as package deals with your desktops for a discount, or with laptops. And finally, mounting options. You see the freestanding desk bases all the time for multi-monitor arrays. You may not know that they're also available in desk clamps to clamp onto the back of your desk, grommet mounts which drill through your desk, or wall mounts. Wall mounts you can mount on the wall. So those are options that you can consider. And I am out of time. Any questions?
Well, Geoff, thank you very much. We probably don't have any time for questions. We do have some questions down in the box. If you could take a second and answer them, or we'll
Sure.
get them to you,
Absolutely.
to you after the show. And
Okay.
anyone that has asked questions, we'll make sure that we get them
I'd be
answered.
happy to.
Thank you so much, Geoff. We
Oh,
really,
you're welcome. You're welcome.
my head's about ready to explode. We'll have a break in between you and Tom, but it's not going to work out. But yeah, those were some really important facts. Thank you so much.
Oh, you're welcome. Bye for now.
All right. Okay, so I think to keep on schedule, we're going to have to keep on moving here. Hopefully you've had your potty breaks or grab some snacks. I know it's a long day. We're trying to keep going and be as efficient as possible. So now we're going to turn to our next speaker. He is a trailblazer in the online brokerage industry, driving innovation and financial education for investors of all levels. He offers up his expertise in the option markets as co-host of TastyTrade Live, airing daily on the TastyTrade network. He's going to be talking to us about the upside of the next new generation of investors who are taking stock in themselves and their financial future. We're so happy to have with us today, and hopefully he's ready. This is the first time we've done this. Sometimes we're not 100%, but we're going to invite Mr. Tom Sosnoff onto the podium now, and he can take your attention.
Perfect. Thanks so much. Hopefully you can hear this. Tim, can you hear me fine?
Absolutely. You're not as good looking as Kristi. She said you were. I'm sorry.
No. I'll give. I will concede that without a fight.
Okay, that's why you wear the hat, right?
Yeah, a lot of reasons. Yeah. No. She's technically our suit, and I am not. But we've been working together a long time, and I was on air this morning, so I missed her piece. But I heard it went well, and it's awesome. So let me ask you just one question before I get started. Are you actually two questions? Are you going to participate with me or not? And then, can I share my screen?
I was not planning on it, but if you need me to,
I do not need you to. I just was asking. I wasn't sure of the format. That's the only reason. And the other question is, can I share my screen and show my software or not?
Yes, you will be able to do that. Our technical people will be working with you shortly.
Okay, so I have my screen up in the background, and when I don't, let's just see right here. Yes, I have to share screen. So if that's all ready to go, I'll show it in a few seconds. Okay.
Sounds good.
All right. Thanks, Tim. I'll just get going. So the fun part about this for me today is, and I'm sorry, welcome everybody. And thank you for the very nice introduction. My name is Tom Sosnoff. I am the co-CEO of TastyTrade, and I have a bit of history in this business, almost going on back 4 decades. Was a market maker / prop trader on the floor of the CBOE for about 20 years. Then we built a company called Thinkorswim, which was public and bought out by TD Ameritrade. And then we built TastyTrade, and That's been our project for the last 10 years. And so it's been a fun run. And I've been asked to come on today to talk about the next generation of traders. And the fun thing about that for me is that I've basically spent my entire career in this space. And first and foremost, I consider myself a trader. So this is my world. And I think the next generation of traders, you're starting to see the transformation take place right in front of us right now. You're starting to see what we've been talking about for a long, long time, almost 2 decades. I've been on the road for literally 2 decades talking about the transition from passive investing to active investing. And I think what you are starting to see is that part of it being a little bit of the GameStop / AMC / Robinhood situation from a couple of weeks ago being almost a transformational event. But beneath that is a massive movement for people managing their own money, taking care of their own finances, and doing it through active participation in the markets. And when I say active participation in the markets, what's happened is we've gotten to a point where markets have become, in my opinion, very strategic, very efficient, and the individual investor, the next generation of individual investors, is going to be in search of capital efficient ideas, capital efficient strategies, self-directed ideas and strategies, and what I call intelligent content. And intelligent content means that your focus is going to be on everything from quantitative finance to math equations to all that, as opposed to being on more traditional content like what's happening in the news, which is something that may explain something that's happened, but won't help you to necessarily make any money looking forward. So I think that what's most interesting about the period that we're entering is that it's going to be a new era of intelligent content. It's going to be a new era of really highly sophisticated technology. It's going to be a new era of strategies. It's a whole new era of pricing. And most importantly, it's an era of product and marketplace efficiency that'll allow you to do whatever it is that you want to do from a single platform. So just to give you a little tasty background, we are the largest, tastytrade is the largest digital financial network in the world right now, financial network. And we provide everything for free. So our content's free, our archives are free, and everything that we do, which is 8 hours today, as of today, it's 8 hours of streaming content a day. It's all free. And we hope to go to 24 hours a day, 5 days a week very soon over the course of the next year. But for now, it's only 8 hours a day. And none of it is news. It is all research-based think tank content. But what we do is we pair that up with our technology, and we pair that up with minimal fees. And the only place we make money is transactional revenue from when our customers trade. And so what the TastyTrade ecosystem is a combination of streaming live content. We also have newsletters, which are all free. We also have magazines, which are free. Everything drives people to eventually to our technology and to our trading software. And what I want to do today is take you on a little bit of a walkthrough why we've built what we have built technology-wise, and how do you take advantage of it as being part of this, what we call next generation of traders. The beautiful thing about the era that you're in right now is 10 years ago, and I just listened to the person before me, and I get a lot of what's being discussed. Years ago, our focus was on lots of different things. Our focus was on, making sure we had really good trading technology in front of us, making sure we had access to a specific marketplace that we understood, making sure that we had access to certain kind of fundamental and technical resources. the markets have moved and the world's changed. We've become product agnostic, strategically agnostic, and from a single piece of technology today, we can basically do anything and anything with money. And what I'm going to show you in a couple of seconds, let me just load this up, share screen, software, share, beautiful. Okay, so what I have in front of me here is the Tastyworks platform. Now, we have built the technology that currently powers probably about 40 to 45% of all the retail order flow that takes place in America right now. Between the Thinkorswim platform and the Tastyworks platform, which are two of the platforms that I've built with my development team, we route most of the retail order flow. So it's crazy, but hey, it's a small world. And so we're very familiar with, what retail active self-directed customers want to see and what they want to use. The cool thing about the technology that I'm showing you right in front of you now is the Tastyworks platform, is that it's the latest piece of technology that we've built and latest greatest. It's lightning fast. It's built on high frequency middleware. So the first thing the next generation of traders gets to deal with is they get to deal with the fact that they're on a technological infrastructure now that is HFT, high frequency trading, and it's virtually the same speed as the counterparty. It's never been like that before. So like today's platform, like the Tastyworks platform, is probably 20 to 40 times faster than traditional legacy platforms. And whether that means it's the millisecond, so it's a blink of the eye, or it's 2 blinks of the eye, it's not a tremendous edge, it's just a tremendous difference for retail investors. Now, what's also neat about it is that from a single platform, you can trade like stocks. See this SPY up the top of the page, SPY is the largest, SPYs are the largest, ETF. And so by notional amount, or from the same exact look and feel, you can trade S&Ps. These are the S&P futures. And from the same look and feel, you can say, hey, you know what? I'm going to trade bonds. And then if you decide you don't want to trade bonds, that's the /ZB up here. You can trade TLT, which is a ETF that mirrors the bonds. So from a single platform, you can trade stocks, you can trade futures, you can trade any future, any stock. And then of course you can trade the underlying options from multiple layouts. In this case, here's a TLT layout, and you can see kind of, simple, we call this a table view, but kind of a classic view of just really understanding, from a single platform. So the first difference is, and this is how we've commoditized technology for this new generation of traders, is from a single platform, we're indifferent to what you trade. So if you want to trade stocks, go ahead. If you want to trade options on a stock or an ETF or an index, go ahead. If you want to trade futures, go ahead. If you want to trade futures options, go ahead. These are ES options. So from multiple exchanges to multiple products to multiple exchanges from a single interface, that is the first thing you notice that's really cool about today's new technology. And there's not too many platforms. There's a couple platforms where you can do all this, but it gets even better. Not only can you just trade listed assets, now what we've done is we've integrated non-listed or alternative assets, for example, like crypto, into the platform. So now from a single interface, if you want to trade Bitcoin, here you can trade Bitcoin. Like for example, if I want to trade Bitcoin, I'll just do a trade. I just bought $100 worth of Bitcoin. If I want to buy Ethereum, I just bought $100 worth of Ethereum. If I want to buy Litecoin, I just bought $100 worth of Litecoin. These are all real trades I just did in real time. So you can see, and these are what we call alternative assets because they're not exchange listed on one of the US exchanges. These are, they have the kind of like what we call over-the-counter exchanges, but a competitive marketplace embedded inside of today's technology. So if you wanted to trade digital assets, because this new generation of traders doesn't want to be bucketed and said, oh, you have to trade stocks. Oh, you have to trade just options. Oh, you have to trade futures. You only can trade futures options. But no, now you can trade alternative currencies. I'm sorry, you can trade alternative assets like digital currencies, and it's all done in one platform. So why would somebody do that? And the answer is because ultimately, and I'll take you back to this mode for a second, because ultimately what happens is when you're able to diversify your underlying assets into non-correlated products, you have a diversified portfolio, which reduces your portfolio risk by as much as 30%. And again, this is going to be the key of today's discussion. And this is something that really most people in the industry, even though we have a lot of what we call financially literate or financially capable or sophisticated experts and everything else, very few people understand the concept of true risk reduction through the most through basically through today's technology. And what that means is, how do you reduce risk? Well, you lower the volatility of your portfolio. If you have highly concentrated underlyings, whatever that may be, like all equities, for example, are highly concentrated. But if you're able to diversify by underlying, and you're able to diversify by strategy, and you're able to diversify by duration, and you're able to diversify by implied volatility, then overall, you're going to reduce your portfolio volatility. We call that the standard deviation of the risk that you take, by as much as 50 to 60%. And you're going to overall reduce, or you're going to reduce the overall risk in your portfolio by as much as 40%, just from using non-correlated underlyings, just from using diversified set of strategies, just from using different volatilities and different durations, and that all means in different products. Now, the reason that that's never been done before is because very few people, understand that, because that is part of this new generation, and also very few platforms support that. There's platforms out there that are like, where there's 10 or 20 million customers on a platform that doesn't support futures, digital assets, or options on futures, for example, or complex option strategies. And people think, oh, I have a great brokerage firm. No, you don't. You're going into a casino that allows you to play one game, and it's not stacked in your advantage. You need to be able to build a portfolio that has first of all, that has access to A, all strategies, B, all products, including alternative products, and C, allows you to do whatever it is you want to do, regardless of the account type. Let me explain, as Ricky said. At Tastyworks, we were the pioneers in basically removing the restrictions and limitations for IRA accounts. So at Tastyworks, if you want to trade a future in your IRA account, go ahead. If you want to trade an option on a future, which you're saying, why would I want to do that? Well, I don't know. Maybe you want to sell puts in silver because you're bullish. Maybe you want to sell calls in gold because you're bearish. Maybe you want to sell call spreads in crude oil because you're bearish. Or maybe you want to sell put spreads in the S&Ps because you're bullish. I don't know. But maybe you want to, I don't know what it is. Maybe you want to sell a call spread of the bonds because you think rates are going higher. I have no idea. But what we allow you to do is whatever you want to do. So if you want to use futures or futures options in an IRA account, go right ahead. If you want to sell a naked call or put in an IRA account, go right ahead. We may make you put up a little bit more money, but we're not going to restrict the strategy you're going to use. Now, why does that make us so much different, and why is that so important? It's so damn important because I'm going to get back to this concept of correlation, portfolio diversification, and non-correlated assets, non-correlated strategies, regardless of account type. If you are going to be successful participating in a, quote, new generation of active trading, in active participation in the financial markets, the world's changed in the last year. We're never going back to the way it was, and people are never going back to their clueless advisors. They're never going back to people that are like, that really don't understand anything but an index fund or passive investing. It's never going to happen again. We have moved in a new direction. We are forever going to be heading in a new direction financially. If you miss this train, or you miss this boat, whatever it is, which is taking everybody to an aggressive, strategic, active, do-it-yourself marketplace. Okay, you're going to wake up one day and go, "Hey, I can't believe I didn't participate." There's a lot of other reasons for participation too, which we don't have enough time today. Let me see what time it is. It's 11:18. I think I have till 11:45. There is 100 other reasons, and some of them are very powerful, for being active with your own capital. And so I don't want to get too sidetracked, but I just want to give you a little bit of insight. One of the reasons it's important to be active with your own capital is because what it does is it forces you into making decisions, both emotional decisions and decisions that have a monetary outcome as well, which makes you into right off the bat, a better decision maker, because there's the ability to speed up the process at which you basically look at all your choices. If you make very few decisions in life that have emotional and monetary outcomes, then the speed at which you make those decisions is too careful, too slow, and not fast enough to be successful, or to be successful enough, or to maximize the level of success you will achieve. The more decisions you make, the faster you make those decisions, the more confident and competent you become at making those decisions. And because of that, you become more successful. The most successful entrepreneurs are the fastest decision makers. How do you become a better decision maker? You make decisions. How do you make more decisions? Well, you find a marketplace that's efficient. And inside of an efficient marketplace, you can do whatever the hell you want. And so there is an incredible advantage. And when I say advantage, it's something that makes your brain work faster. It makes you think through things faster. I love to use the Tom Brady example because people can relate to football, but Brady is not a better athlete, never has been a better athlete than a lot of other quarterbacks. But the speed at which he makes decisions and checks down different receivers and decides where he's going to throw the ball is much faster than anybody else that he competes with. Hence the reason he's been able to win Super Bowls at 43 years old, because his decision-making capabilities, brain processing speed is amazing. All superstars have that. That's like kind of the eyes in the back of your head thing. Well, in the trading world, it's virtually the same thing. And nobody knows what the market's going to do tomorrow. Absolutely nobody has a clue on what the market's going to do tomorrow. And what we have to realize is that in the next generation looking forward, as we pass the baton to the next group of traders, we have to, and to active participants in the market, we have to realize that nobody knows what's going to happen tomorrow. It's not possible. Markets are too random. They're too efficient. There's too much money chasing too few returns. So ultimately, what's out there is what you can do mechanically and what you can do strategically. And if you don't have the right technology, like, I hate to say this because I'm very competitive with obviously all the other brokerage firms globally and everything else. But when you look at the level of technology that's available globally around the world right now, it stinks. And the level of product and middleware and exchange technology and high frequency market making technology is really good. It makes no sense to me why I can route an order to a high frequency market making firm and they have killer technology that can compete for an order flow and price improve within 4 milliseconds. But the front end technology that I'm using takes 800 milliseconds. And it doesn't even support all the things we want to do. Hence the reason we built Tastyworks. Because if you can deliver to individual investors the best content in the world that's all think tank driven, and you can back that up with the best technology, then you have a package where people can actually take applicable content and apply it to the technology. Let me show you something. I hope I don't crash my computer because sometimes I do on Zoom here. So I'm going to be a little bit careful here. But for those of you that are not familiar with us, this is our network called tastytrade. And on this network, you can see right now, I'm taking you actually to everything on Tastyworks is in the middle of the platform. So you never have to you never have to change pages or look somewhere else. But this is a live stream that we're running right now that's playing live on the network. Like this guy Nick and this woman Katie, they're doing a live show right now showing the same software on air. And these are the shows we did this morning. And that's all. This kind of stuff is all unique to the Tasty ecosystem. But we back everything we do up with researched content, and it's all math driven. So we have a bunch of PhDs. We have a bunch PhD in physics, PhD in data science, PhD in finance, and PhD in math. Lots of really crazy smart people who are writing a ridiculous amount or researching a ridiculous amount of math models, because what we're trying to do is not tell you what's going to happen next, but to optimize what decisions you make in your head with respect to trading mechanics. It's really fascinating. And in order to apply everything, you have to have a platform that lets you do everything, regardless of account type. And that's what Tasty does. So whether you want to trade digital assets like I showed you before, or whether you want to trade, like I'm going to give you a couple of examples here because it's super, super simple to see. Like this is a micro future. And just to show you, I'll sell one on the bid, filled. And if I wanted to buy it back, just to show you how simple this platform is, I'm not going to any other pages. I'm just buying and selling futures from a single page. But if I said, you know what, that doesn't make any sense, I'm just going to do it as, I'm sorry, I did the wrong thing. I'm just going to trade. Oops, hang on one second. I pull up a stock here. Let's say I wanted to trade, just as an example, I wanted to trade 100 shares of Facebook. So from the exact same interface, I just sold 100 shares of Facebook. If I want to buy it back, just close positions. Now, again, the reason I'm showing you this is because no part of this platform ever changed. No other window popped up. No other box popped up. It's all right in front of you all the time. Whether you're looking at your positions, you're going to a trade page, if you do like things like, for example, if you like to look at charts, it has charts. We have actually two different charting packages on here, and you can see either one. If you want to follow everything that we do throughout the course of the day, you can follow every single, just click on me, and you can follow every single trade that I've made today. So we show you lots of things that other brokers don't show you, but the purpose for this all is just to provide as much content and context as we can to everything that you're considering doing. So again, just as a little bit of a repeat, because I don't have enough time to get into a lot of complex strategies, but I want to show you how easy it is to do on the platform as well. But what the platform allows you to do is to take a trade. Like if I wanted to trade Facebook and I wanted to trade, just as an example, sell some call spreads in the bonds, I can do that from a single platform. They are non-correlated positions because Facebook and the bonds are not correlated. Or if I wanted to trade the Aussie dollar and I wanted to trade the Aussie dollar versus Microsoft, a put spread in Microsoft, who cares? The platform lets you do everything in any quantity, in any account type, including digital assets and everything else, from one single look on one single page at record fast speeds for retail investors. That's why this is the fastest growing platform in the world. And that's why this is the platform that is almost 97, 98% options, futures, and options on futures and digital assets rather than it is stocks. Because as great as stocks are, they're ridiculously expensive. And so what most individual investors are gravitating towards is alternative strategies that allow you to be much more capital efficient. Let me give you a simple example here. I have Facebook up, so I'll use Facebook as an example. Facebook's a $258 stock. So if you wanted to buy 100 shares of Facebook, it would be basically, let's just call it $25,000. Okay, $250, 100 shares, $25,000. So that's a very expensive use of $25,000. But let's say you were a little bit, bearish in Facebook. It's down $5. Let's say you're a bearish in Facebook. So rather than use $25,000, let's say you wanted to use, I don't know, $5,000 in Facebook. So that'll give you the ability to do 20 shares of stock. Well, what can you do against 20 shares of stock if you wanted to buy $5,000 or sell $5,000 worth of Facebook? The answer is nothing, because you can't spread off 20 shares of stock. It's not a round lot. It's what we call a static trade. So it's very uninteresting to us. But let's say on the other hand, hey, you know what? Instead of using $5,000 to trade 20 shares of Facebook, let me just open up a few more options. Let's do the equivalent, and I don't know, let's do something like, let's sell a call spread in here. We'll sell the 265 calls, which are $7 out of the money. And let's buy the 285 calls, which are $20 away. So this call spread, if I do it one time, you can see the delta here. It's 20 deltas. Okay, 20 deltas is the equivalent of 20 shares of stock. So if I was to go out and sell 20 shares of stock, I have to put up $5,000. Or if I want to be fully margined, I have to put up $2,500. Instead, if I want to go out and sell a call spread, which has the theoretical equivalent of 20 shares of stock, I have to put up the difference between the strikes, which is 265, 285, $20, or $2,000 minus the credit I receive, which is $6, a little over $6, let's just say. So the amount of capital out of pocket is $1,400. This is the theoretical exact equivalent of selling 20 shares of stock. So you sell 20 shares of stock, you put up $5,000, or you fully margin it, you put up $2,500, or you use an out of the money call spread for 20 deltas and you put up $1,400. I mean, it's easy for me to see. They are the exact same position at this theoretical moment. They're exactly the same. As soon as you understand that, the real power of finance comes to light. The real power of finance comes to the forefront, and then you can make a lot more decisions. So why is it important to make more decisions? Well, we talked about the processing speed, but why else is it important to be able to be capital efficient? And the answer is because capital efficiency lends itself to being able to do more things because you have more money. And when you have more money, you can make more trades. And when you can make more trades, you can trade small and you can trade often. And when you can trade small and you can trade often, you put what we call law of large numbers in your back pocket. Law of large numbers is what keeps us around. The biggest mistake individual investors make is they trade too big. So how do you trade smaller if you can't be capital efficient? Can't be done. So what ends up happening is most individual investors are only successful in bull markets because all they know is inefficient use of capital. Bull markets make heroes of everyone. If we're not in a bull market for the next however long it is, then all of a sudden things get a little hairy. And if you don't understand how to be capital efficient, you cannot be part of that next generation. It's just not going to be doable. It's not going to work. It's going to be too damn hard. So I bring all this stuff up, and I have to bring it again to the forefront because so few people talk about this. But the ability to be capital efficient, regardless of the instrument that you're using, and to understand how one thing equals something else, to have all the Greeks right in front of you, to have all the probabilities of profit. Probability of profit on this trade, 66%. You know what the probability of profit is on a static trade? 50-50. Probability of profit on what we call a dynamic trade, 66%. Probability of making 50% of max profit, 75%. All these kind of mathematical calculations, Monte Carlo simulations and everything else built into a platform, all for your benefit, all from a single view. That's what the next generation has to look forward to. Amazing, fast technology, access to all marketplaces, access to all strategies, and access to content that explains why this all works or how it can all work. Because no matter what we want to say or understand or anything else, there is no theoretical edge in anything that we do. There's no negative edge, but there's no theoretical edge. There's no positive edge. So when we go out there and we look at, hey, what's happening in the marketplace? Okay, we are essentially looking at a marketplace that we're competing head on with tens of millions of other people. There's not much we can do except know what our mechanics are and know how to optimize those mechanics to give ourselves, whatever edge we can possibly get from just using those mechanics. Now I'm just looking at my screen here to make sure. Okay, so that's a lot of stuff to inhale in 35 minutes. Now I'm going to slow the pace down here a little bit because I think I threw maybe a little bit too much at you, but I don't know everybody that's on, and there's a really good audience on today. Let's see, we have. Yeah, there's a couple, almost 300 people on, so that's just an awesome crowd. So thank you guys so much. Just so you know, my email is tom@tastytrade.com. So I'm tom@tastytrade.com, and I answer all my own emails. I'm always around. I spend my life answering customer emails. So if you have any questions or you have any, or you want to reach out on anything, I'm happy to answer anything directly, or you can email support@tastytrade or support@tastyworks. tastytrade is our content machine. tastyworks is our brokerage. We also have an ecosystem where we have Doe, which is another brokerage we have that competes with some of the free apps. And then we have Luckbox, which is our magazine, and a variety of other companies. We launched the first new exchange, futures exchange for retail investors this past year, called the Small Exchange. You should check it out. You can only trade small exchange products on the Tasty platform. Well, you can trade it on the IB platform too, and Tasty Trade. And then we're the only platform that offers integrated digital assets into a front end complex brokerage platform. So you can trade, any kind of digital asset that you want as well, all from an single integrated interface, all without having to move capital or do anything on your own, all from one click, same interface, same look and feel. And we take it a couple of steps further. And let me show you. So let's say you're looking at this platform and you're going, well, this is kind of cool, but you know what? I'm a more visual person. Well, we also show you everything in a visual layout. So if you want to see everything inside of a distribution curve, we'll show it to you inside of a distribution curve. The green, this is a short position. So the green is where you make money. The red is where you lose money. You lose money to the upside, make money to the downside. We'll show it inside of a normal, or actually a log normal distribution curve. And we'll give it to you in a sense that you can kind of visualize it. Where will this stay 68 or 70% of the time? Where will it stay, inside of two standard deviations 95% of the time? And it will kind of give you that real sense of, okay, I get the math behind what they're doing right here. I get that this trade has a 65% probability of profit. So why wouldn't I want that? Well, the reason it has 65% probability of profit is because you have limited profitability. And if you naked shorted some stock, you'd have unlimited profitability by definition. So that's the difference. You trade a little bit of profitability in return for a higher probability of profit. You give up a little potential profitability. Anyway, I just wanted to give you a quick little view of the curve mode. The other part to this platform is that inside of the table mode, which I originally showed you here, this is all configurable. And the beauty of it is, let's just say you wanted to sell a call spread and you're like, you know what? I kind of like this, but I want to go further out of the money because the market's oversold today. So in case Facebook rallies, I want to go further out of the money. So here, I just moved the strikes up. And instead of the 65.85, it's the 80.85, and I didn't have to type anything in on the page. But let's say, you know what? I'm a little more bullish, but instead of selling an out of the money call spread, I'm going to delete this. I'm going to sell an out of the money put spread instead, because I think they're going to rally up a little bit. So I'm going to sell an out of the money put spread. Same interface, don't have to do anything. Don't have to change anything, don't have to type anything in, don't do anything. Instead of a 5-point wide put spread, I just drag that down and have a 10-point wide put spread. Instead of a naked put spread, I'm just going to sell a naked put because I'm bullish in Facebook. Instead of a naked put, I'm a little bullish in Facebook, but I also not that bullish. I'm going to sell a call spread above along with a naked put. No problem. You can do whatever you want. You can customize any kind of spread you want. This is what we call a jade lizard, selling a naked put, selling it out of the money put spread. If I want to buy this call here, that's an iron condor. If I want to widen these put strikes, that's a skewed iron condor. If I want to add contracts to this side, make it 2 puts and 1 call, go ahead. That's a ratio iron condor. All of it is doable on this platform without you guys having to type in one thing down below. And all your Greeks pop in here, no matter what you want to do. So you want to know what the probability of profit is on this iron condor? 52%. You want to know what the probability of making 50% of the $3.99 that you'd be collecting using Monte Carlo simulation? 69%. You want to know what the deltas are on this platform? If I did this trade 5 times, it's the equivalent of being short 7 shares of Facebook. All this stuff right in front of you without ever going to a different page on the platform, all of it you're looking at the entire time. That's pretty cool. And if you wanted to see kind of all the different trades you've made today, they're right over here under filled orders. If you want to see your Facebook position, this account currently doesn't have a Facebook position, but if you wanted to find something where you have a position in it, it would all pop in right here. There's a small chart up here. There's quote details here. The position details are here. Everything you do trading wise is here. And this watch list continually changes to whatever you want. You can pick any one of literally hundreds of different watch lists, and they're all configurable on the platform. And then you just close this up and you can see whatever view or mode or anything else that you want. And so when people ask the question, well, how do I trade all these different markets? How is it possible that I can trade all these different markets and I can trade all these different markets and all these different strategies and with all these different volatilities and measure all these different liquidities, and it's still from a single platform without having to spend a dime buying anything? No newsletters, no outside services, no nothing. And you just pay for what you trade, and the trading commissions are free to close everything, and you just pay to open a trade a tiny little amount. They're next to nothing, trading commissions. It's scary. And let's say you wanted to go on the platform and you're like, hey, you know what? This is cool, but I want to sort. I'm only trading highly liquid stuff. So you sort by liquidity. And you just click on this, and there you go. You're sorting by liquidity. So this is just a quick little view of how to sort by. This is 4-star liquidity here. Okay. Let's say you wanted to sort by IV rank because you wanted the highest implied volatility rank, which is a measure of implied volatility against itself over the last 52 weeks. So you just click on that column, and here you go from high to low. So spot, Twitter, these are the highest IV ranks right now. And if you wanted to see the lowest ones, you just double click on it and you can see XLI, Penn, down the road. These are positions you might not want to sell any premium in because you want to be careful there. The point I'm making here is that everything is really right at your fingertips from a single platform. Then you just click on trade, boom, you're right back to where you were. There's nothing else like this in the whole industry. And the reason I hope everybody brought me on today was just so, when we talk about the next generation of traders, we talk about you have to have the right technology. You have to have the supporting content. You have to have the right fee structure, meaning that you have to be able to do it. You have to be able to do it in the right account type. So you have the right account type, right fee structure, the no limitations, no restrictions, access to all products, and cool content and cool technology to get you there. That's going to power the next generation and future generations of traders. Thank you all so much for listening. That was a very fast, 43 minutes. And I hope you got a lot out of it. I mean, I threw a lot at you. I know it's a little heavy. I'm not sure anybody else is doing exactly this today with you. So hopefully you enjoyed it. Tim, all good?
Oh, all good. I'm just impressed you could keep talking like you did with all these trades going off with what the market's doing right now. I'm impressed.
Yeah, well, I'm a junkie. I can multitask, with all the, we're very active. We trade literally hundreds of times a day. I mean, ourselves. So, so it's kind of just like, welcome to my world.
Yeah, that was awesome. Thank you so much. We really appreciate it. And, all this is free, but now that I have your email, I might be selling that, make up some of the money that we have going out. No, just kidding. How nice it was for him to give you his email, tom@tastyworks.com.
No, Tom at Tasty Trade.
Sorry, Tom@tastytrade.com. Thank you so much, Tom. We really appreciate you stopping in today.
Sure. Thanks so much for giving me the opportunity, and good luck, everybody.
Thanks. All right. Fantastic. Well, is your head swimming? I know mine is. Trying to keep up with all this. Our next speaker is due up. He is the Director of Client Training and Education with TradeStation. He started his career with TradeStation in 1999 as an account manager for the International Resellers Division. In 2003, he started managing the TradeStation Client Service Department, where he's currently involved in developing learning materials and delivering platform training to TradeStation users worldwide. His name is Jesus Nava. Yes, I think I said that right, and you'll have to correct me if I'm wrong, Jesus. He will be speaking with us on trading strategies using technical analysis and statistical modeling. We're all ears.
Hey, how's everyone doing? Thank you for that introduction. It's always a pleasure to meet an audience like you guys and talk a little bit about TradeStation and what is it that we're doing to help you guys, make the right trading decisions. So as it was said at the beginning, my name is Jesus Nava. I have been with TradeStation a very long time, and it's been over 20 years already. And at the moment, I'm broadcasting live from the city of Medellin, Colombia. Beautiful city out there. And not from here, but originally from Venezuela. But I've been with TradeStation so long that I feel like it's my family already. So thank you guys for being here. As it was pointed out, we're going to talk a little bit about the statistical modeling, and we're going to use strategy trading for that functionality and the technology that has been built into TradeStation and that anyone can use. Let me go ahead and share my screen for a moment. See if I can do that correctly here. All right, this is my PowerPoint. Let me go ahead and get rid of my video and get rid of my controls so that you can see my screen. Hopefully my computer will cooperate. Seems like my Zoom wants to crash on me. Give me just a moment. Oh, that's what happened.
We're glad to know that our country isn't the only country that this happens to. Obviously, we're having some technical issues right now, everybody. Just give us a couple minutes. We'll get it back together.
Okay, you guys can hear me? Sorry about that. Let me
Yes, we can
start.
hear you.
Okay, I've been connecting through my computer for continuous days without any hiccups, and all of a sudden, I have to do a formal presentation and Zoom just crashes on me. So I apologize for that. Let me go ahead and get my screen up here one more time. And I appreciate your patience. Let's go ahead and get started in just a moment.
You better be careful. Geoff, who talked about computers earlier, might be calling you to set up a better one for you.
Well, you know what? I have been complaining about this computer for some time already, and I think this is just an indication that maybe I just need a new computer. So great. All right. So trading strategies using technical analysis and statistical modeling. Before we get started, and I'm going to jump right into the content. I had a short introduction, but I'm just going to skip it since we only have about 40 minutes left. So just to keep everyone informed, every symbol and idea that we talk about in this presentation is for educational purposes only. It is not a recommendation of TradeStation. Also keep in mind that active trading is not suitable for everyone. And if you're trading options and futures, they have risk. If anybody would like to read more about these disclosures, please visit our website at tradestation.com and you'll find all the disclosure information there. One important fact is that past historical performance does not guarantee future results. We're going to take a look at some historical performance and just be aware that you have to continue to test and work on a strategy to make sure that you have something sound. Let me switch over here to TradeStation and show you some of the technology that TradeStation has worked on for many years to allow you to test trading ideas and see if it's something that you would want to trade forward or not. I have here in front of you a chart of Intel. That's the symbol that I just picked. It has a 30-minute time frame, so you see 30-minute candles right on there. And I've loaded about 1 year worth of historical data. We have a great historical database here at TradeStation, and you can load years and years of data for any instrument that you can trade. Here, I've also added a Bollinger Band. Bollinger Band is an indicator that many of you may be already familiar with. I'll give you a brief concept of what it's looking for so that we can talk about our entry and exit signals. The first thing that you see here in this Bollinger Band is the gray line that is right there in the middle. The gray line is just a simple moving average. And what it does, it takes 20 of those candles, takes the closing price of those 20 candles and creates an average. So we have a smooth average line across the price activity of Intel. In addition to that, this indicator is going to calculate standard deviations from that average. And it's going to do 2 standard deviations above and 2 standard deviations below. And that's exactly what you see represented by the blue and the red line, which means this. Using standard deviations, we know that most of the data points are going to fall within the channel. In fact, statistically, 95% of the data points are going to fall within the channel. And when I say the channel, I'm talking about between the lines, between the red and the blue line. Every so often, the price activity is going to reach an extreme. So whenever you see these peaks on these candles penetrating the upper band, it's reached an extreme, and it's very likely for the price to bounce and go in the opposite direction. Now, sometimes, when you've reached these extremes, the price activity may continue to be on that same extreme for several candles. So it may not reverse automatically, as you can see right here on Intel in the day of March 11th. But sometimes, when it returns inside the channel, we have this very interesting bounce in the opposite direction. Sometimes it reaches the middle line, which is the moving average, or sometimes it goes all the way down to the other extreme, which is the red line. So what we're going to do is we're going to test a trading idea based on this concept. And the idea is the following. When the price reaches the extreme and it returns inside the channel, we're going to take a short trade, thinking that the price will continue to come down and we want to capitalize on that. And when the price activity reaches the bottom side, meaning that it penetrates the red band and it goes to the other side, but it returns inside the channel, that's when we're going to take a long trade, thinking that the price will continue to go up, and we're going to capitalize on that. Now we can sit here and try to pinpoint wherever that strategy idea would have made sense or not. For example, over here would have been a great trade. You can see how it went to the extreme. It returned inside the channel and the price dropped all the way down to the bottom band. So this would have been a profitable trade if we had been short. The same here. You see how the price activity penetrated the bottom band, went inside the channel. We would have gone long, and this would have been a wonderful trade to ride over here to the other side. So by looking at the chart visually, yes, we can pinpoint every single trade that the strategy would have generated. But TradeStation has this ability for you to put those rules into a strategy. And you don't have to sit here in front of the chart and try to pinpoint where the strategy would have bought or would have sold. You can let the strategy do that for you. Let me go here to the list of strategies. I'm going to go to studies and add strategy. I had something ready for you already, but I had to start from the beginning again. So let me go ahead and set it up for you guys. With TradeStation, there are dozens of strategies that are built in based on popular indicators. And one of those ideas is the Bollinger Band. I'm going to select both strategies. We have two of them because one is going to take care of our long entries and the other one's going to take care of our short entries. And for now, we're going to continue developing this strategy. For now, we're going to let the strategy reverse itself. So it's going to go from long to short, from short to long, and continue to do that back and forth, flip us on that position. I'm going to click OK. The strategy will go on the chart here. All right, let's go ahead and click OK. I'm just going to use the default settings. And as you can see, when we put the strategy on the chart, the strategy finds every single area where the strategy would have bought and would have sold. Take a look at the strategy we pointed out earlier. You can see that there's a red arrow in there. The red arrow just represents a short entry, and the fact that it says -100 just means that you're short 100 shares. Of course, you can change the number of shares. You can change many things about the strategy. We're just going to use it the way that it comes out of the box. And you can see that that signal is connected with this blue signal, which is my long entry. Long entry because we met the criteria for the long entry. But you can see how this strategy is reversing you from a long, this is a short, I'm sorry, from a short to a long to a short again. And every signal is connected with a dotted line letting you know if the trade was profitable or not. So we can see that that trade that we pointed out earlier was profitable. Then we have another profitable trade here. Of course, the strategy is not always profitable. We have a losing trade right here. Notice how on this breakout, we get a short entry, and instead of the prices bouncing and going down, the prices actually went up. And it wasn't until we reversed and went long that we got out of that short trade, making it a losing trade. And if I scroll back here, you can see that historically, the strategy is going to find every single instance where the strategy would have generated an entry and a short entry and a long entry. It happens on all the data that you load on the chart. If you look over here on the left side of my chart, I'm going to click and hold, and you can see that my graph, you can see the date right there in that little box that popped up. It says February 25th, 2020. So we have one full year of 30-minute data for Intel. Let's go ahead and take a look at other things we can do here. I'm going to scroll to the very front of the chart. Clicking over here on the right, I'll just drag the scroll bar over all the way to the right. Once you have a strategy on the chart, there is a compiled report that you can pull up to measure the performance of this strategy. Because yes, I can sit here and see if a line is blue and if a line is red to identify losing and winning trades. What better way to have a full report letting us know what happened to the strategy? I can come here to the data tab, click on strategy performance report, and this is the report that would tell us everything that happened to the strategy. There's a ton of information here in this report, so we'll go and highlight some of the things that I like to look at when testing a strategy. And remember, this is a historical backtest, a very unique scenario, which is Intel on a 30-minute time frame. Let me go ahead and resize my performance report so we can see more of it. At the bottom of the report, you see multiple tabs. We are on the performance summary tab. And towards the top, you can see that the report is divided in columns. We have all trades, long trades, and short trades. And it tells you the performance of each one of the trades. Let's take a look at this column, the very first column, which is all trades combined. We can see that we have a total net profit of $3,400. We can see the gross numbers. The gross profit was $8,000. We had a gross loss of about $4,000, giving us a net of about $3,400. That's exactly what it's telling us. Profit factor is one of those values that I like to take a look at just to see how much money am I making compared to how much money am I losing. So what this tells me is that for every dollar that the strategy lost, I made $1.72. So I'm above water. I'm on the profitable side of the strategy. It gives you the total number of trades. So in about 1 year, we had 80 trades for Intel. 66% of those trades were profitable. It tells you the number of winning trades and losing trades and some average, net per trade. So the average net profit per trade was about $43. Here we have the largest losing trade. I usually take a look at largest winning trade and largest losing trade because it's very telling to know exactly the makeup of the strategy. If I were to come here and look at the largest winning trade, which at the moment is $866, I want to know what percentage of my net profit was made by one single trade. Because if you're depending on the strategy being profitable just because historically one single trade was the reason why you made that amount of money, then you're very likely not to succeed going forward. So we want to make sure that this number does not make up a big chunk of our total net profit. Also, the largest losing trade is important because it may indicate that we have to work on that side of the strategy and say, how can we limit our losses or make sure that we don't generate losses this big? This $511 is not as big as I've seen it in other reports. But remember, this strategy has no risk management yet. I haven't put in any stop losses. I haven't put any way of limiting the losses for me. So technically, I'm open to whatever the market wants to do with me because I have no management in place. And we're going to work on that. And I'm going to show you some things that you can do on the strategy to make it perform better. Here we have maximum consecutive losing trades. This is another thing that I look at all times. If you are in the process of designing a strategy and you find that the strategy historically lost 3 times in a row, that could be very significant. 3 may not seem like a very large number, but every one of us has a different risk tolerance, and everybody responds differently to losing trades. Sometimes, you may experience a losing trade and you're okay with that, but then if you have a second trade that loses right after the losing trade, then you start thinking about what's happening, right? And if you have a third trade that loses immediately after the second losing trade, then you start, getting a little bit freaked out and you say, what's going on here? Is the strategy not working? So always look at the consecutive losing trades or how many times the strategy has lost consecutively to see if that is something that you can trade through. Because a lot of people are going to give up depending on how many losing trades in sequence they have. 3 is not that big. I think everyone here can tolerate 3 losing trades in a row. Maybe not at the beginning, because that's another thing. If you turn on the strategy switch and you say, okay, I'm going to trade this strategy, and the first thing that happens is that you lose 3 times in sequence, because it is possible that you're looking at a historical back test. The back test is telling you that it lost 3 times consecutively. It's very possible that when you turn on the switch, you're going to lose 3 times consecutively. Are you ready to tolerate that? Are you ready to say, I'm just going to stick through, I'm going to plow through, I think I have confidence that the strategy will work? Everybody has a different tolerance, and this is going to turn into a psychological barrier to trading any strategy idea. We have a ton of information here, as I said at the beginning. So I want you guys to look at all the information here, especially, drawdown. The fact that we lost, $511 was our largest losing trade. That's okay, but that's not the most important factor. The most important factor is our drawdown. Max trade drawdown right here was 719. So at one point, one of our trades was losing $700. And that's another thing, you know, are you able to just let the strategy do its thing if you see a trade that is losing so much? You know, so these are values that everybody that's designing a strategy needs to look at in order if you have found a strategy that you can trade going forward. Taking a look at some of the tabs here that I also like to take a look at. Trade analysis just gives you some additional information on the ways that the trades were generated. I like to look at the trade list. This is a trade by trade list of everything that happened in the strategy, the date, the time that the strategy bought and sold, or sold short and bought to cover, the individual P&L of every single trade. If I make this window a little bit larger, you can see that it goes on and on about providing information on that strategy. And then you have periodical returns. Sometimes I turn that on to see how much profits or losses are generated per period. Here is set to annual, but if I do it on a weekly basis, you can see that you can see your weekly paycheck. You know, you can see how much money you've made and how much money you've lost per week, which is interesting. Notice how this 4 weeks in a row, we lost money. You know, starting December the 20th, we lost 161. Then we lost 277, 166, 307. So we go back to the same idea of losing trades. Here we have 4 consecutive weeks where we didn't make any profits. That's something that we have to look at and see if we're able to trade and tolerate that. If we change this into a monthly, we can see our monthly paychecks and of course our givebacks. You know, this month of May, we lost $311 or $310. Okay, and of course, the performance graphs. This line looks very faint on my screen. Hopefully you guys can see it. This is your equity curve. This is where your money is going. We want that line to shoot in a 45-degree angle or better. Most of the time, if you see a very straight line going in a 45-degree angle, you know, if it's too good to be true, it's probably because it's not true. But here we have something that is out of the box. We have it on Intel. It seems like it's a very good equity curve. Every time, I'm not sure if you see the green dots on that green line. I mean, on the line, we see some green dots. The green dot just identifies every time that you make a peak in your equity. So every time that you make more money than you had before, that's what you see, the green dot. And that's some of the graphs that I take a look at in order to see the profile of the graph. You know, here's an area where I would have to pay attention to. You know, we started making, at the get-go, we lost some money, but then we started making some money. And at this point, by trade number 15, we kind of just, you know, lost some equity and went sideways for a while. And it wasn't until trade 31 or 32 that we actually made a new peak. So this is another area that we have to think about and say, what would happen if I had to live through this? You know, if I went from my 15th trade all the way to my 30th, we're talking about 15 trades that you're taking a look at, and you haven't made any new money. You're just going sideways in your equity. So it's things to think about and analyze yourself and ask yourself, am I able to trade through that? Another thing is that this is a performance graph that tells you from the very beginning of the chart to the very current day. But when you turn on the switch to trade a strategy, you can fall anywhere inside of this equity curve line and experience whatever it's shown here. So let's say that you start at this level right here on trade number 65, and all of a sudden you have this drawdown on your equity. Are you able to tolerate that? So it's all nice and dandy when we look at the performance report and we say, hey, it made money. So if it made money in the historical performance report, it'll make money going forward. That is not the case in strategy trading. So there's a lot of other performance measures that everyone needs to be looking at. Okay, let's go ahead and take a look at some of the tools that we have available in order for you to manage this strategy. I'm going to go here to studies, add strategy. And I'm going to use something simple. I'm going to use a stop loss, just a stop loss. Doesn't have to be something crazy. So let's see, we have a built-in stop loss. I'm going to combine it with my Bollinger Band strategy. Okay, it'll get me here to the configuration of that stop. I have to decide where is it that I want to get stopped, right? We, from the performance report, we know that the largest losing trade, if you guys recall, it was 511, right? So let me go and double click here. And there's two ways that I can calculate the stop loss. I can do it on the position, or I can do it on a per share. When the position basis is set to false, means that any value that I supply is going to be calculated per share. Let's suppose that I'm going to set my stop to 2.5. So I know the largest losing trade was 511. If I set my stop loss to 2.5, what that means is if I'm trading 100 shares, that would be a $250 stop. So that's exactly the calculation that I'm looking to apply, and we'll see how it affects our performance. We'll see if it makes it worse or if it makes it better. Let's go ahead and click OK, and click on Close. So let's take a look at areas where the stop was triggered. Right here, you see where the strategy penetrated the blue band. When inside the channel, we have a short trade. Short trade, but the price did not go down. The price actually went up, went in the opposite direction that we anticipated. And on this bar, you can see how the stop loss kicked in. You see that? The stop loss is a white arrow, and the 0 just tells you that you're flat. But a couple bars later, we are short again. The actual strategy generated a short trade, and that time, it took a couple days until the reversal to reverse us. Okay, we can work with a profit target and a trailing stops and all those different types of strategies, but for now we're just going to use a stop loss. Okay, let's see. Okay. Excellent. Let's go ahead and take a look at some other things we can do here. I was just looking at some of the questions that we're shooting in, and I wanted to make sure that I was addressing any questions if there were any. Performance report. I have my stop in place. Let's go to data, strategy performance report. My equity curve, you can see that it changed a little. In fact, it changed a lot. Let's see what my performance summary says. At the very beginning, I had $3,400 in net profit. Right now, I have $2,600. My profit factor went down. I have far more trades. The percent profitability went down. My largest losing trade is actually bigger than it was before. And some things that I don't really like here from the get-go. So the 2.5 that we specified for the stop loss didn't actually help our strategy at all. So there's some work that needs to be done. I can go in there and try to change the 2.5 to something else. I can choose another number, but why not use a technology that's part of the TradeStation platform called the optimization that can tell us what would be the optimal stop loss amount for my strategy trade. Let's go ahead and do that. Let me go ahead and go to studies. Oh, and by the way, before I even go there, you guys saw that my largest losing trade actually increased. Let me go back in there so we can point it out. This largest losing trade, I think it was 511. Right now it's 608. Why is that? Because remember, even though you have a stop loss of $250, it doesn't mean that every single trade is going to be stopped at exactly $250. Remember that there are gaps in the day, and even if you have a stop at $250, if the price gaps, you're going to get the best price available after your stop is triggered. And if that price is unfavorable to you, that's exactly what you're getting. In this case, I'm pretty sure that losing trade of $608 it was because of a gap. Let's go ahead and take a look at the trade list. I'm going to see if I find it here very quickly. So this is my net profit. Let me see if I can scroll here through the trades. And if I don't find it quickly, most of the stops, you can see that they're 250, 250. Here's one that's 308. Here's the one, $608. It happened on January 12th, 2021. If I go there, let's go to January 12th. Oh, too far. Here it is, January 12th. Here it is. You see, based on the strategy, we went short. What happened here? A big gap from the 12th to the 13th. It gapped up, and the best price that it could get us out was that opening price on that candle. It stopped us, but it generated a loss of $608. Let's go over here to what I was going to do in regards to stops. Let me go to studies, edit strategies. I'm going to select my stop loss, and I'm going to customize it. And in here, I'm going to select the amount, and I'm going to click on optimize. So I'm going to supply the strategy a range of values that I want to test. And I want to test from $1 all the way to $10. Now, $10 would be a $1,000 stop loss if we're trading 100 shares. But I want that to be tested in increments of 25 cents. Actually, that's too small. Let's do 50 cents, which means that it'll test $1, $1.50, $2, $2.50, $3, all the way until 10, and tell me which value would have been optimal for my strategy. Let me click OK, and then click on OK here. This will generate a series of 19 tests. Not many. It's just going to be these are 19 different stop loss amounts that it's going to go through. It's going to apply it to the strategy, run the performance report, and find the one that generates the best net profit. Let me click on optimize. All right, that's going to run on my computer. It's going to take a few seconds. It's a year worth of data, so it should run very quickly. And I wanted to keep, my tests small so that we wouldn't have to wait for my computer to give us the results, okay? Let's see. The strategy automatically takes on what the optimal stop loss value would be. If you want to see it, let's go to studies and edit strategies. And you can see that here, the stop loss amount that was optimal, or the most optimal, was 9.5. So almost at the edge of a range. It's almost 10. It found that 9.5 was the optimal value. Let's go ahead and click on the data button, because when you do an optimization report, when you do an optimization, TradeStation generates something that's called the strategy optimization report, which I think it's great for anybody that's developing a strategy, because you can see all the different variations of parameters and what the result would be. Let me go here to the strategy optimization report. There's a lot of numbers here in the report, so let me go ahead and make this, let me maximize it and make the font bigger. I think there's a little button here that allows me to make the font bigger. Maybe I'll just go here to customize window, and I'll make the font a 14 and bold. Okay. All right, so hopefully you guys can see the numbers better. Over here on the left-hand side, you have the input or the parameter that you tested. And notice that it started all the way at 1, and it went all the way to 10. And you see the test number, we have a total of 19 tests. And you can see the total net profit that each one of those tests generated. The one that is highlighted in gray is the one that generated the most net profit, and that's the one that is automatically applied to the strategy. But here we can see and sort the result by other performance measures. By default, it uses net profit, and you can sort by net profit to see which one is the one that shows or has the most. But here, let's say, for example, that we're looking at profitability. Here, let's see, we have number of trades. If I scroll to the right-hand side, oh, here it is. I was looking for percent profitability, but here it is, percent profitable. If you double click on the column header, it sorts the values. It sorts the values in ascending or descending order. Here's ascending from the least 48% to the highest, but you can do this. You can do this by any of the fitness factors that are here. So let's go ahead and take a look at what that did to our performance report. Let's go to data, strategy performance report. I'm going to switch back to my performance summary. Okay, we're back on the same area that we were before, $3,400. Maybe a stop loss is not the best way to manage the risk on this strategy. Notice how we have the largest losing trade. I'm pretty sure that was a gap, but our performance graph looks very similar than the way that it did before. So maybe I opted for the strategy that didn't work. You know, when you do something to a strategy and nothing happens, then you start rethinking, was that the best option for this particular strategy? Maybe I could have picked something else. Maybe a trailing stop would have given us better results. Who knows? But then this is a great technology for you to sit here and try to determine what is the best way to manage my risk. The good thing about this, the good thing about adding a stop is that we're not open to the market and what it wants to do with our trades. You know, we have a stop in place. So if the market goes sour for us, if it goes against us, at least we have something to limit our losses. Maybe not limit them if there's a gap, but at least, you know, you have a way of exiting and not losing your capital without any limits. Okay. So let's go ahead and take a look at some other functionality here before I end with this class. Let's see if we can go to and do something here different. I'm going to go to edit strategies. Let's go to the stop loss, and I'm just going to turn it off. I'm going to click on status here to turn it off. And I'm going to go to studies. I just want to see the difference if I were to just insert something like a trailing stop. I'm going to use something called dollar trailing, something simple. Just trails by a certain dollar amount. Okay, here is set to 1. I'm going to set the trail to $2. Is that too much? Let's set it to $1 and see what results we have. I'm going to click on close. All right, and take a look at trailing stop kicking in many times. We see them here once, twice, 3 times. How did that affect the report? Strategy performance report. Oh, many trades, but it did significantly change our performance. Let's go ahead and take a look at the performance summary. Okay, the total net profit, of course, went down. That's really not a bad thing. You know, when you look at net profit, some people, when they are developing a strategy, that's all they look at, you know, net profit. But I want to be able to look at other performance measures that actually make a strategy tradable. Yes, the profit factor is kind of really low. 1.17 is kind of a break-even strategy. It's almost 1. You know, you lose $1, you make $1. Here, I lose $1 and I make $1.17, which is not much. And the percent profitability is 41%, not good. So again, I can go in here, go to studies, edit strategies. And by the way, I'm doing the actual exit here, but you can also optimize the entries if you want to. But here, let me go ahead and select that 1, click on optimize. I'm going to optimize 1 all the way to 10 in increments of 0.5. Click OK and optimize. Optimization is one of those things that everyone needs to be careful about, you know, because optimization is looking at all the historical data and picking out, you know, tops and bottoms. Everybody can do that. You can tell visually, say, if I enter here and I exit here, that's a profitable trade. When you use optimization, you're kind of doing that. So the one thing you want to avoid is curve fit your strategy to historical data so much that you don't have a strategy anymore. And going forward is just going to be very unsuccessful. If I go here to studies and I go to edit strategies, I just want to see what input value was selected. Dollar trailing again, 9.5, the same as the stop. If I go to data and I go to the strategy performance report, then this regenerates And maybe, we're back to square one as we started, so no changes made here. Maybe this is an indication that stop losses or trailing stops is not something that works well with a strategy like Bollinger Band. Maybe we need some more of a technical exit. Maybe we're looking at the Bollinger Band itself to get out of a trade. For example, we may use this middle line, the moving average, so that when the trade goes on, if it reaches, our middle line, we get out or something to that effect. We can use other technical rules in order to manage our strategy and manage our risk. This is just a very simple strategy that we're talking about. I wanted to show you what is possible with TradeStation. When you find a strategy that you're comfortable with, let me show you what other technology we have in place. I'm going to go here to Studies and Edit Strategies. There is a checkbox here under Automation. Yes, automation implies that you can take this strategy and automate it for execution, letting the strategy monitor the market tick by tick and decide whether it's time to place a trade or not. I'm going to check this box that says Generate Strategy Orders for display in Trade Manager. And there's this second box that says Automate Execution using your account. Now you have a disclosure here because it is very important. You're automating a strategy for execution, and that's it's very important that we are aware of the risks. I'm going to click on I agree, and this is with confirmation on. When you get started with strategy automation, it's important that you have confirmations on so that the strategy is not running by itself. So the strategy sees that it's time to put in a trade, and it's still going to ask for your confirmation before the trade goes through. And that sometimes is the best approach when you're just getting started with strategy testing. But once you're comfortable with the strategy and you think that you have something that is worth, turning on going forward, you can come here and turn strategies off. You get another little disclosure. This is very important as well. Click on I agree if you want the strategy to take over your trading and trade for you. And once you click OK, this way I have a fully automated strategy. So on the current bar where the real-time data is happening, if the price activity meets the criteria of the Bollinger Band or the trailing stop, which I have in there, it'll generate the trade automatically for me. In fact, you can sit here in front of the TradeStation platform and monitor the trades as they're being generated. So yes, there's a lot of technology, a lot of education that we're doing at TradeStation as well. Let me just show you a couple things before, because I know that we are reaching the end of my presentation. We are running 2 channels on one of our affiliates called youcantrade.com. So I want to invite everyone to visit youcantrade.com. TradeStation is hosting 2 channels, Getting Started with TradeStation and the TradeStation Masterclass. The TradeStation Masterclass is a premium channel. In the channel, we talk about custom strategies. We provide premium courses. We meet every single day live. Classes are interactive. You can speak to the instructors. All sessions are archived. And we have multiple Ask the Experts sessions where you can ask questions related to the TradeStation technology. So make sure you visit us at youcantrade.com. Remember that TradeStation hosts 2 channels in there. So thank you guys for your time. Thank you for being part of this event. And I want to thank you, TradeLog, for inviting me and giving me a platform to speak about TradeStation. Thank you so much.
Oh, you're welcome. Thank you, Jesus. We really appreciate that information. Did a nice job with that.
Thank you.
All right, moving on. We're right on time, which is good. Our next speaker is an experienced equity and options day swing trader and has been with Benzinga since 2019. He's going to come on and show how his own personal experience, how he's benefited using Newswire, how it changed his trading habits and allowed him to better manage risk and become a more successful trader. So we welcome to the presentation Mr. Ryan Faloona, and he will speak on how the Newswire empowers a new generation of traders.
Thank you very much, Tim. Thanks for having me today. Although I started with Benzinga in 2019, I was actually a customer of Benzinga for 5 years prior to that. For me, I loved the product so much that I said, hey, if there's ever an opening there, I'm set up to do support. I'm set up to help. Just let me know. They sent me a LinkedIn message a few months later, and the rest is history, as they say. So I'm incredibly excited to be able to present this. This tool, among all other tools that I've tried in my career, was the most helpful. It gave me an opportunity, like you said, to better manage risk and then turn myself into a better, more consistent trader. So I'm excited to be able to share all of that with you today.
Great.
Let me go ahead and share my screen here. You should be able to see a basic home screen of Benzinga Pro. If this is a little too small, let me know. I'd be happy to make it a little bit bigger so that it's easier to read. So like I had mentioned at the top of this, when I first started trading, I'm the regular Joe, like a lot of the people that are getting into investing now. I didn't get started trading because I bought GameStop or anything like that. I got started in trading because I really enjoy the financial markets. I've seen what the financial markets can do for one's wealth and for their financial independence. And it's always been very, very interesting to me. My formal training in college was management and finance, so I had a little bit of a head start, but I never really had any formal training on markets or trading or figuring out how you can actually make wealth in the stock market. I was all self-taught. And like most people, when you first start, you're looking for any edge that you can get. So I obviously used YouTube. I tried to teach myself technical analysis. I've got a bunch of different books on how to read charts, how to actually trade complex option legs. I've got books on trader psychology. It turns out that's often more important than technicals anyway. And there's a plethora of different sources that I use to try and mold myself into a better trader. And chat rooms were one of those as well. And one of the things that I realized is that if you're following someone else, you're really at the mercy of their risk profile, of their trade plan, and of their research. And it wasn't until I was able to get my own Newswire that I was able to feel confident in my own research and then apply that to finding new trades, managing the current trades that I was in, and coming up with a plan. So Benzinga Pro changed all of that for me, and for a couple of reasons. The first reason, if I had to select one reason as to why I chose to pay for this service prior to me working here, it would be the audio squawk. So it's super simple. If you mouse over this squawk button, you have an opportunity to turn this on and then adjust the volume, and that's it. That's how easy it is. And what this is our squawker, who you may know, he's been around for a long time. His name is Charles Gross. He's been actively doing this for over 2 decades, and he has a very, very sharp eye on what is important, what's market moving, what actually constitutes breaking news, and what traders actually want to hear. And the reason that was perhaps the most important feature for me is that it allowed me to be able to look at my broker, look at a different web page. If I was watching a YouTube video, if I was trying to plan out the next move of my trade, it allowed me to do all of that, but still synthesize the information that was coming through on a breaking basis. So it's just an audio feed, right? You turn your speakers on, even if you're in the next room doing something, or if you're putting lunch together, or if you're with your family, or whatever the case is. Now that we're all forced into our homes and all of that, whatever the case is, you have an opportunity to still react to that news. And that was very, very important to me. I also felt that news wasn't being presented with a slant. So that is to say, in a chat room, you might see news about specific plays, but that person might be long or might be trying to promote that particular stock. And as a result, they're showing you the good news, but not necessarily the bad news. And so once I got a Newswire, once I got something that was right down the middle, that would show me both the good and the bad, that really changed things for me. So this is Benzinga Pro. We just talked about the squawk feature, which was what really got me into the platform. But once I was in here, I started to discover some of the other features that helped me become more self-sufficient. And I think that that's one of the keys that we're talking about when we talk about empowering the next generation. I think that especially people that grew up with computers and all of this, they want to be able to figure things out themselves. Everyone wants to be able to make more money and improve their financial situation, but they don't necessarily want to be followers, right? They want to make their own system. We're seeing that with the GameStop fiasco. It's kind of like bucking the traditional system, if you will. And so Benzinga Pro kind of gives me all of that. Now, I just heard Tom earlier in his presentation. I actually wrote it down. It stood out for me so much. You have to have the right technology, he said. And I could not agree with that more. And that's really what Benzinga provides. So obviously, when it comes to the squawk, you're being fed information on a breaking basis. But there are a bunch of other tools that you can use to better position yourself and then better make better trades, make smarter trades, and overall lower your risk. So the heart of the Benzinga Pro platform is news. Benzinga itself is a financial news media company, and our goal is to try to make financial news media easier to consume and then easier to apply for the active trader. So the first tool we're going to look at here is going to be the newsfeed. This is going to be your basic screen where you can build out a workspace any way that you want. And I think this is important in and of itself because not every trader trades the same way. I learned quite a bit from people that were more experienced than me. And what I quickly understood was that all of them do this a little bit differently. And that's okay. There's not necessarily a right or a wrong answer. It's really whatever works for you. So the first thing I'm going to do here is I'm going to click on Newsfeed. And this is just going to go give us a basic newsfeed here that you might look similar to one that you see in your broker. But what separates this from the broker is the ability to filter this, right? It's the ability to cut out the noise. It's the ability to craft this into something that is important to you. And your own situation is going to be different than the guy next to you or the gal next to you or the person that you're communicating with over Twitter or StockTwits or whatever it is. And so the first thing that you can see here is there's quite a bit of information here. And you might think to yourself, well, boy, how do I go through all of this news on a daily basis? And that's a really, really good question. The way that I answered that question, I talk to a lot of the newer customers here. I run the customer success department, and what's most important to me is that the people that use this platform know how to use it. So I spend a lot of my time teaching people how to actually use it. And the big thing for me is that because everyone is different, sometimes those lessons need to be structured a little bit differently. So I often have to listen to what it is that they're trying to accomplish before I come up with a response and then show them how to do that. However, there are some things that I take away from many of these conversations. And the first is a lot of people are familiar with something specific, whether it be biotech, technology, maybe they're an options trader, maybe they've never even traded an option and they're just a stock trader, they trade industrials, or they're looking for something a little bit more long-term. Whatever the case is, there's going to be a way for this platform to help you. And the first thing that I would say is I want to cover some of the different sources that we have for news. So if you click on the sources button, you have control here over what it is that you want to see right from the beginning. And by default, the box that's checked here is the Benzinga wire. And the Benzinga wire is an aggregated news wire where we get all of our news from. So this includes stories that are broken on Bloomberg or Reuters or the Dow Jones Newswire or wherever it comes from. And again, the goal here is to allow a one-stop shop for traders to process that news and make informed decisions. So we don't want you to have to go to Bloomberg and then also get a Dow Jones Newswire subscription or all of these different newswires. We wanted it to be easy to use and just in one spot so that you can spend less time looking for stuff and more time executing or coming up with a trading plan. So the Benzinga wire is an aggregated feed that's going to get you news from a bunch of different sources. Benzinga signals is going to show you automated trades like block trades, unusual option activity, price spikes, things of that nature. We're obviously expanding into some other languages here as well. We have GG Press, which is Japanese-based news that's printed in English so that it's understandable. We have partner links. These are things like Seeking Alpha or TechCrunch or Guru Focus or something like that, where there's still important news to specific stocks, but they are not necessarily coming through on Bloomberg or Reuters or something like that. Then we have a press releases category, which is all of these different press release companies. So a lot of the times companies will issue news via a press release. That's the first time that it's made available to the public. And if you're trying to react to things like this as fast as possible, you need this information as fast as possible. And so this is API based. There's actually no humans involved in this particular source. It's just whenever one of these companies releases a press release, it's also piped into Benzinga, and you can filter for that. Our AI system tags different press releases with different categories, which I'm going to show you shortly here. And you can really kind of hone in on what you're looking for. You can really make a custom parameter for what you're searching for. And then that makes that news easier to go through. And you can actually spend less time doing that. And then finally here we have an SEC feed. And this is also an API-based feed. So this happens automatically. And while you can go to sec.gov and look up in the Edgar database right now, anyone can go do that right now. I actually find in my own experience, it's easier to find what I'm looking for within Pro. Part of the reason is because I'm already here doing other things and I don't have to now go away to a different website. I can access that exact same content right in here. So let's talk about categories real quick now that we have a basic fundamental understanding of some of the different sources in which you're going to get that news here. Now, the categories list, especially the first time that you look at it, this can be quite daunting, right? There's a bunch of different categories here. If you click on some of those categories, you actually have subcategories. Really not scary at all. Pretty simple. When you check some of these categories, you're only going to see news for the categories that you checked. So what that means is that when you check no categories, that's the same as checking every category. I'm not applying a filter. So this news feed is everything coming through here. Now, this is maybe too haphazard for me to go through all of this and find the necessary information that I'm looking for. But if I filter that, it might be quite easier. And I actually may be able to go through more information in the same amount of time or even less time. So if we take, for example, analyst ratings here, I am a long bias trader, which means days like today are quite painful. But nonetheless, if I'm looking to take on a new position, one of the things that might be important to me are initiations and upgrades. I may not care necessarily about price target adjustments because that analyst firm might already be covering that particular stock, but I definitely want to know if an analyst is starting coverage on a particular stock or if they upgrade that stock, say from a hold to a buy, something of that nature. So I could check the analyst ratings box and get all of the different analyst ratings news, but I can also specify what analyst ratings news I want. So in my case, because I'm long bias and I want to cut out some of this other stuff, all I'm going to do is select initiations and upgrades. And the other thing that you'll see here is that these particular colors are colored green. And I actually have control over that as well. I can make any category or any subcategory any color that I want. And it's quite simple. You just select the category that you want and you can adjust this colored bar here on the slider, and that will change the color of this particular news post. So if I'm going to go ahead and click done here just to show exactly what this is doing, you'll see that all of the news posts are green because I've only added the two categories that I've colored green. So if I click on this, you'll see the content, but also at the bottom, you'll see the different tags that are applied to this particular news post. And this is important because this, as you're watching news, as you're learning how to consume news and how to actually factor that piece of news into your trading plan, you're going to notice that some of these categories move stocks more than the other. Analyst ratings is one of those. So especially when I'm talking to newer users, one of the things I like to do is I like to say there's no there's nothing wrong with watching the news flow until you get a better understanding of it. When I first started, I didn't necessarily know what, if a PR came out about a company, I didn't know how that company was going to react. After I watched several of those, and after I kind of was able to take different keywords out of a headline or find different parts out of the actual story itself that seemed to be important, like important numbers, I started to realize how these PRs worked. And I also started to realize that not all PRs are created equal, right? Some PRs are actually quite fluffy. There's an intentional vagueness in how they're written. Some of the terms aren't disclosed. Some of the numbers are not finite numbers. They're either ranges or even they're not disclosed. So it was actually a nice learning experience for me to be able to determine, hey, this is important versus this really isn't important. I've seen this show and dance or this song and dance before. I know how this is actually going to react going forward. And so watching this news flow, getting a feel for some of these different categories here can really, really be helpful for your specific trading plan. And again, I can't stress it enough. Your trading plan might be different and most likely is different than the person sitting next to you. So let's go back to this categories menu here, talk about some of these other ones. In addition to being able to pick and choose what you want and also color what you want, there are many different topics that you can actually select. So for example, economics, this is definitely important. These are going to be some of the different economic numbers that come out, which of course can have an impact on the way that the market is trading or your individual stocks. We also have a general news category. And you can see here, although I'm not a biotech trader, I'm intrigued by biotech stocks because they often move quite ferociously. We actually saw this when coronavirus first started making headlines across the country here. We saw that companies that were involved in either testing, diagnosis, vaccines, anything like that, any of those headlines would cause those stocks to move. So even though I'm not traditionally a biotech trader, I still wanted to capture some of that movement. And I needed to teach myself how I was actually going to do that. How am I going to be able to discern what some of these different reports mean? I mean, I'm not a doctor. I'm not a scientist. So when you're talking to me about mRNA, I don't really know, what that means. Someone needs to break that down for me. And going through some of both of the reports that come directly from the companies, and then as well as some of the color that people would add to those news posts was very, very helpful to me and actually allowed me to make some of those trades. So what I did here was or what I'm demonstrating here is how you can actually select something that's very, very specific. In this case, we're going to go ahead and select biotech and healthcare. I colored them blue because they're similar, they're related, and I wanted these posts to kind of stand out. Remember, I had just had green for those positive analyst ratings. Traditionally, I'm a technology trader, so I'm generally going to spot things that are coming out about things like Apple or PayPal or Square or some of those other tech names. But for biotech names, I'm less familiar. So I want to be tipped off that, hey, right off the bat, this particular piece of news is about biotechnology. I know then that I'm going to have to do a little bit more due diligence. This is not in my wheelhouse, so to speak. So I'm going to have to do a little bit more poking around and figuring out before I actually decide whether or not I'm going to trade this. So you can see that there are a bunch of other categories in here that you can select. For the example, just to keep this brief, I'm only going to select a few here. Hot news, this is very important. This is things that are going to move the market. So an example of this would be some of the GME headlines that were coming out, the headlines for the GameStop short squeeze. Those were hot. It was being talked about all over the place. It was moving a lot of stocks. It was an entire basket of stocks, really, the highly shorted stocks that were moving. And so this is definitely a category that I want to put on. It comes pre-colored in red just to kind of stand out there. Mergers and acquisitions is another category that I really like to follow. When I was in my infancy of trading, when I had first started, I was watching a potential merger between Syngenta and another company. I can't remember the name of the other company. In any case, Syngenta was rumored to be bought out. And one day, I woke up and the stock is up like $30. I mean, it was like a $40 stock. It was up like $30 on these rumors. And I was like, boy, it would have been really nice to own that and to wake up and see your stock up $30. That's a pretty sweet trade. So what I did as soon as I opened this, I was like, yeah, mergers and acquisitions. I learned early on that can be a huge mover, a huge catalyst for different stocks. I definitely want to turn that on, right? I want to be getting news about that or about potential deals in the future. Market moving exclusives. This is something that if we break any news here at Benzinga that affects the market, that's going to be the category that it's in. I'm going to go ahead and turn that one on. We have a markets subcategory here. And this is really cool because if you specialize in things like commodities or options, or in this case, cannabis or cryptocurrency, or even penny stocks, you might be able to further filter down some of the news that you're getting so that you're not wasting your time reading news that's just not important to what you're looking for. In this case, one of the things that I really like are options. So I'd go ahead and turn that on. The cannabis sector seems to really be moving this year, especially with the new administration in the White House. So we're going to watch that at minimum. And cryptocurrency, obviously, you can't go anywhere without seeing a Bitcoin to the moon or Dogecoin to the moon. So I want to keep tabs on that. I'm going to go ahead and add cryptocurrency. In fact, that's hot right now. I might even color that red to meet some of the other, or to match some of the other categories that I'm already going to be looking out for. If we move on, again, you can go through all of these. I'm not going to go through all of them in the sake of time here, but I just want to show you the power that this tool can give you in terms of filtering and making things easy to find. So in news, I'm definitely going to check asset sales and contracts because that equates to an inflow of capital or new money. FDA, this kind of relates to the biotech and healthcare example that I just talked about. So I definitely want to turn that on here. I'm going to go ahead and turn on econ numbers because that's very similar to economics. And then I also want to turn on things like IPOs and rumors. And I really want to touch on rumors because this is one of my favorite categories. You call this a pro tip if you want. This is one of my favorite categories. There's an old adage in the stock market that says, buy the rumor, sell the news. And if you've been following CCIV, for example, Churchill Capital, you know exactly what I'm talking about. The rumors of the company merging with Lucid Motors, and then we saw commercials for this beautiful car on television, and there was all this hype surrounding EVs. EVs as a sector was really moving towards the end of 2020 to begin with. You had rumors of this company merging, and the stock kept trading up and up. And I mean, one day it was 20. It seemed like the next day it was in the 50s. And so there's all these rumors about that. And then when they announced that this deal had been finalized and there was a pipe for some of the big money to get in at 15, stock took a 50% haircut. So definitely that was one of those that you wanted to buy on the rumor, but sell on the news, or in this case, perhaps even before the news or right when it was released. So the big thing that I get here all of the time is that rumors, these are not buy recommendations. In fact, nothing in Benzinga Pro is a buy or a sell recommendation. We're trying to provide you the news in the least slanted way possible so that you can make investment decisions tailored to you or your family or whoever it is that you're doing this for. And so when it comes to any of these posts, it's important to remember that we're not saying buy this, but if there's a piece of information that comes out that is going to assist you in that plan, or if, for example, if someone told me, if a little birdie came and told me, well, hey, this CCIV company, that car that you really liked when you saw that Super Bowl ad, they might be talking about a merger coming up here. That might be interesting. I might want to take advantage of that. And even if I was able to ride that stock up for 10, 15 points on the equity, that's pretty good. It could be even crazier if you trade options. We'll get into that in a little bit. So there's a bunch of different categories here that you can use. I want to turn on the category for offerings, right? Because if I'm trading some of these smaller cap stocks, I want to know if there's an offering coming so that I can at least go through it, see what some of the terms are, see if this is still going to meet my trading plan. And then if I'm looking down here, I'll go ahead and add tech. That's one of my favorite. Take a look at the trading ideas here. We'll go ahead and add long ideas and maybe some small cap analysis. All right. And then I can go ahead and press done. And immediately what you'll see here is the first thing that stands out, at least to me, are some of the different colors here. And I don't even have to read the headlines now because I've got so many of these different colors set to the way I want. I see blue, I know, okay, that's probably biotech, FDA, or healthcare. I see red, that's something that's hot, that's something that's market moving. I see green, that could be analyst ratings or new contract or an influx of cash. I see the pink, that's a rumor. All right, so here we're hearing that the SEC will investigate Tesla's Elon Musk related to his tweets on Dogecoin. That should be fun. That should provide quite a bit of movement in both the Bitcoin market and also some of the accompanying stocks in the regular market. I want to know about these things. I don't have any Dogecoin, all right? I don't plan on buying any Dogecoin. I still want to know what's going on. And especially if it's going to be Tesla, if it's going to be Elon Musk getting investigated, I want to know about that. And if I look at Tesla now, Tesla's down almost 6% today. I want to know anything about that company or about what could be going on there. And I've been able to now very quickly find that simply by applying filters that are important to me. And so this filtered newsfeed here, it's much easier for me to actually go through that. And you can see that some of these tickers, or excuse me, some of these news posts actually have numbers next to them. And what you can tell is you can see that means that news post actually applies to other stocks. So this one here, 10 information technology stocks with unusual options in today's session. Well, it's tagged for Apple, but if I mouse over that +9, you can see all of the other companies that this is tagged to. And I can get an idea of how those companies are doing today. And like I said, this is a sea of red out there today. So I'm not surprised to see what we're seeing here. And if I want to go into that content, all I have to do is actually click on that and I can read the content itself. Maybe some of these option trades are something that you would be interested in. Maybe this is something that would add to your trading plan. Or maybe this is even a new trading idea that you can take away from this. Choice is yours. But again, what's interesting here is that you can filter this to make it easier to consume. And so we had talked briefly about newer traders kind of figuring out, hey, this is what is it going to be important to my trading plan? If you're new, you don't have the benefit of all that experience, and perhaps you know people that have been involved that you're getting experience from, but you'll notice that you do things a little bit differently. So one of the things that I tell people, especially people that are new all of the time, is that when you're figuring out how to actually act on these categories, it might be prudent for you to add another news feed here. Now, you can filter this one any way that you want. You can apply no filters. And in fact, that's one of the things that I recommend. So when you apply these category filters, you're only seeing news posts that are tagged with the selected categories that you've selected. And what that means is that if you don't select all of the categories that are important to you, it's possible that you'll miss a piece of news that you say, you know what, that was really important. I should have paid attention to that. What's cool about this is I can actually open up two different news feeds. And I can have one that's filtered on the left-hand side and one that's unfiltered on the right-hand side here. And although my category colors are the same for both of them, you'll notice that the content is actually different. So I know in my head, okay, well, the one that you filtered, the one that you know is good, that's on the left here. If you see something that looks interesting on the right here, maybe click on that. Maybe see if there's some other information in here that can be that you can gain an advantage from. Maybe if you click on one of these stories, maybe there's a tag down here like WIM, which stands for why is it moving, which I'm also going to show you shortly here. Maybe one of these other categories, you say, geez, the news that keeps getting tagged in that category is something that's important to me. I'll go ahead and add that to my short list here of important categories that I have. And in fact, there's no limit to how many news feeds that you can have. You can actually have 4 tools on the screen at once if you so desire. If that's too cluttered for you, you can actually break that down into multiple tabs. So you'll notice at the top here, I've got a bunch of different tabs that serve specific purposes, and I have the tools arranged accordingly on those different tabs. So again, this all comes down to the customization. And one of the other reasons that I really like to run a dual news feed on one of my main layouts like this is because I also might want to do some like research or investigation. And it's very, very simple to do that. If you're looking through this news, you might think to yourself, boy, there's a lot of stuff in here. I'm really just interested in news on Apple. Do I really have to scroll through all of this? The answer is, of course, you don't have to do that. You can just filter your news feed by Apple. Right? I'm just going to go ahead and type in the ticker at the top. And now it's only going to show me news posts that relate to Apple. I can do this with any stock or stocks, right? So if there's another, if we want to see Apple and we also want to see GameStop, there's nothing stopping me from adding a second ticker or even a third ticker to this search bar. And now I'm only seeing the news that applies to this company. Makes it a lot easier for me to actually go through this news. And if I want to go through historical news, I can continue to scroll down here and go back as far as I can stand in terms of actually doing this. You can see that actually there's quite a bit of rumors here on the GameStop ticker, and that makes sense considering today's action. One of the other things that you can do is you can keep an eye on the news for the stocks that you follow often. I don't know about you, but I actually watch a basket of stocks that I trade regularly. And the reason that I choose these stocks is because I believe that I have my edge there. I have my advantage there. Apple, for example, is a stock that I follow because I have a ton of friends and family that actually use the products. I think they're one of the strongest companies in the world, and they produce things that I'm interested in. They produce pieces of technology, computers and laptops and phones and tablets and all of these different things that I can touch that I use on a regular basis. So when it comes to actually trading around those pieces of news, I have an innate understanding of how these things work already. And so it might just be kind of like a fill in the gap task that I have to do to figure out what my next trade is going to be. Let me give you an example. I can't tell you how many times I've bought the dip on Apple when a news story has come out that says channel checks indicate that Apple's not going to be able to make their shipments, or their shipments are down 10% from the last cycle last year. When I first heard that piece of news, I was like, oh my gosh, are people really going away from Apple phones? And of course, the answer was no, they're not doing that. These are just pieces of news that are put out there. So I actually learned how to take advantage of that by watching some of this. And then, for example, I would hear some of those pieces of news, and then a month or 2 months later, when Apple would have their earnings report in their conference call, I was interested to hear what they're going to say about this. That got me listening to conference calls, which taught me a brand new range of terms and things that people look at, especially analysts, when they're coming up with their coverage for these different stocks. And I quickly realized that, at least in this particular case, that, hey, anytime that they say this, you might get a little brief sell-off, but that actually might represent a buying opportunity. And I wouldn't have done that before I had this Newswire, because when you hear that stuff on TV, they'll put up Apple's price and it's all red and it's going down and markets in turmoil, whatever kind of sensationalization that they do. I was able to cut a lot of that out and actually watch how the news actually moved the stock. And then going forward, I was like, you know what, I'm going to trade off of this. And it was great because instead of watching what the TV was feeding me, I'm choosing what I want to read here. I'm choosing what's important to me, and I'm skipping over stuff that's not important to me. And that made me feel empowered. That made me feel like I was making my own choice. I was taking this into my own hands. So just as a quick aside, that Apple trade, that's one of my favorite. And I still look for that today. Although on days like today, I'm going to wait for the dust to settle before we try that. So you can, if you trade a basket of stocks, if there are stocks that you trade regularly, you can actually filter your newsfeed by that watch list, right? So here's my main watch list. I've got a bunch of them here. I'm just going to click on my main watch list and press done. And now I'm only seeing news for stocks that are on my watch list. So you could surmise that, hey, all of these are important, or all of these are at least worth reading and then dismissing, or reading and then acting on, whatever the case may be. So there's a number of different ways that you can set this up so that you can get the information that's important to you. If you do, work on the side, or if you're in your broker, or if you're doing some online shopping or whatever, you can actually click on desktop notifications. I have them blocked here for the sake of this presentation, but you can turn them on. You'll get a pop-up whenever there's a new post that meets that criteria. Bottom right for PC, upper right for Mac. So there's a number of different ways that you can actually use these tools to kind of cut out the noise and trade what's important to you. And news was at the heart of what Benzinga did. So it was great to listen to a squawker, someone that was a market veteran, someone that's been doing this for decades, kind of feed me the news that was important. And then it was also at the same time, I was able to go through news myself and pick and choose what it was that I wanted to take away from that. That was really, really powerful to me. And once I became more comfortable with that, I started venturing out into some of the other tools that Benzinga Pro gave me, because my initial goal of getting this was being able to have a reliable newswire where I could do due diligence and research whenever I needed to do so. And I wanted to learn how that actually worked. But once I got familiar with that, I was like, I'm going to branch out and see what else this can do. This is such a great platform. What else can it help me with here? And I'm going to give you an example here of the movers tool. And here is CCIV that we just talked about. The stock has really been wild recently. You can see here I was doing some charting on this the other day. So in any case, this right here is the movers tool. And this to me was really, really cool, because my broker is TD Ameritrade. I use the Thinkorswim platform. I've used it for a long time. I've tried about 3 platforms. Thinkorswim was the one that I ended up going with. And for all of the things that I do like about it, one of the drawbacks for me was that in order to scan for things, the scanner was quite complex. And this is a blessing and a curse. It's great that the scanner can do what it is that you want it to do, but you need to kind of figure out how to enter those parameters. And in some cases in the Thinkorswim scanner, you could actually write, they called it ThinkScript, right? You could actually write code to help you do that scan. That's a little out of my pay range. That's not something that I was familiar with doing. So one of the things that I found in Benzinga Pro here was the mover scanner. And at first, obviously it's not as complex as a more full-blown scanner in Thinkorswim, for example, but I was really struck by how easy this was to use, and the information that I could get from it, how easy it was to consume that, and how I just moved on to my next task. And when you wake up in the morning, the market is always going to open at 9:30 Eastern. For me, I'm in a suburb north of Chicago, so I'm in the Central Time, so it's even earlier. It's 8:30 for me. There's a finite amount of time for me to do research and see what happened overnight, and I have to be ready for that opening print. And so anything that I can do to reduce that time, where I could focus more on either my execution or developing my trade plan or doing whatever it is that I needed to do prior to the open, anything that could reduce my research time was quite helpful. And that's where this tool comes in. So one of the things that I'd like to do is I'd like to figure out what's up and what's down in the pre-market session. Although I generally don't trade pre-market, I still want to know what the landscape looks like when the market opens. And this tool is really great because it allows you to scan these different sessions independently. So for example, here, I'm going to go ahead and click on gainers, and then I'm going to click on pre-market, and then I'm going to click on session. So 3 mouse clicks. And now what I'm seeing is everything that's up in the pre-market across the entire session. If I wanted to break that down into smaller increments, I could. If I wanted to see what's up over the past 5 minutes, I can just click on 5 minutes, and the results list here will show me the change numbers over that 5-minute window. For the sake of the example here, we're just going to investigate the entire session. So what I would do here is I'd click on this. Again, 3 mouse clicks. I can choose to filter this by sector, market cap, or price. I don't want to for the sake of this example, but you can. If you don't like penny stocks, you just do that. You're all set. Now you're looking at the things that are moving with stocks under $5 eliminated from your results list. And if you wanted something more than the slider numbers that we give you here, you can go ahead and enter in a custom value like 6. Whatever you want to do, you're going to be able to do that. And so what this would show me here, what this is essentially representing is these are all the stocks that are going to gap up in the morning, right? These are the stocks that are trading up across the pre-market session from yesterday's close. And they're listed here in descending order from their percent change. Now, if I wanted to list them here in the volume, I could do that too, right? I can click on volume. Boy, AMC really traded 43 million shares in the pre-market today. That's crazy. Its average volume in a day is 134 million shares, right? So already in the pre-market, we're already a sizable percentage towards its average value for the day. Pretty cool. That might be something to take a look at. And of course, now that the market's open, we know exactly what happened. GameStop also on this list. So if I sort it here by percent change, now I can actually go through this list and I can figure out, okay, what happened while I was asleep? So let's click on this first ticker. All right, here's one of the other really, really cool features of Benzinga Pro. It's the why is it moving that we just talked about in the newsfeed. So when I click on a ticker, it actually loads it in the details tool that I have on the right here. And you can see that right under the price and the name of the company is this banner that says, why is it moving? Pandion Therapeutics, I hope I pronounced that correctly. Shares are trading higher after the company announced it will be acquired by Merck for $60 per share in cash. Well, you remember how I was talking about how awesome mergers and acquisitions is? It'd have been really great if I had loaded the boat here at 24 and woke up and saw that my stock was $60. So this is exactly what I'm talking about when in terms of mergers and acquisitions and how important that can be to a trader's plan. If I had any inclination that this was a potential buyout company, maybe buying a small starter position would have been prudent. Maybe even a couple of options here, roll them out a few months and see if anything happens here. But in this case, we woke up, we saw that this has been acquired by Merck for 60 a share, and the stock's nearly a triple here. Pretty cool. The other thing, but now I know, right? So why is Pand up 131% in the pre-market? Well, in less than 10 seconds, I figured it out. I literally just clicked on it. Our news desk, who all they do is news, right? All of these people do is watch the news. They're telling me exactly why this is up. My research here for this particular ticker is done. If I wanted to get more of like a backstory on what was happening, if I wanted to see if maybe there were some rumors in the past, I could do that. I could click on news. I could remember it's already sorted for this ticker in this screen here. I can go back. I can take a look at some of these. This is the SEC source that I talked about earlier. It's not just a summary of what's happening. It's the actual document from the SEC that you can just see right here in Pro. I can actually go over some of these different PRs. Here's the actual PR itself. So if I wanted to do any of this research on this particular stock, I can do it right from here. But it was just so easy to find that. It took me no time at all. I'm ready to move on to the next stock. Next stop is, of course, GameStop. So I like to leave this on the chart because I like to just get an idea of the price action right away. If I need to then dive in deeper, I'm able to do that. If I want to look at some of the financials, I can click on the financials tab. Balance sheet, income statement, cash flow statement, no problem. If I want to take a look at the chart, I can do that. If I want to review some of the news, I can do that. I didn't even have to leave Pro. I just clicked my mouse one time. Want to see some peers for GameStop? No problem. How about some key data? We got all of it, right? Got it all here. So here again with GameStop, we got another why is it moving? GameStop shares are trading higher after the stock spiked on heavy volume. The stock in January saw a surge driven by high retail investor interest. So now we might have repeat or round two. Maybe this is something that I want to play. It isn't. This is a little too risky for my taste. But if this were something that I want to play, or if this were something that I wanted to learn more about, I've got all of the tools right here in front of me so that I can do that. And if I can actually take a look at the different charts, I know we're going to have TradingView coming up here in a little bit. You might recognize these charts. These charts are actually TradingView charts that have been ported into the Benzinga Pro. So if you're familiar with TradingView, you don't even have to learn a new charting system. You're already familiar with what's available in here. You will need to add other indicators to your chart because that helps you make or come up with a trading plan. Got that too. You want to compare this to something like other stocks in the space, maybe the S&P 500, you can do that as well. So there's a number of different things that you can do, but really what stands out about this particular setup right here is that it's so easy for me to get to the information that I'm looking at. I clicked my mouse 4 times, right? These 3 settings up here, and then I clicked on a ticker, and all of this information is being presented to me. And I can go through this as many times as I want. And you can see that when we're talking about some of the stocks that were up the most in the pre-market, there's lots of whims here. There's lots of reasons why this stock is moving. If that changes and I want to see what's going on in the regular hours, I can do that. All right. So if I click back on pre-market, GameStop was up 81% in the pre-market. And if I click on the regular session, it's only up 61% now. So it's off its highs from the pre-market here. But if I wanted to do some charting, maybe I want to trade this against the intraday lows. Maybe I want to trade this against a pre-market low. Who knows? Maybe I think that the bottom's about to fall out on this and I want to take a short here. I don't even know if you can with what the brokers were doing with these stocks, but that's neither here nor there. you can repeat this every single day. If you're not interested in gainers, if you're not a long bias trader, if you want to see what's down on the day, you can click on losers and it's going to show you the exact same thing. Here is a ticker SOS. This is a stock that was a high flyer on the Bitcoin craze recently. You can take a look here and see what this has done. But I mean, this has really been wild. This has really been wild the past few days. So again, it really comes down to the ease of use and how you can actually tailor this to your own trading plan, and how you can spend less time researching, more time reacting, more time learning, and more time executing. Now, in addition to some simple scanners like this, we also have some really other cool features that really helped me. And one of those is the calendar, which I want to show you right here. Now, so here's a calendar. I had this on an SEC filings. I was doing some testing for one of the clients the other day. But we already talked about analyst ratings, so I think it might be helpful to actually drive this point home right here. So I want to go ahead and actually let me go ahead and open up a new workspace so that I don't mess up what I had going here. Let me click on, we actually have a preset for this, right? It's the analyst ratings monitor. And what that's going to do is that's going to open up our calendar tool along with our news feed tool that you're already familiar with. And it's going to be the exact same information, but laid out in a different way that may be more conducive to research or to figuring out what it is that you're looking for. So here on the right is the news feed. It's only got the analyst ratings categories that we talked about earlier. So I'm only seeing news posts about analyst ratings. On this particular workspace that's dedicated to analyst ratings, that's prudent, right? I don't want other news clouding up any of the research that I'm doing right now. So I get to see everything in real time right here. But on the left, I've also got a calendar where I can, where all that same data is laid out in a table format. And let's say I want to apply some filters, right? So let's click on the filters here. And let's say that I only want to see things like initiates coverage on or upgrades, right? So I'm going to deselect the ones that I don't want to see and leave the two that I do want to see. All right. And then maybe I want to add another filter on top of that. Maybe I want only a good rating here. So we're going to take out hold, neutral. We're going to leave buy, outperform, and overweight on. So right away, you'll see, again, with just a few clicks of my mouse, I've taken that entire table of data and I've broken this down now to 18 different rows of data. So now my research, the next step here in coming up with a trade plan is going to be research. Maybe I want to look into Nike. Maybe this is the time to actually go long Nike. Square on this list. Looks like we had an upgrade here from Guggenheim on Square. That's really good. Looks like they got a 288 price target now on Square, and Square's trading 232. So we got quite a little room here in between its current price and the price target. Plus, we're actually getting a little bit of a discount today. It's down 2.2% today. If I want to add a note here, I've got the ability to do that. In fact, you can see that I did add a note a while ago. It said payment processor leader 250 plus possible. We're almost there. So I can remember that in the past, I was actually looking for this stock to make a run towards 250. Here, that note is just displayed for me. It remembered all that for me. Really cool stuff. So now I can kind of go through this and I can kind of figure out, hey, is this something that you want to take a trade on? Has the story changed here? Maybe this is a stock that I already owned. Maybe you feel like the top is in. Maybe you feel like you've had it for a long enough time. You want to ring the register and take your profits on it. If you want to click on that stock, it'll automatically open the details tool for you. You can kind of go through some of the key information, the news feed, the chart, the financials, all the cool stuff that we just talked about. And so now just going back here to the analyst ratings, in addition to analyst ratings, we actually have 13 other calendars that can be very, very helpful. So I'm going to go ahead and close this workspace again. I'm a big fan of keeping everything organized. That might be part of my OCD, so please forgive me, but I'm going to try to keep everything organized here. And one of the other things that you're going to notice that we have is an earnings monitor. And if I click on that, it's the exact same thing. We've got the earnings news feed here. So it's basically just a news feed with two sources and earnings news, earnings and guidance news selected. So I'm getting it in real time. This might be something that you want to keep up right when the closing bell hits, right when companies start to drop their earnings reports. And then over here, I've got the calendar listing all of the different earnings. And in this case, it's for the 25th. here's one of the things that's really cool. Maybe I'm planning an earnings trade, right? Maybe I'm trying to trade around a binary event and I want to try to capture this earnings print on some of the stocks that I'm familiar with. Well, I can, again, just like in the news feed, I can go ahead and filter this by my watch list and only see the earnings reports for stocks on my watch list. Maybe there's a specific stock that I'm looking for. We'll use Apple as the example again. I can actually filter the calendar by Apple. I can get all of its historical earnings reports here. I can sort it by date. And I can go in order, take a look at what happened. Maybe if I wanted to filter it, all right, and I only wanted to see earnings reports from Q3, okay, no problem. You just go ahead and uncheck some of the other quarters here, and you'll only see the earnings reports for Q3. You can apply filters any way that you want. And this is, again, when we're talking about empowering a different generation, everyone's going to be different. Everyone's going to be looking for different things. So you want to have tools that are going to be able to cater to your individual needs. And that's what Benzinga did for me. Once I started removing all of that noise, once I started ignoring things that weren't beneficial to me, or I wasn't able to trade successfully, that really helped lend itself to get better consistency, and better consistency turned into overall better profits over the long haul. So that was tools that were really helpful to me. Now, there's another calendar that I really want to cover here, because options are actually quite popular right now. So again, I'm going to go back and start from a blank workspace here. And we're going to talk about unusual option activity. I'm going to go ahead and click on this, and it's going to load up two different tools. One of them you're familiar with. It's the calendar tool that we were just talking about, with the unusual options activity calendar selected as the default here. And then it's one of our other tools, signals, which is, again, these are computer algorithms that are flagging trades in real time. And in this case, we have the option activity signals selected. So what we're seeing are unusual options trades in real time. And what's cool here is that because the signals tool is in real time, the way the calendar works is that it's actually updated procedurally behind the signals tool. So after we see the signals tool load in some new data, you'll see corresponding data load into the calendar as well. And the latency there is actually very, very small. It's worth noting that the signals tool has more than option activity. It's got things like block trades and halt and resumes, telling me when a stock is halted, and if there's a reason for it, telling me why. That can be very helpful, especially for all of the GameStop traders out there. The thing was an absolute halt fest. And there are also other signals in here. Block trades for me are incredibly important. I want to know when someone's buying 750,000 shares of a particular stock. That's going to factor into my plan. I'm not necessarily going to trade off of just that one data point. But when we're talking about creating a trading plan, we want to take as many data points as possible and line them up together. The more data points we have that confirm what you're thinking, perhaps the higher probability of that trade. Or if that trade doesn't work for you, you'll know why. So I like to watch the option flow on a regular basis. So having the signals tool open here is actually quite helpful. And then in the calendar tool, I can actually do some more filtering. So while I can't actually filter for some of these different things in the signals tool, I can put on something like a price or a watch list filter. I mean, we do have filter options here. But if I wanted to get down to some more like specific nitty gritty for options, I can do that. And I know we're running out of time here, so I'm going to go quickly. For example, if I'm interested, there's a ton of data here, right? So there's a ton of data here. One of the things that I noticed first is that there's a ton of SPY contracts. Makes sense, right? The market's getting blasted. The people are going to be trading SPY back and forth, but that's not what I want to do right now. So I'm not really interested in that data. It's just causing me more trouble than it's helping right now. So I'm going to go ahead and click on filters, and I'm going to click on security type, and I'm going to remove ETF. Now I'm only seeing stock tickers in here, right? So all of that stuff that I was just not using for my trading plan or not interested in trading, it's all gone. I don't have to worry about that anymore. All right, next, we're going to talk about total trade price. So when it comes to options, there's a number of different things that make option trades unusual. One of them could be total trade price. If someone is willing to spend $250,000 on an options trade, they might have some information that I don't have yet. They might have some edge or some angle that I don't have yet. And generally speaking, if it's good enough for someone to spend $250,000 on, it's probably good enough for my $500 or my $1,000 options trade, maybe even a little bit more depending on what it is. So I'm going to go in here and I'm actually going to enter in 250,000. Close the filters menu. Now you can see that I've got a filter applied for total trade price. I'm only seeing some of the larger options trades here. And if I want to sort these, I can do that, right? You can click on any column header and sort it in there. So in this case, we've really only applied that one filter, but there's something else that I want to take a look at, right? I'm not really interested in some of these longer term options trades. If I was interested in a longer term trade, perhaps I would just buy the equity, or I'd develop a more complex options trade to more well-define my risk. Let's say I'm only looking for a shorter term trade. I'm going to go in here and change the days to expiration to less than 60. All right, so now I'm only seeing unusual options that expire within the next 60 days. So I know going into this now, this is going to be a shorter time frame. All right, and we still have quite a bit of data here, and it's still updating regularly. So one of the other things that I want to do to try to make my research a little bit easier here is I want to sort by volume over open interest. So I'm going to click on that, and I'm going to sort descending on this. And what volume over open interest is a very, very simple math calculation. It is the size of the individual order, which is how many contracts were traded in that one order, divided by the open interest going into that in that particular day. So generally speaking, the higher the number here, the more new eyeballs there are on that particular trade. So you can see here that if I go ahead and add the open interest column here to the end, that would help a little bit. All right, so this trade here on ticker VIAC, Viacom CBS. Going into today, there were 2 contracts being held open here at the put. Let me see. This is the 68 put that expires in March. There were 2 contracts being held open, and someone came in here and swept up 3,444. So that's definitely something that I want to take a look at. Now, am I going to trade off that singular piece of data? I don't know. Viacom is not something that I watch regularly. It's not something that I have an edge on, but that seems unusual to me. Perhaps I want to look a little bit more into this. Here's DraftKings in the same list, right? We've got a trade here. 67 in the open interest. Someone came in here and bought 10,000 contracts. Definitely want to take a look at that. In fact, I'm going to do that as soon as I get off this presentation here. Twitter, right? We saw a huge pop in Twitter today, and we saw people buying puts on it. All right, maybe they're playing for a mean reversion, right? Maybe they don't think this pop is going to hold, and they were given a nice entry because the stock popped so high this morning and the market's really kind of crummy. So we're going to play a mean reversion trade. We're going to do that with options. So again, the whole premise here is to try and make this easier on the trader, right? We don't want you to have to go to 65 different websites to get the information that you're looking for. We want you to be able to come up with a plan and execute your plan. And the reality is that a lot of us don't just trade all day. We don't just sit in front of the computer and trade. We do other things. Maybe there's another job. Maybe it's a part-time job. Maybe you've got a family. Maybe there's a number of other things that require your attention throughout the course of the day. So we want to make the research and the figuring things out as easy as possible for you so you can spend more time on what's important to you. And this tool really helps with that. When I was using this, it made me feel like I had more information. I had more tools in my toolbox. And as a result, I made better decisions. I made smarter decisions. I learned that when you hear headlines about Apple's phones being short, that's not necessarily a bad thing. That's giving you an opportunity. And are you going to take advantage of that? And so, finally, the other big thing about this is that this allowed me to do things at my own pace. I'm no longer having to listen to what some talking head is talking about, whether they're talking their book or whatever the case is. I can pick and choose what it is that I want to see. I can go out and look for news on stocks that are important to me, not what's important to the people on TV. And then I can make a trading plan based off that. So again, when Tom said earlier that it's all about having the right technology, that really stood out to me, because having the right technology is what changed things for me. And I'm sure that there are others that can benefit from the exact same thing. So I know we've got 2 minutes left here. I wanted to open this to questions if there are any, but I also wanted to thank TradeLog for allowing me to have this platform today and come on here and share my story and share this platform that has been so great for me. So thank you very much.
Oh, you're welcome, Ryan. Thank you so much for coming on. You definitely can tell you're excited about your product.
Yes, sir.
And you've covered it so well. There are no questions for you at this time. Well, we've answered, there was a bunch that have been answered, so you're good to go. Thank you so much.
Awesome. Thanks again, Tim. I really appreciate the opportunity.
Yeah, thank you. All right. Moving right along. We're going to go into a short break, but time has gotten a little bit, just to keep on schedule, we want to keep going here. Next up, we're going to move into finding trade patterns in real time. And for that, we have Mr. David Aferiat. He's a co-founder and managing partner of Trade Ideas, and also Michael Nauss. He's the data scientist and advisor of Trade Ideas. They'll be considering, among other things, 4 ways algorithmic auto trading, should have use that word for me, trading yields better decisions in the market. You have our attention.
Thank you, Tim. We're going to make you spell that, by the way, in just a moment. So be
well,
ready.
it's in front of me. I can spell it, but
okay, yeah, it's sometimes harder to say. Well, welcome everybody. It's an absolute pleasure to be with you. Michael and I are very grateful for the time, and we want to make it as valuable for you with what we have to show you. I'm going to basically give a little bit of introduction about Trade Ideas, about why this is important and relevant to you, and then Michael's going to walk us through specific examples of trade ideas and really do a couple of things. One, leave you with something that's going to make your trading better, whether you use the technology or not. And two, give you the ability to certainly learn more if you do find the value. One of the things I'd like to do, just to get a quick baseline, is, and if you can throw it into the chat, we'll just make this messy, but I'd like to know how many people trade more than 50 times in a typical week or less. 1 would be less and 2 would be more. If we're able to see that in the chat here, just type in 2 if you trade in more than 50 times in a week, or 1 for less. I don't even know if chat's available, but if it's not, then this experiment ends right here. Let's see.
yeah,
I've seen it here in the Q&A.
In the
panel,
Q&A,
a couple.
so 2 means you trade more than 50 times in a week, and 1 is you trade less than 50 times. Lots of 2s here coming in. Thank you, guys. Okay, yeah.
Wow, active. Good.
Yep. One of the things, then, I will also, we'll monitor this Q&A, that I'd like to, and I usually have this in a Slido, but I don't have it set up for us today, where we'd be able to see, a word cloud, or at least we do this online. But the next thing I want to ask is a basic question about, how do you choose the broker that you're with these days? And think about the following: A being execution quality, B being platform features of the technology, C being research amenities, D being real-time data, or E being customer support. Commission fees. Yep. So I'll repeat. A is execution quality. B is platform features. C is research amenities. D is real-time data. E is customer support. And F would be other. This is how you choose a broker, or why you're staying with the ones that you have. Yeah. Feel free to change your answers. Okay. Good. I'm seeing a lot of execution quality, of course. Platform features. Okay, great. All right. I appreciate everyone's input. Let's go to our first slide. and we'll talk a little bit about trade ideas. Before we do that, we do want to make sure that as a disclaimer, we are going to be talking about certain stocks and how our technology helps identify opportunities. At no time should you consider us being anything other than a publisher. And I'll let your eyes kind of read over this, but it's our basic kind of clear the deck and make sure that we're all baselined and on what Trade Ideas is and what we are. We are not a broker, and we are a technology company and publisher of our data. So here I'm joined with a fantastic person, Michael Nauss, who is a recent CMT graduate. Can we say, did we leak that out? Or
yeah, I think that was just leaked, but yeah, so graduated the CMT, so just waiting for the board to kind of let me in. So I'm not allowed to put it next to my name yet, but
there you go. But you heard it here first. 10 years with a hedge funds experience and an algorithmic day trade swinger and a significant contributor to Trade Ideas. I'm very proud and honored to be with you, Michael, in presenting this technology. I myself am the co-founder and a managing partner with at Trade Ideas, having started the company late 2002 and started collecting revenues in 2003. I like to call ourselves we're an 18-year overnight success. But we have built the company from where we were at the very beginning as a scanning company all the way into a technology reliant on machine learning and AI to kind of power our mission. So we'll go to that in just a moment here.
Yep.
Thanks, Michael. That mission has been unchanged since 2003. And that is simply this: we help our clients make better decisions in the US equity markets. That's it. The value we provide is by helping our clients find, buy, and sell opportunities before anyone else and in places in the market where no one else is looking across multiple timeframes. That's the value we provide. The how and the secret sauce is 18 years of reinvestment in technology that's taken it from simple scanning to event-based backtesting to AI optimized scenarios that are run overnight in the millions to arrive at curated set of algorithms that produce ideas for our clients. That's the more technical secret sauce of it all. But the mission is simple and has never changed. And the value that we're providing is just what I described, being able to show you things before anyone else in places where no one else is looking. The result has been, 18 years of profitable growth. 2020, I know it was a challenging year for everybody in various ways and for many companies. It was our best year ever. And we're very grateful for both the clients that we've had and the clients that we've welcomed. And for us, it's a responsibility to keep with the mission and keep reinvesting in the technology. And so that's kind of like that's the setting the table a bit. What's our next slide, Michael?
going into the trade of the week.
Going to the trade of the week. Okay, so I'll hand the baton over to you, Michael. And before I do, I would just make sure that, well, again, thank you everybody for the comments you've made. And we'll talk about that. As important as execution quality is among brokers, there's a phenomenon in place that we're riding, which is, especially with commissions being reset or set to zero, we've moved, and brokers I think realize this as well, to a place where there's no longer revenues behind the research and development in broker-based tools to find and help their clients trade on the markets. There's not as much revenue behind that endeavor. So we have seen a movement among many in the industry to go from an NIH attitude, a not invented here attitude, to one where we're looking for the best technology. Where it comes from is less important, whether it was grown internally or whether it's found externally. And we have found more and more traction among the more enlightened partners of ours who are looking for what is the leading and innovative technology that can be given to our clients to help them with the mission that we have that they want to provide their clients. And so what we'll provide and show you a sneak peek of with our time together today, what Michael's about to give you is across these various timelines, the value of how we are able to identify opportunities. So Michael, let's hear a little bit more about Trade of the Week, and then we'll go into the tool itself.
All right. So yeah, so we're going to do a little bit of talking about kind of what we do and a little bit of bragging here to begin with. Then I'm going to leave you guys with a concept like David spoke about, that whether or not you decide to check out Trade Ideas or anything we offer, this is something that you can use for your trading right away. And then I'll show you around the product and some of what it actually looks like in there, as well as my personal trading account. And how I auto trade that with the system. So first of all, we'll talk about the trade of the week. So if you guys want to use this link here to sign up to take a look, this is a free trade that we give you every Monday morning. And it's something that uses our traders that we have on staff, filter through the massive amount of data. We have the ability to back test and run machine learning algorithms and things like this in the back end. And so the first question would be, well, why would you be interested with this? So we ran from March 1st until the most recent trade of the week. And here's the win rate at whopping 71%. It won't always be like that, but it's absolutely gangbusters. But even in times, and David will tell you that there was times this year, because again, 2020 was a challenging year, in which this dropped to around 50-50 win rate. But because we are always looking for, this asymmetric risk reward profiles, everything performed phenomenally. Because if you can see our average loser in this, again, free product is less than 5%, average winner is well over 10. So we did a model.
If I can, you raise a great point, Michael. Just going back to that the trade of the week, it's so easy to digest. It's one trade. We deliver it to your inbox on Monday mornings. You provide us your email, and you get this content. But this average, the average winner percentage and the number of times that it's won is key behind how we design the AI itself. There are only four outcomes of every trading decision, right? There's the small win, the big win, the small loss, and the big loss. And all of our risk management and all the AI that's trying to do when it defines what the optimal risk management is to place everyone in three of those four categories. And the AI is built to abhor a large loss. And that's what provides me so much optimism in the morning, is that we're building something that is going to put people 3 out of the 4 times into an acceptable situation. Where that 71% is an incredible number as an average win rate. It's beyond belief. But normal, even the ones that our algorithms produce, can sometimes be 45, 46%. And you'll take those because of the point you made, that the losses are small, but when the winnings happen, they're much larger.
Well, and that I truly believe that is the secret. If there is a secret to trading, that's it right there. What David just told you, where win rate, and I actually have a slide at the end talking about how win rate is not a relevant statistic, and I'll show you why in that slide. But really, if there's one thing that we can say that we focus on at Trade Ideas, it's this risk management side, because this is kind of the be all end all. So combining those two statistics, this is the performance, again, from that March 1st, 2020 to date, assuming a $10,000 account, held for a week every time we got the trade of the week. So again, you don't need a perfect win rate. We have a pretty high one with this one. So again, this is a free product you can sign up for anytime and check out. And then I always go, well, what about myself, right? So David introduced me a little bit. I've been using Trade Ideas since 2006, and I've been working with Trade Ideas for 3-4 years now. And what am I doing with the product myself? And this is my last year. Sorry, I have year to date there, but that's actually my 2020 return was 150% as well. And again, not to brag, but just to show you, now we're going to go and do how, right? What are we doing that's allowing us to outperform the market in this way, in a consistent type of basis? So we talked about, again, how I studied for my CMT, and I recently passed level 3, and a topic that's broached there a lot, and I really like this kind of very simple definition of it, is relative strength, from Michael Moody, who's also a CMT. So to paraphrase, when we're looking at relative strength, we're basically thinking what is performing the best? Where is the money flowing into versus where is the money flowing out of? And kind of our whole job as short-term traders and investors is to just find where the big guys are getting into and go along for the ride there. And then when the big guys decide to get out, we're luckily, as smaller traders, we can turn that battleship way quicker and get out much, much faster. So what's the process of developing a relative strength system? We'll show you ours at the end, but I just want to go through the process of it to show you that you could do it yourself. Just our technology will make it a little easier for you. So first, you need to define strength. So what's considered a strong stock to you? This, you really want to focus most on your time frame. If you are a day trader, you're going to be looking for the strongest stocks of that day. You can do things like within Trade Ideas, you can scan for gappers, you can scan for high relative movers, all in real time. They'll alert you as they're happening. You can find stocks that are outperforming the indices that day, that are stronger than or weaker than the overall indices. Maybe that's your time frame. Maybe if you're an investor, you're looking for the stocks that have performed the best over the last year, a swing trader over the last month. But this definition is very, very important in order to get started down this road of building a relative strength system. So then next is, what are you defining as strength? Is it a change from a moving average? Is it overall percent gain? Is it some sort of linear regression? You have to have these things quantified in order to then build the system around it the way we did. And I'll talk about the way we built this system in a little bit. So this is a good example. So next is relative to what? So I grabbed this screenshot of Apple at the top here, the QQQs in the middle, and then Google at the bottom. So the first question you may say, I'm looking for a relatively strong stock. Well, relative to what would be your first indication? So if you look at Apple versus the Qs there at this point in time, they look about the same. I wouldn't say one is stronger than the other. But now if you look at Apple versus Google and you say, well, these guys, they both make cell phone operating systems, they have app stores, they have very similar profit models. But in this situation, Apple has outperformed Google. So again, you need to find how you define strength and then what you're comparing that against. So if you ever see any Trade Ideas webinars, this is kind of like a staple within it, where we talk about how, again, the stuff that I'm going to show you, you can take and use however you want. But the real power that we have at Trade Ideas is the ability to use our server tech to scan for these things and to build these machine learning and computational models. So how did we decide to build a relative strength system for swing trading? So one of the biggest benefits, I would say, of Trade Ideas is that it's a company built by traders for traders. You know, everybody there pretty much is a trader in some respect. So what we did is I went to all of them and I said, how do you define a strong stock? And went to each individual person, and they all had a different, you know, I want an RSI that's high, or I like it above this moving average, or, you know, I want the stock to be up this percentage this year. We pulled together all of these indicators and candlestick patterns and ways these people define strength, and we weighted each indicator and then ranked each stock by what that indicator was showing. And we were ended up able to build this model that we went back 3 years to back test, and we've been forward testing now for in the neighborhood of 8 months, just to show that it's not only true in past, but it's true currently, that essentially by taking the top 5 strong stocks based by this ranking system that we came up with and rolling into those 5 stocks each and every week, comparing that to the overall market, you can see the dramatic outperformance just by sticking where the money is going and avoiding where the money is leaving. So now comparing, this is going to be another metric that's going to harp back to what we just talked about with the trade of the week, is this graph is basically showing overperformance or underperformance to the overall market. And you can see here, although, you know, not beating the market on every single week, the times that it does beat the market, it beats it at a much larger percentage than the times that it underperforms the market. So just like we talked about how the trade of the week was shining because of its risk reward profile. You're seeing the same thing here in this relative strength model.
It's crazy. It's crazy how volatile it got, like right around the beginning of the pandemic when it started to hit.
Just right here. The beauty of it was what we've noticed with this relative strength model, and it was a great time to build it around the pandemic, is that we all know that there was industries and sectors there that were doing fine. You know, the Zooms and the Netflixes and the Amazon. And just by sticking at what was performing the best, the portfolio quickly rotated out of things that weren't working and rotated into these kind of pandemic proof. You know, I think it was in Peloton for almost half the year.
That's
that
right.
thing was just on fire.
And Home Depot, and that says something too. I mean, when we look at what the AI is often looking at, the value is sometimes each, obviously, with every idea that it produces, but it's also related to what sectors is it in. And it's we publish for others. We write a NASDAQ article, actually, it's free, and we publish on NASDAQ.com about where the sectors are rotating. Where is Holly? Where is our AI system that we call Holly looking in each month? And that provides a little bit of metadata around the footprints of where these decisions are being made.
Well, exactly. And that's, the concept that money doesn't really leave the market, it just moves. And that's another concept of relative strength, is you're just saying, okay, maybe this industry, maybe EVs won't be the thing in 2021, but something else will be, right? They will remove money from some places and they'll redistribute it other places. So it's important to make sure that you're kind of always staying on that bandwagon and riding the coattail of these large battleship, hedge funds and institutions that take weeks, if not months, to get into and out of a position. And our benefit as small retail traders, we can hop on, ride the wave, and then get out before that changes.
Yeah, I heard meme trading stocks are great. They're a hot sector.
Well, yeah, if we get into showing you what my portfolio is right now, you'll see some meme stocks in there for sure. But on top of being able to scan just from a technical point of view, one of the great things that Trade Ideas has is fundamental data as well. So if you're someone who's more interested in we have all of the technical stuff you can think of. I already see a question here, the rate of change in the last X period of time. We have change in, from 2 years down to 2 minutes. But there's some people out there, and I'm one of them, who like the concept of, if I'm going to put my money in something, hold it overnight, I at least want to make sure that there's some fundamental type stories that kind of make sense and that carry that through. So we can also include fundamental data as well. So we have that, and I'll show you this when I go over to my desktop in just 1 second here, where we've combined it all together, and we've built this ranking system that not only combines technical data, but also fundamental data as well. So earnings of the company, quarterly growth, is this company making money? Is the money growing? Are things kind of happening above and beyond that? And just to wrap it up before we go into the program, again, I talked about win rate doesn't matter, and I just do these little cutesy tweets every now and then where I show my P&L, and you'll notice that, as David was talking about there, 45% win rates, 36% win rates, 55% win rates, doesn't matter. As long as you are avoiding that massive loss, then everything is going to work out in the numbers in the long run.
Right.
So lastly, here is the landing page. So I'm actually going to type this. I don't know if we can share this in chat as well, but we built a landing page specifically for this webinar for you guys to sign up and get a discount code if you're interested in giving it a try. Sorry, I have one of those very loud.
Yeah, while you're doing that, I'll just talk again about that Paul Tudor Jones, quote that we like to talk about. I mean, this is not and we don't have our technology to the point where it's like, set it and forget it, go about your day and come back and see the AI, produce all those returns. It's still very much a kind of like a pilot and autopilot, kind of effort, and it requires both to really extractive value from what it is that we're helping our clients, our subscribers achieve. And this is, Michael has said it a couple of times, we really are, seeking to, our subscribers are small, individual traders, active and even part-time, who want a level playing field, who frankly want even more of an advantage that they can extract based on what we're about to show you. And in fact, we're here inside the tool now.
Yeah, so I'm going to hop between our web version and our downloaded version. Basically what I'm showing here, and we're going to spend the last little bit, this would be a good time if you guys have questions. We're just going to riff about the tool, what's going on today.
As we do, I want everyone to kind of just, so we stay relevant here, is that, ask yourselves a couple of questions when you're looking at this, is that how are you spending the hours outside of trading, preparing for your trades? How confident are you in your decisions about the risks that you're taking? And does the technology support that risk identification process? And does the technology that's using right now help you find the opportunities that you feel confident in, in making? We aim to address some of that, and think about those particular questions, as Michael kind of describes this technology, about how, one, is this helping me identify risk, and B, how good are these opportunities?
Try. There's this report that the link wasn't working, so let me just try again here with a different, maybe that one will work better. But yeah, so basically what you're seeing here, so there's a couple facets of trade ideas as a technology. So I wanted to give you something initially that just talked about the concept of relative strength and trading. And I have a scan here on the far right here. Actually, let me bring up my drawing tool as well. That is that score that we talked about. So everything that you're seeing on this list is ranked based off of not only technical, but fundamental and statistical data as well. So anything that you see here that has a score in the 90s, like Crown here has, or Cohen has 98, basically, that company is not only good or strong from a technical point of view, but the fundamentals match out. So it's a company that makes money, that has cash, that their earnings are increasing year over year, things like that. But on top of that, because within Trade Ideas, you can take any filter that we have, and I'll show you the list in a second. There are many, and filter them down by what it is that's interesting to you. I've taken this same concept that I just taught you guys a second ago and looked for these high relative strength stocks, and then I've combined them with short floats, because we can see that in this market, heavily shorted stocks are scared, right? Because every time they are talked about on the internet, every hedge fund manager is a little bit on the back foot about holding them. So we can quickly just see in the system that not only this one is, strong from a technical point of view, but also has a 20% short float. So on top of this, you can go in and you can check things like recent news. What's the company talking? So here's an ex-dividend date. You can talk about all of the different, basically we scrub all of the news sources that you would think of, pull them into the system. You can read all about the company there. You can find out what this company actually does, what the profile is, in case you want to make sure you're investing in certain sectors or story stocks that you like. Insiders, what's the actual company doing? We have a pie chart here showing that in the last little bit, insiders have definitely been buying more shares than they've been selling, which has been obviously very profitable for them. So maybe some good traders in that company, as well as stocks that are similar to it. So you can scan for competitors if you want to say, hey, I think this company looks good. I wonder what their competitors are up to. You can also go and say, I want to find stocks that look like this in terms of price action. So if I click here on play, you'll see another strong stock. If I go over here to Kirk, another uptrending stock. And the system's just doing this for you. We have some really great server technology in the background that is analyzing the flow of this data and saying what is stocks that are similar to this company. So you can start with one company, you can find out everything you want about them, and then you can kind of go out from there and say who's becoming strong with them, and how is that kind of being pushed along. So that's one aspect. And then the other one is, you've probably noticed up here. So we have scanning, and let me show you the list of the filters. Sorry, before I move on from that, charting. And again, these are all of the different filters in which you can scan through. I'm going fast, but it's going to take some time. Most things that you can think of, you can build scans for with this.
So I've got to say, I'll just kind of jump in here for Michael. There's, we learned early on, and what you're seeing here is often how we present the technology with the most value up front. And Michael's kind of shown an example of this. And over to the far left, we have a series of channels, which we kind of lay out like a Netflix menu. These are movies that have content that you can check into and see that are based on different themes. But the important point is that whatever channel you select, or the ones that you build yourself, as Michael showed you one of his custom ones, is you can see a lot of the same elements, by the way, in each channel. Whether we're looking at a channel that is currently popular right now called Wall Street Bets, or whether we're looking at any of the AI's performances, or a pre-market channel. The components are essentially the same. It's the how they're looking at the market that differs. The key point is this: there is, our objective, and it's a journey. It's not a destination. Is to always provide the most value on the first impression. And Michael was showing you his before with his setup, and looking focus on the score and the relative strength, which is just fantastic. The point though is, there's much more. The rabbit hole runs quite deep, and Michael was showing you hints of that by the list of filters and indicators we have. And so what we found though is that we used to show that first, and that turned out to be more of a stick than a carrot. The real carrot is, here's our thesis, here's our interpretation of the data, built to give you a view of the market, and take a look. And if that is impressive, if that generates value, then you're incented to go look further and deeper into the tool. To do it the other way is just to put stick after stick, or menu after menu, and filter after filter in front of you. And that is the way we operated for quite some time. And it's no small part of our growth over the last 5 years that we turned that equation around and said, deliver for our clients what's of value of a lot of tools can throw you indicators. A lot of tools can show you so many options, you're swimming in them. The trick is to combine them and say, you may have your own way if you were really an enthusiast about our technology to create your own, but here's our best foot forward, which really ought to be a way you evaluate the technology. What's your best foot forward using the features and benefits and tools that you have, that best. And that's what we do constantly by through that channel bar, and through the webinars that we do, and the information that Michael's always showing about his particular setups.
Yeah, and this the channel bar is really, it's a way that we can kind of reach out to our clients and say, hey, this is what we think that we're seeing in the market. You should check it out as well. And as Dave was saying, just completely pre-canned and pre-built scans that you don't need to customize. But if you want to take them and then customize them later, you certainly can. So what I'm looking at now is what we just call our SPAC channel. So everything you're going to see coming through here is going to be SPACs that have high volume, or that something interesting is happening to them to draw your eyes into them. Now, again, we have everything from Wall Street Bet stocks, our partnership with the small exchange, pre-market, if you want to see what's gapping up, we have all of that kind of built right in here. And then what I wanted to show you was just two more things. One is our Brokerage Plus integration. So we have integration with both Interactive Brokers, and E-Trade is very, very close, in which you can build strategies, or if you build a relative strength kind of strategy that, like I showed you, or whatever it is that you want to trade based off all of these different filters, you can then plug that into your brokerage account and have either the system trade it for you, or some combination of you putting in trades and the system managing. So everything you see here, again, this is my real Interactive Brokers account. This is why we made the joke of the meme stocks earlier. I was lucky enough to grab some GME yesterday before the craziness. But the reason I was able to do that was when I find a stock that I like, all I have to do is take it and right click on the stock, and I've set up order scripts that you can do. And you can, say for example, you're a day trader and you want to make sure that when you buy a stock that the stop immediately goes out at the low of the day and that you're risking $100, and that's your trading plan. You can build that trading plan directly into the system. So as you're scanning through these different stocks and as something maybe comes along your desk that you're interested in, you can then go and just take that trade quickly and easily, and everything is calculated for you. So you're not scrambling to do the math. And this is one thing that actually really helped me when I was transitioning from trading for hedge funds and prop firms to myself, and I no longer had a risk manager to keep me honest. This really helps do that, because every time I enter a trade, every time I hit the button, I know exactly what my potential loss is, and that's all calculated for you. So that's all great if you know what it is you want to trade. But say you are a new trader or you're a struggling trader and you're like, I really need almost an assistant. I need someone to tell me where to look, potentially where to place trades, how to manage them, that type of thing. Well, we have built, and we've been running for years now, a machine learning artificial intelligence engine. Now, to spare all of the details on everything that's going on in the back end, but to talk about it a little bit, I'll just say the word for, I know there'll be one guy in the room, I'll just say the word genetic algorithms, and there'll be one guy in the world that say, oh, that makes sense to me. But for the rest of us, essentially what happening is we talked in the beginning about how TradeID is a company built by traders for traders, and how when I built my relative strength model, I went and I talked to these traders that I work with and say, what is it that you guys look for? Well, we did the same thing when teaching this AI, where myself and other traders in the company, basically I talked to them and said, okay, how do you like to trade? And they would describe a favorite trading setup or style or indicator or candlestick pattern. From there, we built 70 of those algorithms up. We were able to then go feed that into this machine learning engine, where every single night it's running, I don't even know the number now, David, it's probably in the 10 million now, Monte Carlo simulations being run in the back end each and every night, with the goal of two things. One, to show you which of those algorithms are performing best in this market. There's periods of time where we all know this, where whatever strategy we have is just, it can't lose. It's amazing. There's other times where that same strategy isn't performing at all for you, right? And that's just the way that trading works. So the first thing the AI does is says, of these 70 algorithms, which ones are working best? Sometimes it might be low float breakout strategies. Sometimes it may be revision to the mean strategies on higher float stocks. Maybe it's stocks that we talked about with relative strength. Maybe it's whatever you can think of. From there, what it does is it says, okay, I want to then go and narrow in and find, of these algorithms that seem to be working the best, under what scenario do they work best? So another example, our low flow breakout strategy. Well, does it matter if it's above or below VWAP for the day? Does it matter if it's above or below a 200 period moving average? Does it matter if the RSI is overbought or oversold? And it's running these what ifs over and over and over again, millions and millions of times on all of these 70 algorithms. So that at the end of the day, I know that was very confusing, but at the end of the day, you basically sit down and you're presented with the algorithms that made the cut. And then as they fire off, you're given trade recommendations. So if I bring up this chart on RCL, this blue line, or this blue box that happened right here, and this blue arrow told you exactly, hey, the AI is looking at initiating a short in RCL right here. It gives you an area that you should put your stop loss right away. Again, always protecting, like David talked about, always protecting that risk, always protecting, because that's, as I say, win rate doesn't matter, right? It's always making sure that you have that stop loss in place. And then on top of that, so the AI exited kind of right in this area on a bit of a trailing stop mode. So you have idea generation, you have protective risk management that's happening through there as well. And then you also have kind of adaptive stop losses. Now, if, for example, when you saw this, you wanted to take this trade and you have your account linked to Interactive Brokers, or again, very, very soon E-Trade, you can just click on that symbol and say, yeah, I like that one. And you'll take the trade exactly the way the AI recommended, and then you can manage it yourself. So back to that, trying to merge this man and machine, where I basically don't scan much for stocks intraday anymore. I look at this knowing that what's going to happen is I'm going to get these trading plans right here on Domino's Pizza. You know, it knew that there was earnings in the pre-market and that this thing was gapping down and that the downtrend was likely to continue, and initiated a short play for it. So again, everything is kind of shown for you, nothing's hidden, and it's great for people who are just starting out with a trading plan. Go back.
Thanks, guys, for the questions that keep coming. They seem to be quite excellent questions, and we'll keep them coming here while we've got a couple of minutes left. Hopefully, I just kind of want to recap here a little bit. You know, we wanted to, as Michael presented here, we wanted to show you a tool that you could use outside of technology, what the concepts of relative strength are, and how to employ them. And then we stepped into the tool to kind of show you the layout of how we employ relative strength and how we employ a vast different number of indicators that we've created, like our score, our stock composite ranking system, which is a combination. It's almost like Investor's Business Daily, you know, just one number. If you had to understand the entire company and the stock, here it is in one number. And then we've obviously showed you some of the capabilities of how you employ risk through this technology. And that's what, hopefully that's the same kind of concerns or standards that you want to be asking of your existing technology. As I said before when we started, what do I feel that this is, do I feel confident in my decisions? And is this taking steps out of the homework I would be doing outside of, the trading? And any hours I'd spend outside of trading should be leveraged. You should be doing far more. Your research, maybe you don't have to do as many hours outside of trading as homework setting up for each day. And when you have systems like this, maybe Michael, you can talk a little bit about your routine before and after, at least the routines that I know you are working on certain things after hours, but they're leveraged, to accomplish so much more than what your routines were before using trade ideas.
Yeah, and I truly, and I've actually made a video that I called to treat trading like a sport, because I'm with you where I think there's far too much onus put on traders kind of to make the decisions on the fly in real time, all themselves, trying to do all the research as things are going. So one of my biggest routine changes now is that essentially I can do all of the work and the research and everything the night before. And then I know that when I come into the trading day, these scans are taken care of for me. So if I take a scan, I can then go and I can back test. And this is something we didn't even have time to talk about, but I can take a strategy, I can build a strategy, I can back test it and have the system say, yes, this is something you should spend your time and energy on, or no, this is something you should ignore entirely. And that kind of almost gives a level of zen when you come into the trading day, in which you're able to say, okay, I know exactly what I'm going to do today. All of the work is done. I just need to sit down and wait for trade ideas to give me an idea, to give me an alert, whether it's something like this back test that I'm running right now, this strategy that I've built, or whether you're new and you don't quite have a strategy yet and you're going to rely on the AI to give you symbols. You're no longer scrambling for, oh, I need to do all this research and figure all this out, because as anyone who's day traded for a living knows, you get a lot of battle fatigue at the end of the day. So by having your decision process kind of focused in and on an autopilot, where when the lights are off and everything's not crazy, you're doing all your homework, and that when the lights are on and the market's moving, all you have to do is then sit and follow the plan that you've built. it just makes everything way less stressful and way more mentally impactful, so you can sit there and kind of speak, just follow your rules and deal with them from there. So again, whether you're doing something like you see here, which is again a strategy that I've built and I've back tested, and here's the back test for, or whether you're doing something where you're just going to say, I'm going to wait for the AI to suggest things, and then I'm going to try to figure out from there which of those that I will, I'll be interested in. So I think we've gotten all the questions, and I think our time is about coming to an end here as well. So is there anything else you wanted to say, David, before we say goodbye to the good people? Other than thanks for watching us.
Yeah, thank you. Just that these recordings, our time and the times of others are being recorded. We thank you so much for taking some time out of your day to investigate and improve. Really, hope you've found some of this quite relevant to your trading routines. And we've found some avenues to make your routines sharper and your trading better. We can't thank you enough for your time.
Awesome.
All right. Sounds good, guys. Thank you so much. Yeah,
thank you for having us.
Yeah, very interesting stuff. Really enjoyed that. And you may have noticed, you might want to put up that the special for the TradeLog.
Oh yes, let me grab that again.
For anyone that maybe missed that.
Yeah, I'll just put this back in chat here. Right there. I think that went out to everyone.
All right, good.
Awesome.
Excellent. Thanks again, guys. We really appreciate your effort on that, and a lot of stuff to think about there. Really good stuff. Thank you.
Awesome. Thank you for having us.
Yep. All right, sounds good. We're moving on. Let's see, our next speaker, I'll make sure I'm in the right time slot. Yes, 3:15 is the general manager of the 106th largest website in the world, the #1 destination for charting, trading, and collaboration. His name is Pierce Crosby, and he is the general manager of TradingView. He's going to present to us today on the subject trading skills through the cycle of creating, sharing, collaborating, and learning. Mr. Crosby, you have interest.
Awesome. Can you guys all hear me well?
Yes, we can.
Perfect. All right. Well, again, Tim and Les, thanks for bringing me in. It's always great to reconnect with traders and investors who are trying to improve themselves, either through a product like TradeLog or through various other means. It's great to kind of take the stage after David and the Trade Ideas team. Long time fan of the company, and before my time at TradingView, I ran point for business for StockTwits, which is a very close companion of the Trade Ideas team. So good to see that we are in arms with the right people. So today, I just wanted to walk you guys through a little bit of kind of how we see social trading evolving and what that landscape looks like, and how to actually extract some value from that versus ending up on Wall Street bets and just getting blown up, which is kind of the common path for most people who are just discovering trading, or have maybe been at it for a couple of years and then find themselves way over their skis after they saw something on Reddit, and next thing you know, their portfolio is down more than a third, or in some unfortunate cases more than 100%, which we've seen a lot over the recent days. So just by way of background, TradingView has been around for about 10 years now. We've very much focused on building a pretty comprehensive trading platform. So I believe you guys can see my screen. For those who are familiar, we really focused on charting, and then we also have a very large social component to our business. And so just so you can kind of get a sense of what we really do, we build pretty advanced charting capabilities, and a lot of bells and whistles included around that. The company's about 300 people strong. We're headquartered in London now. I actually sit in New York, but you guys are catching me abroad this week and next week, trying to get away from the snow, which is a very common, unfortunate circumstance of living in the Northeast for most of us. I know the Trade Ideas team actually is out in beautiful Southern California, so they never have to experience this. So congratulations to them for setting that office up. So broadly speaking, I mean, in recent days, we've seen a lot of mania around Reddit. As you can see, kind of the top idea on TradingView today is actually Reddit related, as it relates to GameStop and a lot of the mania that's occurred around the space. But what we aim to do at TradingView is basically surface more actionable ideas. And while the Reddit mania is obviously interesting, the likelihood of actually building a repetitive or repeatable trading strategy off momentum-based mania like Reddit is pretty low probability, if you will. So for the most part, our network focuses on very actionable kind of targets, and we're multi-asset. So this isn't a focus on specific equities, but rather a focus on kind of the global markets. Probably the most common parallel that we get a lot is interactive brokers. Because we are multi-asset, we do have a ton of people that trade both futures, equities, FX, as well as other instruments in parallel. The baseline of who uses TradingView, it is people that are kind of looking at a very broad spectrum of tradable assets. Myself specifically, I definitely don't pertain to being a day trader, and for the most part, the situations where I do, get more into the trading space, I often burn myself pretty regularly. So, yeah, I mean, I definitely don't, sit on a high horse or, kind of expect anybody to take, what I'm saying here as investment advice in any way. But following kind of the best people on TradingView, I can tell you, kind of how they use the platform, and really, what it comes down to is the ability to share ideas with others and have that feedback come at you in real time. And beyond that, the idea of actually, doing that both ways. So, the idea of sharing ideas and also receiving ideas is really kind of the nature of what we've built. So I'm pulling up an example. This is just on our homepage, but obviously you can dive specifically into a given trader or investor who's sharing ideas on TradingView. But we have kind of a very specific trading plan here, which is basically a combination of technicals as well as a lot of folks that are working on kind of larger macro outlooks or fundamentals. But the focus being Fibonacci's here, and basically having a multi-part breakdown on kind of an overall thesis for where an investor might see the market heading, and what are the key levels that somebody should be watching if they are considering a trade or an investment like this. And so the level of kind of granularity that you see here is a combination of really hard work put in by the investors themselves. And then on our end, what we aim to do is really just surface and highlight the best ideas that we find across the platform. So to be clear, we now have roughly 30 million users on the platform every month. We've grown about 150% year over year. So if we look back at 2020, even the beginning of 2020, yeah, we've grown more than 150% since then. But we're already 2 months into 2021, so we're now probably north of 200% since the beginning of last year. So what you're, really looking at is a very in-depth kind of piece of research. And then when it comes to accountability, it's a huge thing for folks at TradingView as well. So, you can look back at specific trades that this person has made over the last several months. He's actually linking to over a dozen relatable trades or various markets that he thinks are nearly as kind of compelling as this one. And so what you see is in real time people are basically leaving comments on what they think this idea really kind of represents. A lot of people are maybe positive, but there are others that obviously have different opinions, right? So Hamza, as an example, is a longtime member of the platform, and maybe is thinking about kind of a retrace versus a movement upwards. And so obviously you have kind of these conflicting opinions back and forth, and it makes for a better kind of conversation overall. If you can notice too, these are all threaded conversations. So people can dive in specifically to one, small portion of an overall, trade idea, and that can be kind of, dove into in granular detail, but not losing track of the larger picture of what people are talking about. So in total, on a monthly basis, we have north of 3 million of these trade ideas shared with the community. Obviously, I'm just showing you a very small sample, but if you wanted to drill down into any specific section, yeah, to be clear, I mean, we do offer, all of these various kind of curated sections of content. So if you wanted to, dive in yourself, there's all these kind of top ideas which are, curated on a daily basis. These are relatively real time as well. So, we aim to keep things extremely fresh. And again, cross asset. So, you can look at the fractals of Bitcoin. You could also look at, some uses of our tools, the actual kind of advanced functionality that we're building every day. So we generally try to educate people as to, how to use the product better. And, obviously in all these pictures is a chart, right? So I haven't really spent a ton of time there, but what I'll do is I'll just kind of dive into a little bit of what that actual product looks like. And so really, this is the social layer that's built around the core software. The reason I won't spend a ton of time on the software itself is, everybody has software. And so really, when it comes down to the differentiation that we provide, I really do think that comes down to community. And I know you guys might not be able to see it because Zoom will cover it, or potentially you might not be able to see kind of the total scale of this, but in our kind of right-hand rail as well, we also have real-time chat, and customers are chatting and trading basically every day with each other. Because I'm actually a moderator of our streams, people hit me up every day for various kind of questions or ideas. But our chats are pretty ubiquitous. And, just to give you an example, I think our crypto chat now has about 24 million people, 24 million messages of all time. 12,000 people have been chatting today, about 8,000 messages per day. So 8,000 kind of, 8,000 kind of individual comments for people that are actually very interested in the subject matter. But it's basically building up a huge index of investing ideas. Forex is very similar, a bit smaller, of course, just because the rate of, kind of the asset growing has obviously not been nearly as fast as crypto. Stocks and indexes, likewise, you see a ton of, kind of real-time chatter running through as we're talking. In fact, there's plenty of different ideas. And people are mostly, shooting the shit and kind of commenting pretty free form. But this is definitely the best place for people to just catch up and see what's happening in the market. So we really think that we have a good combination of both social, just kind of day-to-day chatter, as well as obviously people who want to take a deeper dive or talk more holistically about an investment idea. And that's where they actually come to publishing ideas directly. So the platform itself is basically what you see here. I tried to slim it down a little bit. Obviously, the way our business works is, 80% of our product is free. And for, that 20% of, the bells and whistles that everybody kind of requests, you're charged a small fee, anywhere from $14 a month all the way up to, I think at the highest end of our product is $60 a month, which again is relatively pretty cheap versus a lot of the competition. And because of our scale, we really actually aim to reduce prices even further and aggressively. The goal being is we basically think that we can saturate the market with extremely high performance tech and almost give it away for free. We really do think we can do that in the future. And I think our scale really speaks to that, just in the sense that we already have 30 million people visiting the site every month. And so that's kind of a really good first step for us. So in terms of what you can do here, there's a lot. Just to kind of really water it down, if I started with a simple chart, we have everything in terms of assets. Like I said, we actually list, I kid you not, I had to look this up the other day. We list over 600,000 different assets on TradingView, which I actually didn't even know we had that many assets in global markets, but we do. So over 600,000 different assets, everything from Malaysian cryptocurrencies to stocks in South Africa or Nigeria. You name it, we probably have it. We also have a ton of CFD equivalents as well. So we have indexes, futures, et cetera, but we also have a lot of CFD products, which is very, very high in demand for customers who are trading futures or trading kind of swaps products that require a little more sophistication. And basically a lot of firms won't give that away in real time. We happen to have real-time licenses with both direct brokerages as well as a lot of the exchanges themselves, where we can give away a lot of this data in real time for customers. So a ton of different assets to compare. In terms of indicators and oscillators, this is where we really shine. I mean, we have, well, I don't know, I mean, thousands and thousands of built-ins. So our built-in tools, everything from ratios, Bollingers, moving averages, Kiplinger's, pretty much anybody that you can think of in the industry that's built a brand, we generally have their stuff. And then on top of that, it's really important to note that, again, going back to the community side of things, our community actually builds oscillators and indicators, as well as backtesting strategies. There's a ton of additional kind of features here that are actually built by the community. And the number of people that are subscribing to these, you can see in real time. So 70,000 people are basically using this momentum indicator created by this user. And so this level of transparency, again, is kind of what we aim to do, to basically show people, okay, where do I get started? How do I even, use some of these tools, et cetera. And so our public library is again, it's absolutely massive. And I encourage anybody to kind of look through it and see what they can glean from it. The best part about it too is if I found something really cool, I can actually just look at the source code itself. And I don't think a lot of platforms allow you to do that, but we actually have our own coding language called Pine. And so right in real time, you could basically code up your own strategy or copy paste somebody else's code if you wanted to. And what that does is basically it allows you to start becoming an actual developer and creating kind of, more interesting or advanced strategies in real time. And so Pine is a huge kind of beachhead for us because the native language is used now by a very large chunk of the industry. And so we would definitely encourage people to kind of, dive a little deeper and see if they can, code up some of their own strategies, even if it's something very simple. A great example is if you had a simple moving average and you actually like to do it, I don't know, say 52 days rather than a 50-day moving average. It's super simple to actually pull up the source code and edit it directly yourself. So what you do is just make a copy, and then that would live locally here on TradingView. the best thing about all this too is that for those kind of tuning in, you can actually save all of these scripts as well as like the actual display and interface that you see here. And to be clear, we have actually down to the second chart as well for those who want real-time data and kind of real-time functionality. I don't think a lot of people understand kind of how hard it is to get down to the second data, but we have down to the second data. We actually have down to the tick data, but we only have it in beta. We haven't actually rolled it out for all customers. It's a tick by tick kind of performance versus on a per second basis. In terms of additional functionality, a lot of people think that we are kind of just a technical platform or kind of a TA platform. We actually do have a lot more than that, and the reason I want to bring it up is people don't really think about TradingView as kind of like a fundamentals platform. We actually do now license global fundamentals data, and we actually give that away to our customers for free. And so if you ever wanted to look up, say, the free cash flow for Tesla over the lifetime of the company, we actually now have all that data, and again, provide it for no additional cost to customers. You can basically chart this in any way you want. I just have simple line charts for kind of simplicity's sake, but from a customization standpoint, you can make this pretty much anything you want. So a histogram is probably not the right way to think about it. But in terms of something like I guess it's using the average as kind of the XY axis. So I could pin this to my X axis to give you a better sense of what that would look like. The X axis. But yeah, so there's a ton of different customization and functionality you can build in here. And again, we don't charge anything for this type of data. So, I could look at their debt to revenue over on a quarterly basis. And if I wanted to, going back for years and years and years to look at these kind of various ratios over time. Fantastic chart to look at. In addition, of course, to the core, which is our core charts, as you see here. So I think that's probably a good starting point. I guess the one other thing that we might mention is the idea of our alerts tools. For those who don't know, we do have a pretty robust alert system, and I call it an alert engine because actually a ton of people are now using this externally in their own trading software. So while the alert engine is obviously works really well natively, in terms of we have every type of potential alerts you could possibly apply here, rules as well. So anything from volume to rate of change, any kind of indicator, oscillator, whatever I would apply to this chart, you can add alerts to that. Funny enough, you can add alerts to alerts now, which is, it seems redundant, but there's actually some use cases for that. And what's really interesting in terms of what I was saying around more or less using it in their internal software, people are actually now connecting their own platforms to TradingView's alert engine. So you could webhook this into your own trading software and basically have it feed the back end of what other systems you're building on your end. So a perfect example would be, again, using my predecessor, Trade Ideas. If they wanted to pull in a very specific rule-based alert system, you could actually set those inside of TradingView and have those fire off to the community on Trade Ideas, if that was somehow valuable to Trade Ideas customers. So we have a lot of traction around, but nobody really talks about it from kind of a public setting standpoint. So, getting back to it, like I said, for me, kind of the workflow is to, dive into the chat, kind of understand what's trending or what people are actually talking about versus, versus what's in the news. Obviously, it's good to compare and contrast, what you think is happening in the news versus what's actually happening. If I had a couple monitors set up right now, I could show you kind of the more advanced way that, you can set up things on, different time frames, different markets. Obviously looking at things like cryptocurrencies versus, say, the US dollar versus the SPX versus, tons of other kind of asset classes. That's all kind of ready to go here. I think the best comparison I was actually looking at the other day was the performance of Bitcoin versus the performance of Tesla, and what that looks like over time, even though, yeah, I mean, obviously on a percent scale, it's going to look really wonky. You can change the actual price scales for each of these as well. So totally up to you. I guess the other thing too I didn't mention was drawing tools. So obviously there's pretty much every kind of drawing tool you can imagine in here. I won't spend a ton of time because I don't use a ton of drawing tools myself. I'm more of a long-termer, and so I'm not looking at the specific technicals. But there's a lot of different kind of things you can add here. Yeah, I won't spend a ton of time looking at each, but yeah. So I think that's a good summary of the platform. Broadly speaking, we're growing like a weed. The one thing from a social standpoint, we started with chat and then being able to share or publish charts, like I was just showing you. And probably the most interesting new feature that we've launched is live streams. So people can actually now live stream their trade ideas, if you will, in relative real time. And so in the past we have kind of a lot of folks streaming, but yeah, I mean, upwards of 600 people are streaming every week, to give you an idea, and it's still in beta. We haven't actually opened this up to the world. As you can see here, people are streaming all over the world as well. So we have somebody in Persian, streaming and talking about markets globally. This guy talking about bond yields. There's people that actually are now building their own shows. I don't know how familiar the audience is with Twitch, but basically imagine a Twitch for traders, and that's really what we've built with TradingView. So Global Market Signals is one of the best. He's basically streaming every single day, and yeah, it's pretty intuitive. More or less, you could just hold things like login credentials, etc. Oh, you know what? Oh, I have to actually read the house rules because I haven't streamed in a while, which is great. We do have a pretty aggressive house rules, just for those who are concerned about kind of reading the wrong information or getting bad ideas from the community. We also have a global moderation team. It's about 40 people. And their main aim is to actually limit a lot of the bad actors who would otherwise, suggest something that we can't really get behind, or is false information, or something like that. So I won't take too much time on streaming. Just know that you could basically build your own branding around this. You could have your own live show. And then, you could actually do a private stream as well. So if you just wanted to do a stream to your customers or to, a very small select number of people, you don't have to do it publicly. So you can build networks here, which I can't talk about yet. But the idea being is will be a single platform where you can basically share content, whether it's video, audio, etc., to all of your various platforms, more or less becoming kind of a toolkit, if you will, for social interaction. So yeah, so that's kind of where we are these days. I think as Tim mentioned in the intro, the 100th or so largest website in the world. Not to toot our own horn any more than I usually do. It's as the GM, it's kind of my job to toot the horn, so I don't feel too bad about it. But yeah, I mean, since we actually talked to Les and the team a little bit ahead of this, we've actually grown a significant larger amount since then. So we now rank the 83rd largest website in the world. And I would encourage anybody to find a larger financial website than TradingView, which is really, you know, something that we're extremely proud of. And to be honest, it just says a ton about the kind of quality of the product overall. While this shows kind of the average time on site for all users, if I could show you the average time on site for registered customers, people that are actually kind of registered with the product, you know, the average time on site is roughly 2.5 hours per day. And I don't know any other trading software that kind of has that scale in terms of usage. So so we're really excited about it. The thing is, you know, we're actually still very much thinking about, we're just getting started. And we do think we can crack that top 50, which is, you know, very much in line with you know, some of the biggest websites in the world. But to be clear, even today, I mean, we're you know, 100 websites larger than CNBC. We're actually 5 websites larger than CNN. You know, we're a couple hundred larger than investing.com. You know, we're a couple hundred larger than marketwatch.com as well. And so really kind of the scale of the audience has really ballooned. And, you know, this isn't something that's happened recently. I mean, we've been building for over 10 years. And that's really kind of the backbone of TradingView. You know, we're 180 developers now around the world. So it's definitely not a small business anymore. We're kind of a substantial player. So I know we have about 15 minutes. I generally think that I'm pretty satisfied with the overview. If you guys wanted to dive, you know, deeper, I encourage you to do it. There's no requirement from a sign-up perspective. Everything is actually available on the site, and you know, we don't charge anything to use it. If you want things like real-time data, you know, advanced alerts, all this stuff, you know, sure, we have a kind of a subscription model, but all the things that I'm demoing for you guys right now are free, and yeah, there's no kind of there's no minimum requirements. So with that, maybe we have a couple questions, and let's see, I can pull up the Q&A, see what that looks like. Tim, maybe you have some ideas. Can't
Yes,
seem to
there's
pull up
one
myself
question
for some
here.
reason.
Any news about the integration with interactive brokers?
That's funny. I wonder who wrote that. But so Interactive Brokers is a longtime partner of TradingView in some capacity. For those who, I guess, want a little bit of a scoop, we are integrating Interactive, and they will be live, drum roll, probably the end of this month, if not early the following month. So it's a really big announcement for a lot of different people. People that have used it Interactive for years but love our tech, have wanted to have the best of both worlds. So we will be integrating them within the month, and just so you kind of see what that looks like. You know, I could connect my brokerage account today, so all the products that I demoed with you now can be tradable in real time. And in terms of the, you know, top winners for last year, you know, TradeStation was actually our biggest winner based on the number of accounts that they connected to TradingView. Oanda Oanda was the most popular. TradeStation had the most robust technology, and they also offer kind of multi-asset options, so they won the most awards overall. But yeah, we have today about 15 connected brokerages, everything in the crypto space, FX space, equity space, etc. So it's definitely a good starting point, but Interactive is going to be quite substantial, and there are in the pipeline about another 15 or so that we plan to launch this year. I can't talk about most of them, but Interactive, you can consider that kind of cat out of the bag, if you will. It's very, very exciting for everybody.
Oh, great. Another question: are you publicly publicly traded?
Oh, everybody wants this one. So we've actually, in recent times, talked to quite a few companies that would love to take TradingView public. You know, at current, we're very happy being a private company. And, you know, broadly speaking, the team is extremely dedicated to building a massive company. And we don't think that, you know, at this time, there's any kind of interest in the public markets. You know, we've been quite profitable since inception. I think that's, you know, something that's very categorically different than a lot of the players in the fintech scene. Is we've always been profitable since day one, and as a result, we don't really, you know, have a huge demand for capital per se. And so, yeah, we'll remain private until proven otherwise. I think that's the way to think about it.
Okay, I think I'm not sure, there's one more that says, can you cover integration with platforms? But I think you kind of did that, but.
Yeah, I mean, you know, just to give people an idea, we are integrated with quite a few partners today, but I mean, it's important to note that we actually have an open architecture that allows other partners to connect as they see fit. So I'm pulling up on the web browser, if you give me 5 seconds, architecture looks like, and we actually have this all publicly listed. So if anybody you know, wanted to start building to our systems, it's perfectly possible for you to do that if you represent a broker dealer with a, you know, given license in your given country, for sure. But so we have everything from, you know, orders, you know, various order types and order kind of integrations. Market data, of course, you know, comes along with that. So if, for example, when Interactive Brokers does launch next month, we will also have Interactive Brokers data on TradingView, which is quite substantial as well. Like I said, you know, the more data that we have, the better. And, you know, 600,000 assets is definitely a good starting point, but the more we can get, you know, we'll take it. So all that data will be streaming through to your version of TradingView. And so today, you know, I have a TradeStation account myself. So, you know, if I want to look at real-time futures, I get that data from TradeStation. So now I can see that data on TradingView. There's no additional cost there because basically we're just another front end, but you still have that subscription with TradeStation as an example. So the same will apply for any new partner that integrates. You'll get that real-time data passed through to your end customers. And yeah, we think it's a pretty substantial kind of value add because for a lot of folks, you know, especially those in kind of the, I guess, modern brokerage world, you know, it takes a ton of time to build a pretty substantial front end. And we think we really have a job of, you know, opening up kind of best in class trading partners to kind of the scale of audience that we have today. So, you know, if we say have 30 million, it makes a ton of sense to connect, you know, best in class trading partners there. And so, so that's kind of the value prop that we provide for a lot of trading folks. And again, another 15 or so along the way. So yeah, that's probably a good summary. But yeah, I mean, happy to talk more with other brokers who might be, you know, kind of interested in that. It is kind of a core focus for me, along many other things. We're a pretty lean team, so I generally have to do a lot, but integrations is definitely something that I'm very, very focused on. And yeah, it's been fun thus far.
Okay, I think that's all we have for you. We really appreciate you stopping by and giving us that update and helping us see how we can make our trading better.
Yeah. Oh, thanks. Appreciate it, Tim. And again, if anybody has any questions, feel free to reach out to me on, you know, whether it's Twitter or email. I'm pretty available as always. But Yeah, stay tuned. There's always new stuff to come. And no, thanks to you guys for putting this on. Great to have everybody.
Yeah, thank you. Stay tuned, everyone. Good stuff. Thank you so much. All right, that brings us to our first break, although it was supposed to be our third break. And I am due for a break myself. So we're going to shut down for a few minutes. We will be back at about 4:15, and then we'll bring our last one presenter on at 4:15. So enjoy the break.
Say you like the wind blowing through your hair. Well, come on, roll with me till the sun goes down. Texas sun. Say you wanna hit the highway while the engine roars. Well, come on, roll with me till the sun goes down. Texas sun, oh yeah. Texas sun, caressing you from Fort Worth to Amarillo. Well, come on, roll with me till the sun dips low. Texas sun. Texas sun, oh girl. Texas sun. When I'm far from home and them cold winds blow, stuck out somewhere, the folks I don't know. 'Cause you keep me nice and you keep me warm. Wanna feel you on me, can't wait to get back there again. Texas sun. Texas sun. Texas sun. Texas sun. You say you like the wind blowing through your hair. Well, come on, roll with me till the sun goes down. Texas sun. Texas sun. Oh, baby, you're so gorgeous. How about you and me? Take a little trip. In the big body. Take a ride with me, babe. You by my side. How does it sound? You and I. Oh girl, take a ride with me, babe. You by my side. How does it sound? You and I. Do I look lonely? I see the shadows on my face. People have told me I don't look the same. Maybe I lost weight. I'm playing hooky with the best of the best. Pull my heart out my chest so that you can see it too. I'm walking the long road, watching the sky fall. The lace in your dress tangles my neck. How do I live the death of a bachelor? Oh, oh, letting the water fall. The death of a bachelor. Oh, oh, seems so fitting for happily ever after. Ooh, how could I ask for more? Lifetime of laughter at the expense of the death of a bachelor. I'm cutting my mind off. Feels like my heart is going to burst. Alone table for two, and I just wanna be served. And when you think of me, am I the best you've ever had? Share one more drink with me. Smile even though you're sad. I'm walking the long road, watching the sky fall. The lace in your dress tangles my neck. How do I live the death of a bachelor? Oh, oh, letting the water fall. The death of a bachelor. Oh, oh, seems so fitting for happily ever after. Ooh, how could I ask for more? Lifetime of laughter at the expense of the death of a bachelor. The death of a bachelor. Oh, oh, letting the water fall. The death of a bachelor. Oh, oh, seems so fitting for happily ever after. Ooh, how could I ask for more? Lifetime of laughter at the expense of the death of a bachelor.
Lay, lady, lay, lay across my big brass bed. Lay, lady, lay across my big brass bed. Whatever colors you have in your mind, I'll show them to you, and you'll see them shine. Lay, lady, lay across my big brass bed. Stay, lady, stay with your man a while. Until the break of day, let me see you make 'em smile. His clothes are dirty, but his hands are clean. And you're the best thing that he's ever seen. Stay, lady, stay with your man a while. Why wait any longer for the world to begin? You can have your cake and eat it too. Why wait any longer for the one you love when he's standing in front of you? Lay, 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 lay across my big breast bed. Stay, lady, stay. Stay while the night is still ahead. I long to see you in the morning light. I long to reach for you in the night. Stay, lady, stay. Stay while the night is still ahead.
I found a pile of Polaroids in the crates of a rack.
I was following the eye, 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 was following the pack, all swallowed in their coats, with scarves of red tied round their throats to keep their little heads from falling in the snow. And I turned round and there you go, and Michael, you would fall and turn the white snow red as strawberries in the summertime. I was following the eye, 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 was following the pack, all swallowed in their coats, with scarves of red tied round their throats to keep their little heads from falling in the snow. And I turned round and there you go, and Michael, you would fall and turn the white snow red as strawberries in the summertime.
Well, welcome back to our show. We've got one more. We saved the best for last. Well, I'm not going to say the best, but pretty darn close. We have Robert Green, sorry. He's a CPA, CEO of GreenTraderTax.com, managing member of Green, Neuschwander, and Manning. Bob is a leading authority on trading tax, and he has appeared in the New York Times, Wall Street Journal, Forbes, and Barron's. What I'm trying to say is he knows what he's doing. So without further ado, we're going to turn our microphone over to Mr. Green. Bob?
Thank you, Tim. Nice to be here today. Let me share my screen. Okay. So is everything all set? You can see the screen and my video, right?
Sure can.
Okay. Let's talk about how to set up a trading business for optimal tax reporting. Here's a current photo. You can see me on the video anyway. I'm managing member of Green, Neuschwander, and Manning LLC, our CPA firm, CEO of Green Trader Tax. Today's informational is educational. You may need one-on-one tax advice. We do that. We're not affiliated with TradeLog. We've been working together since 2000 when we helped them add mark-to-market accounting to the program. And we're glad that TradeLog is compliant with our content on IRS rules for wash sales and otherwise. So we work closely together. A lot of our clients use TradeLog. If you are eligible for trader tax status, consider setting up a trading business to maximize tax benefits. So if you have 4 trades a day, 4 days a week, and you're hitting all the holding periods under 31 days, you probably qualify for these benefits. I'm going to show you how to qualify and claim the TTS, which you can do as a sole proprietor even for 2020. We're also going to discuss how the individual with TTS can deduct certain business expenses, startup costs, home office expenses on a Schedule C with no entity required. Without trader tax status, you get suspended investment fees and expenses per the Tax Cuts and Jobs Bill. So TTS is really helpful. You can arrange even further benefits with an LLC. So you may want to set up an LLC now. Tax is a partnership for ring fencing your trading from investing, but better yet, the S corporation to unlock the employee benefits for health insurance and retirement plan contributions. Those can be some big deductions. So first, how to be eligible for trader tax status. These are our golden rules. We're looking for a volume of 4 trades per day, 16 trades per week, 60 a month. And if you're trading the full year, then 720 per year on an annualized basis. We take that from the Pope tax court case. TTS is not defined in the statutory law. We have to look to the case law. That was a pretty good case, which was pretty current as well. So we like those numbers. It lines up with our other work on the subject. So there's been very little changing of our golden rules over the years. Now you're going to count each open and closing trade separately. If you make a complex options trade with multiple legs, if you put on one combo trade and the broker puts on the legs for you, you probably should count it as one. Don't count option expirations or assignments. So you're counting closing trades. So that's the volume of trades. Frequency is out of a 5-day week for securities. Do you execute all 5 days or 4? We're looking for 4 or 5. We want it to be close to 4, which is over 75%. There's a little bit of breathing room here. The tax court case is disallowed at 50, 55%, 45%. So we'd like to see it close to 4 days a week with at least a trade execution. You may work that day, but if you don't make a trade, then you're losing 1 day and your frequency goes down. Holding period is the most important factor. Per the Endicott tax court case, the IRS said the average holding period must be 31 days or less. And that's a bright line test. If you come out at 32 days, you're out of luck. So if you have an investment portfolio of securities that are not sufficiently segregated from your trading, and you're trading same symbols that you're investing in, the IRS may look at everything as one portfolio for trading and investing, count those long-term positions into the holding period, which could disqualify you. So you need to carefully segregate your investments from your trading. So you can trade part-time and qualify for trader tax status, or full-time. For example, a lot of West Coast traders, they trade the morning session, they may trade the full day and go to work there. They have flexible hours working at home under COVID conditions, and they may take care of their full-time job from 1 o'clock in the afternoon to 8 p.m. So a lot of people do match up well with the markets and do have enough time spent to qualify as a part-time trader. It's the same golden rules. So having a full-time job does not prevent you from using trader tax status. Now, again, the benefits are expenses, $475 mark-to-market accounting, health insurance, retirement, no wash sales. There are lots of things on the line here, all coming back to the linchpin of trader tax status. Hours per day. We're looking for more than 4 hours per day. Almost every day the markets are open, all time counts, research, administration, trading. You want to avoid sporadic lapses, on a month, off a month, on a month. You might take a big loss, retool. That can be your vacation, but you can't be on and off too much. You have to be regular, frequent, and continuous. Intention. You need to have the intention to run a business to make a living, primary or supplemental. It doesn't have to be the primary living. It's not just a mere investment activity. It's a business to trade your own funds, not investors, but you have to have the intention of running a business. Operations. Most traders have significant equipment. They have a computer with multiple monitors, a laptop, iPad, iPhone, a trading workstation. They have serious equipment. You can do it with just a laptop, but most traders have significant equipment. And they put that onto a desk in their office, home office in the home, and they have the home office deduction as well. And they have subscriptions and various business services. And so they have a bunch of expenses. It's not just a mere investment activity. Account size, it should be material to you. If you're a multi-millionaire and you're trading with 15,000 minimum, that's probably too little, but 15,000 minimum is okay for people without a lot of money, but that is the minimum we use. If you're doing patent day trading, you need to have $25,000 with a US broker for those margin rules. So 15K minimum, but if you're very wealthy, it should be more. What doesn't qualify? If you license a third-party automated trading system, an ATS, that does the entry and exit points and through API scripting does the execution of trades, you're not really flying the plane. You're more of a passenger. You need to be the pilot using automated controls, but manually flying the plane and overriding as well. So you need to significantly depart from the ATS signals and, or better yet, self-create the automation. Now, most people using ATS that I work with, they're computer IT professionals, computer scientists, software engineers. They design, write the code, and do their own ATS system. Sometimes they design it if they're not a programmer and hire a programmer to just like translate the language for them. Now, even more than ATS, I see a lot of these new services that I would say are scanner type services with offering trade copying services on top of that. So I'd like to see you do manual trading, your own ideas, but you use a scanner for general information, that's okay. But if the scanner is giving you entry and exit signals, stop losses, and you are not cherry picking and you are not analyzing those trades on your own, you're not departing from them, you're trade copying, that may not qualify for trader tax status, nor would the expense be a trader tax status business deduction. Similar to engaging an outside investment manager on a separately managed account, that doesn't qualify for TTS, or trades in your retirement account or your taxable investments. So hopefully you have a trading account with a good trading broker where you're hitting all the numbers, manually doing the trades with your own ideas, using software, but self-creating it or overriding and cherry picking it. So let's say you do that, and you did that for March to December 2020, and you started this year doing it, and you plan to continue for the rest of the year. You don't have to do it for a full year. You got in after the COVID crash last February, March, and you rode the wave of pandemic-fueled traders to great success. A lot of people did. We've been tremendous surge in demand of new clients, as all the trading companies have as well. Good news, you can claim trader tax status, sole proprietor business expense treatment for 2020. And you can make a 475 election if you missed the boat last year. You can make it for this year. And you can consider setting up an LLC that either is taxed as a partnership owned with your spouse, two partners, partnership, or single member or spousal member LLC that makes an S Corp election for the health and retirement deductions. So let's start with sole proprietorship. You file a Schedule C with your Form 1040. An individual TTS trader deducts business expenses, startup costs, home office deductions on Schedule C, just like other sole proprietors, but you don't have revenue on Schedule C. Your trading gains and losses go on other tax forms. 8949 for securities, 6781 for futures, Form 4797 for 475 trades. Schedule C expenses are above the line deduction from gross income. If you deduct $20,000, you might save $8,000 or $10,000 in taxes if you're in a high tax bracket, federal and state. Now, the Schedule C expenses also reduce self-employment income. So if you have one Schedule C as a consultant, a second one as a trader, that trader Schedule C will reduce your SEI and your SE tax. You can use an individual brokerage account. A lot of you have that, a joint account, an account in your name. It's got to have your social security number on it. If you're trading a spouse's account and you're the trader and your spouse is not the trader and the spouse's name only is on the account, your spouse doesn't have TTS and you don't either. You're an investment manager for no compensation and your spouse is an investor. So it can be a joint account. No election is required for a Schedule C sole proprietor. It isn't, it's determined, TTS is determined based on the facts and circumstances assessed later in the year and at year end. So you could look back for January, February, year to date, see how you're doing. But you're not ready to take the bread out of the oven yet. You'll take it out at year end. If it rose to bread, you're TTS. If it's flat, you're an investor. So it's an election wouldn't do you any good. The IRS doesn't care about what you elect, what you intend. They care about what are the facts. What did you do? Did you trade enough to qualify or not? Now, don't confuse that, conflate it with Section 475 mark-to-market accounting. That you must elect on time, which is conditional on having trader tax status. So why are you going through all these hoops? You want to first and foremost deduct business expenses. You want to deduct a home office, $50,000 for your home. 20% is home office. That's $10,000 plus depreciation. It could be $15,000, $20,000 deduction. That saves you some nice money. Education, $5,000, $10,000, $15,000, all deductible. If it's pre-business education, you can capitalize it as Section 195 startup costs if it's within 6 months of TTS commencement. Startup costs, that's your Section 195. Organization expenses, you're setting up your LLC, you're paying us, the lawyer, the incorporator, the state, all deductible up to $5,000 the first year, only costs $1,000. Margin interest on your trading positions. If you leverage investment positions and use the funding to trade, you might get a business interest deduction there too. Tangible property expense, that's your computers, your furniture, your fixtures, items under $2,500, just get an expense. You don't have to depreciate it. If it's over $2,500, you do your Section 179, 100% depreciation or 100% bonus depreciation. You spend money for your trading business, you're deducting it. No matter what kind of property or equipment it is, you're probably getting first year full write-offs of that equipment and furniture. You're getting amortization of software, whether you self-create internal use software or purchase or license software. Licensing it, you're just deducting it monthly. If you buy it, you're amortizing it. Subscriptions, those are growing in stature for traders. There's a lot of tools out there. I know Benzinga is one of the sponsors. I have a lot of clients using Benzinga Pro. A lot of subscriptions out there, scanners, self-created ATS, mentors, seminars, market data, charting services, stock borrow fees for short sellers, and more. Sky's the limit. There's a lot of deductions. That being said, most traders are under 20,000 of expenses. You're not going out to purchase a luxury SUV. You don't use an SUV for trading. You're not going overboard with travel and meals. You're being responsible. A lot of traders don't have an outside office. Some do. A lot don't have staff. Some do. A lot don't have a Bloomberg terminal. Some do, and that's a bigger expense. Now, remember, without TTS, the Tax Cuts and Jobs Act suspended investment fees and expenses, tax compliance fees, unreimbursed business expenses for job expenses. All those deductions went out the window in exchange for roughly doubling the standard deduction. So Section 475, that's the mark-to-market accounting. There's a lot of tax benefits with 475. It's grad school. You can only go if you graduate undergraduate school with TTS. Otherwise, you can't use this powerful election. Traders are entitled to make the 475 election, TTS traders, but not investors. The election exempts securities trades. You don't want to elect it on commodities futures. You want to retain those lower 60-40 rates. You want to elect it on securities trades. It exempts you from the wash sale loss adjustments. Take a loss, get back in 31 days before or after. You have to defer the wash sale loss as a cost basis adjustment to the replacement position. Do it between a taxable and an IRA account. It's a permanent wash sale. It's a biggest pitfall for traders. You want your ticket out, qualify for TTS, and elect 475 mark-to-market accounting. The other beauty of it is ordinary loss treatment, no capital loss limitation. If you lost a fortune today in the massive sell-off in the NASDAQ and Dow, and we've been waiting for that to happen because it's been great news for a year now. And if there is a sell-off and you get on the wrong side of the trade, and I'm not saying that that's going to continue. Have nothing to say about investments. I'm a tax guy. But if and when you ever get a massive loss, you don't want a capital loss limitation 3,000 against other income. You lose 200,000. You want to write it off against your 200,000 wages and get a full refund of the wage withholding. You don't want a 3,000 a year, and then you may lose a lot of capital, and it's hard to make back those capital losses. Now, the capital losses are unlimited against capital gains, but they're limited to 3,000 against other income. And you want to avoid the permanent wash sales with the IRA. So the ordinary loss treatment is far better. The refunds come much faster. And there's income benefits as well. It used to be just the tax loss insurance, but now there's a benefit on the plus side as well. If you don't make too much money and you have 475 income net of your expenses, you may be eligible for a 20% QBI, qualified business income deduction. So you make 100 trading, 50 in wages. Your taxable income is under 165 after your expenses and standard deduction. On that 100 trading, you get a $20,000 deduction, even though you didn't spend a penny of cash. You get the $20,000 deduction. So 475 helps you on the downside, helps you on the upside. So the deadline to elect 475 for 2021 is April 15, 2021 for individual sole proprietors. It's March 15th around the corner for existing partnerships or S-Corps. Now, a partnership or S-Corp formed during the year, so let's say you set one up now, that's considered a new taxpayer, which can elect 475 internally within 75 days of inception. So let's say you skip the 475 election as an individual this April for various reasons. Maybe you have a big capital gain in Q1 this year, but you had a big capital loss carryover from last year. So you want capital gains to soak that up. Now you have a clean slate to set up your LLCS Corp, which you want to do for your health and retirement anyway, because you left your job, and the entity can elect 475 within 75 days of inception. So it's a great do-over mechanism for 475, turning it on or off. So it's too late to elect 475 for 2020. It's not too late to assess and claim TTS business expenses, but it's too late to elect 475. That deadline normally is April 15th, but last year was postponed to July 15th with the COVID postponement. Now, this year in Texas, because of the recent disaster with the loss of power and the ice conditions, the IRS extended the 415 deadline for all Texas counties to June 15th. We think that should apply to the 475 election too. So Texas, which is our second biggest market for traders after California, we go right along the top states. We're in every state, virtually cloud-based. Texas has that 2 months of additional hindsight to make the 475 election. Last year, that election was in play for 3 more months. It was really helpful to a lot of people. So on the qualified business income deduction, it's trading is a pass-through business, your partnership, your S Corp, your Schedule C. So that includes TTS traders, that's a specified service activity, SSTB, and QBI includes 475, but excludes capital gains, interest, dividends, and Forex and swaps. Only the 475 is QBI. We fought to get that included when they came out with the proposed law. So if you make too much money, if you're a specified service trader business, that's not good. It's better to be a manufacturer or a real estate business. If you make too much money and you're over the cap, you get no deduction. So think of it this way. If you have a small cake, you get the QBI deduction as icing on the cake. If you got a big cake, you don't get the icing on the cake. So if you're a Schedule C trader and your married taxable income is under $330,000, you get the 475 QBI deduction, single 165. If you're an S Corp trader with salary for the health and retirement plan, then you could take advantage of the phase out range for 50 more single, 100 married. So the phase out range going up to the cap of 429 married, 215 single is the phase out range is for the S Corp with wages. The income threshold below the phase out range, the 330 and the 165 married, other taxpayers, is strictly for Schedule C and 475. So you want to make the 475 election. Now, there may be nuances where you don't want to elect it, and we're going to discuss that coming up in a few slides from here. So you're good to go. You're a sole proprietor for 2020. You claim that. You elect 475 year to date, so that got rid of your wash sales with the IRA, which you were trading side by side with your trading account year to date. But now you're interested in an entity for the rest of this year because the entity can't pick up the activity from prior in the individual account. It can only do it from the entity trading account that you're going to open. Why would you want a partnership as opposed to an S Corp? Well, a TTS trader can organize a spousal member LLC and file as a partnership. The LLC partnership files a 1065, issues a Schedule K1 to the owners. The LLC partnerships must qualify for TTS, otherwise they are investment companies. So you still have to qualify for TTS. The misnomer out there is, oh, if I set up an LLC, I get business deductions. You absolutely don't. Most hedge funds don't have TTS. Only a very certain type of hedge fund trades enough for TTS because otherwise they're investment companies where everything is suspended and no 475. A single member LLC, that's a disregarded entity. That's a tax nothing in the eyes of the IRS. So a spousal LLC can file the partnership. You don't want to get other family members involved, or you might be a single member LLC S Corp. So the partnership enters 475 income and business expenses on Schedule K1, line 1. That looks much better, and it's not a passive loss activity. So the K1 has 400,000 of 475 income, 100,000 of various expenses, including compensation expenses, retirement, shows a net income of 300, goes right onto your Schedule E, non-passive, looks great. Otherwise, a loss, looks fine. Better than the Schedule C with the trading on the other forms. Now, in a partnership, you can have unreimbursed partnership expenses, including home office that you deduct below that number on Schedule E. Now, one of the main benefits of the TTS partnership is ring fencing trading from investments. Now, pay attention now. This may apply to you. If you trade substantially identical positions that you also invest in a taxable account, so you have one or two trading accounts, you're trading options, but you're also holding FANG stocks, Tesla or Apple, the momentum stocks. You're holding them as an investment. You're deferring capital gains at year end. You're hoping for a long-term capital gain, but you're trading options around those positions to manage risk off, risk on. And you haven't, as far as the IRS is concerned, they're two related, even if you have them in separate accounts. And if you elect 475 as an individual, there's a chance the IRS can say, we want to drag the Apple and Tesla investment in FANG stocks into ordinary income, mark to market with 475, and that would kill off your long-term capital gain. So if you have overlap between your taxable investments and your trading, you may want to consider to ring fence your trading into a separate entity, the LLC partnership. Now, if you're doing portfolio margining and you need the stock to trade options around, and you don't want to get hit with naked options trading, that may be difficult to do. So you want to probably consult with us about it. Don't just jump into 475 if you have this situation. You wouldn't want to have collateral issues. Now, it's a nuanced point that few IRS agents would even know to bring up, but it is something that we want to protect against. So also with IRAs, some traders have their taxable trading account, their rollover IRA, their Roth IRA, their SEP IRA, not the 401k, that doesn't count. And they do side-by-side trading. Take a loss in the taxable, buy it back in the Roth. That's a permanent wash sale. But if you elect 475, it fixes that problem. But will that then conflict with your investments? So this is why we flush this issue out in a consultation before we just say definitely elect 475. And we'll have more resources about that on our site. You can read chapter 2 of our guide. The whole chapter is on 475 mark-to-market accounting. Now, the LLC taxed as an S Corp. Organize a single member or spousal member LLC and elect S Corp status with the IRS within 75 days of inception. Just one second. Sorry, I just wanted to take a drink. Excuse me. Sorry about that, folks. Okay. So you organize a single member LLC or the spousal LLC. You elect the S Corp status. Alternatively, if you had the LLC partnership for this year, it could file the S Corp election by next March 15th. Owners must be U.S. residents. You know, non-resident aliens, they're not paying taxes on the U.S. brokerage account capital gains. They have a whole different set of factors. So don't even try to think of including non-resident aliens in your entity. The entity is for you or your spouse. It's a retail trading company. An LLC S Corp can also achieve those ring fencing strategies that we talked about with the partnership, but it can go one better. It can unlock the employee benefits, including health insurance and retirement. The health insurance deduction with the S Corp. The TTS traders with significant health insurance premiums should consider an S Corp to arrange a tax deduction through officer compensation. The trader or spouse might have another source of self-employment income to deduct HI, or a spouse may have the HI coverage for the family and the job. So if you have health insurance that's private, COBRA is not deductible since it's ex-employer provided. So you left your job, you're off COBRA, you're single, you're paying for health insurance. It's a pretty big number. It's $500 or $1,000 a month, or for your family, it's $2,000 a month. You have no other way to deduct it because you don't have any other self-employment income on the side. A sole proprietor trader or partnership trader cannot arrange the deduction. Only the S Corp can. And what the S Corp does is it pays you officer compensation deducting the health insurance without any offsetting payroll tax. It's flat out a deduction right through the S Corp, paying for the S Corp cost and more if that's a reasonably good sized deduction. Now, maybe you don't even have a health insurance deduction because you're covered by your spouse, or you have it, but you deducted in another activity. The other big benefit is the retirement plan contribution. So the officer compensation, so we wait until December. We see that you have TTS for the year in your S Corp. And based on sufficient profits, we do the minimum or the maximum. So the traders need earned income to make and deduct retirement plan contributions and health insurance. However, trading income is unearned. So you need the earned income for the health and retirement. That's why you need the S Corp to financially engineer the wages. The sole proprietor and partnerships cannot do it. Payroll taxes apply on the officer compensation. 12.4% FICA, capped on salaries up to $143,000 for 2021, and 2.9% Medicare taxes unlimited. Don't get too hung up on the Medicare if you're making a lot of money, because upper income traders convert Medicare tax on unearned income. That's the Affordable Care Act net investment tax that you're paying on your unearned income over 250 married, 200 single. So you're basically, the wages are causing you to pay payroll tax. Half of it, the employer portion, which is one of your pockets, is deductible. That payroll tax adds up, is a benefit to you in retirement, but the income tax savings from the retirement plan blows away that cost and puts thousands of dollars in your pocket net. And then you have the benefit of saving for retirement with tax-free compounding until retirement. So we're going to wait until year end to see that you have the TTS and what the gains are. You could lose all those gains January to October. You could lose in November. So we want to wait, and it's a one-time payroll event in December. The payroll processor does those other quarterly returns with all zeros. It's pretty straightforward. So first we focus on the elective deferral of the solo 401k. It's better than the SEP IRA. We start with 100% elective deferral. If you're under age 50, it's $19,500. If you're over age 50, there's a catch-up provision, or 50 or older. It's $6,500. So if you're age 50 or older, it's $26,000. So if your trading company makes $27,000, you pay yourself $26,000, and you can do this entire elective deferral. It's 100% deductible. This is where the most tax juice is. You can forego the income tax deduction for a solo 401k Roth. This elective deferral can be a Roth, which is permanently tax-free for life. No required minimum distributions. You can pass it to your children. They will have RMD. So it's a wonderful benefit. The Roth, no deduction, or you get a deduction and it goes traditional. That's the first piece. The second piece is the profit sharing plan. If you have significant trading gains, you can consider increasing the payroll in December for a performance-based bonus to unlock the 25% deductible solo 401k profit sharing plan contribution that you don't have to pay into until the S Corp return is due 9/15 the next year. So this year end in December, you do the elective deferral, you pay that in January of next year. But the profit sharing plan, you don't have to pay until September of next year. You can pay it earlier if you want to build it up tax-free. Check what kind of trading you can do. You can't do every kind of options trading. You're not using margin interest. So check how you can direct access trading in that retirement account. The maximum 2021 profit sharing plan is $38,500. They raised it $1,000 from 2020. So that divided by 25% comes out to wages of $154,000, just above that payroll limit of $143 for the FICA. So if the Biden tax plan brings back wages of $400 into Social Security, you wouldn't trigger that. You're in the donut hole. So the total deduction for age 50 or older is $64,500. Now, forget about trading in the C Corp, because it's a flat rate of 21%, which could get jacked up with the Biden administration. But there's also a 20% accumulated earnings tax on an investment company. You can't, trading capital is not a war chest plan for retaining earnings and profits. So if you're deemed as an investment company by the IRS and they don't respect TTS and the C Corp, there's no deductions. There's 21% flat rate plus 20% plus double taxation on the state level. Forget the C Corp as a trading company. So let's look at this chart here. So the investor, they get nothing. I think it's a full chart here. The TTS sole proprietor, they get to deduct business expenses. They can elect 475 this April 15th. They can get the QBI deduction on the 475 income less business expenses. TTS partnership can do all those three things plus elect 475 later in the year. So if you miss the boat, you can elect it later in the year with the partnership. But then the costs apply. You got maybe the higher professional data feed fees with your broker. Check on that. Some brokers charge it. Some brokers absorb it. The entity tax return is required. There's no payroll required. And state minimums could apply. It could be $100. Could be $800 in California. And then the S Corp, all the benefits kick in. Everything in the partnership and sole proprietor, plus the enhanced QBI from the wage factor and the phase-out range. You're deducting the officer compensation. You're deducting the health insurance. You're deducting the retirement plan. But you also have a payroll service provider. So your trading expenses are $20,000. Your health insurance is $20,000. And your retirement plan is $64,000. You're over $100,000 in deductions, whereas the investor got nothing. So I think all this adds up to savings for you. So come over to our website and let's talk a little bit more about all this stuff. We're going to do that right now. Sorry, this wasn't open. So you should be seeing my website now. So come over to the tax center, scroll down, go over trader tax status, see how to qualify. There's a good long article with a lot more notes about it. It's not coming up. All right, there it is. So in the tax center, you're going to have more about trader tax status. You're going to have more about the entity solutions, more about the retirement solutions, more about filing tax forms and compliance. You can go back and watch prior recordings. I suggest you get the tax guide for preparing your tax return for 2020 and making these elections and planning for 2021. So that's pretty much it. Let's see if there's any questions on the board. Let's look at some of the questions. How do we segregate stocks without creating a new account, purely trading? Well, you got to segregate in form and substance. So one same account is in substance. It's not segregated. It's not segregated in form. A separate account is a segregation in form, but that's not good enough. You should not have overlap between what you want 475 for versus your investments. How does MTM affect IRA Roth? Well, if you have 475, you're not going to have to worry about wash sales on your trading account that get triggered with the IRA. You do have to still worry about those permanent wash sales between a taxable investment account and the IRA. Eric, what happens if you meet the trades per month but not hours a day? Well, you need all the factors. The hours a day is something we came up with. If you have very few hours, it may be indicative that you're using automated trading or trade copying. There's a little bit of a fudge factor on hours. The screen's jumping on me here, so 1 second. If I qualify for TTS for only 2 months, that's too short. We want to see it for all of Q4, October, November, and December. When would you not want to elect 475? You have a capital loss carryover from 2020 into 2021 of 100,000. By this April 15th, you're up 150,000. You want capital gains to absorb that full 100,000 capital loss carryover. If you elect 475, it's ordinary income, and then you can't absorb the capital loss carryover. So you want to skip MTM as an individual and then think about setting up an entity with 475 going forward. Which tax forms for TTS? That's Schedule C for the expenses, 475 to 4797. you know capital loss carryover, you definitely want to think about the 475, but make sure you don't have overlap with taxable investments so the IRS can't play havoc on you. What is the difference between S Corp, single member LLC? The S Corp is a treatment. The single member LLC elects the S Corp status. You could go the route of a corporation to S Corp election, but I prefer the LLC over the Corp. If you are trading capital of a prop firm? Well, if you're trading prop and you're an independent contractor, you're a consultant, you're not a retail trader. So the firm has TTS and 475. You just have a consulting Schedule C. Some people are having trouble getting our help right now. As a firm, we have surge in demand. We stopped doing new client evaluations a week ago. We're finishing up the ones that were scheduled for March 1st. We're doing extensions only for a lot of clients after March 1st. You need to file your own extension and come in with us after March 1st. We do have opening slots for consultation. So if I cleaned up my calendar a little bit, made some more slots available so you can get on my calendar, but act fast. Don't wait. If you are a returning client, make sure you pay your retainer. We stopped taking new clients to save the spot for the returning clients. Get your seat at our table. There's a tremendous surge in demand this year. We did hire more people. We have more administrators, more CPAs, but we got to put a lid on it for quality control. A couple of long questions here. And let's see, scroll down to the bottom. What would you open tax year 2024 qualify for TTS? I'm sorry, it jumped on me. Trade hundreds of options, underlying stock, chance would be, not sure of the question. Some of the questions are a little hard to read. Is TTS required for an LLC S Corp to unlock health and retirement? Absolutely. That's why we wait to do that in December to make sure that you have the TTS AB. Brian L. trades Forex. Forex is ordinary gain or loss treatment. You can have TTS. A lot of Forex traders don't have a lot of expense. You don't elect 475 on Forex. You might want to do the Section 988 capital gains election to get into the lower 60-40 tax rates of 1256G on the major pairs. If you're trading with an offshore broker and you're a retail American customer, an American retail customer, you probably shouldn't do it because the CFTC wants you to use a limit of 50-to-1 leverage on the majors, and the offshore brokers go higher than that. So that would disqualify you from our tax compliance service. We don't want to give a tacit endorsement to that. Perry been TTS 475 for years. Every year you have to assess your TTS again. If you don't have it, then the 475 is suspended. So you have until April 15th. You want to wait until the last minute. So let's just summarize, all right? You got your Schedule C for 2020 for all or part of the year if you hit the numbers for TTS. That you can do after the fact. Let's assume you missed the 475 and you're thinking about it for this year. See if you have any of the downside issues like a big capital loss carryover, a big overlap with your investments. If those are not on the table, then 475 is probably good for you and you make that election, and that's good for the year-to-date period. And now if you're leaving your job and want to have your own private health insurance and you didn't do that much job 401k year-to-date, or you left your job at the end of last year and you want to get the full year solo 401k, now you're setting up the LLC S Corp. And you want to probably consult me about it to be sure you have the TTS is 475 right, which type of entity, and then you pay for our entity formation service after that. You can elect 475 on your own for April 15th. The exact wording is in our guide on some of our blog posts. You're attaching the election verbiage to your extension, mailing it in, faxing it in, and then you're e-filing TurboTax right after because you can't include the election in an e-file TurboTax. So you want to make sure it goes in by separate letter or fax. The IRS is not going to confirm your 475 election. Your 3115, the second step, That will go next year when you file your 2021 tax return. So it's a two-step process. So get the guide to read about it. And I want to say thank you to TradeLog, to Jason and Tim, and back to you guys.
All right. Thank you, Bob. Excellent information. We so appreciate you coming on today and helping us with that. I know you've got a lot more questions than most people, but taxes are what they are. We want to thank all who had a part in this program. It's our goal to make this an annual event so that we can keep you up to date with the insights and emerging technologies that will help you continually improve your trading performance and save you as much on taxes as we possibly can, like Bob talked about. What a great program he showed us. We also want to thank all our vendors who helped make this showcase a success. tastytrade, Digital Tigers, TradeStations, Benzinga, Trade Ideas, TradingView, Green Trader Tax, and especially all our helpers behind the scene from TradeLog. If you have any questions at all relating to this program today, we'll be sending out an email with all of the presenters' contact information, so you can reach out to them directly. In that email, there will be a link to today's recording or a recording of today's program. And so look for that in your email. I know it was a lot of information and a lot of you couldn't stay all day, but when you were here, we sure do appreciate it. And we hope this has been successful for you. Hopefully it'll send you in a direction to help you become a better trader, and will be our customers, all of our customers, for a long, long time. Happy trading, everyone. Have a good night.